Traders, welcome to the Traders Corner Online Investor Summit. I'm Anthony Chapman, and I'll be your host today as we dive into a powerful lineup of proven strategies, expert insights, and timely market opportunities, all from some of the top names in the industry. Coming out of the Labor Day stretch, we're entering one of the most exciting and opportunity-rich windows of the trading year. Volatility is returning, institutions are repositioning, and the next several weeks could be packed with high probability setups. This is the time to get sharp, get focused, and gear up with strategies that work. And today's event will help you do exactly that. We've gathered seven expert presenters, each bringing a unique angle to help you trade smarter with more clarity and confidence, whether you're an options trader, a technical strategist, or just tired of staring at charts with no plan. Let's get started. Our first speaker is Melissa Armo, founder of the stock Swoosh and creator of the Golden Gap strategy. Melissa is here to show you how to trade on the side of institutional money using just one high-powered strategy, the Golden Gap. Whether you want to trade full-time, part-time, or just an hour a day, the method gives you the structure to capitalize on early market moves without sitting in front of your screen all day. So let's welcome the great Melissa Armo.
Thank you so much. That's such a nice introduction, Anthony. Can everybody hear me?
Thank you, Melissa.
I don't know if I can see questions. Do you have it open for me to see the questions, Anthony, or do I go to the chat, or where do I see the questions?
I don't see any questions yet either.
Okay.
So yeah, maybe we just don't have any questions yet.
Okay, great.
Yeah.
Welcome, everyone. Great to be here. It is September. This coming week is going to be probably a very volatile week for the market. So if you trade, you want to trade this week, because you're going to have an opportunity to make money. Now, whether or not the opportunity is to the downside or to the upside, because there's a Federal Reserve meeting this week, the market's going to have some big moves. And so today I'm going to talk about what I do, which is trading on the side of institutional money and gaps. I'm going to talk about gaps. I'm going to talk about what a gap is. If you have questions, you can plop it in the room. I'll see it as we go along, or you can feel free to email me at melissa@thestockswoosh.com. I appear on TV, I talk about the economy, I talk about the stock market, and it's really fun and interesting right now to trade because, again, we are in also the period of not just the volatility with the Fed, but also don't forget tariffs. There's the tariff deadline with China, which is coming up in about 6 to 7 weeks. So there's just going to be lots of opportunities to trade, not only this coming week, but also this fall. You know, if you want to trade and make money before the holidays, you want to get started now. If you have questions, you can always email me at melissa@thestockswoosh.com. You can call me at 929-3200-GAP, and you can follow me on Twitter, Facebook, YouTube, or Skype. So like I said, fall's coming. It's September, beautiful weather. I live in New York City, beautiful, gorgeous weather here today in New York. And like I said, it's a busy time to trade. Lots of momentum, lots of volume. You can't really make money in the market if you don't have enough volume and if you don't have enough momentum. Again, some people like to scalp. I don't scalp. I'm a momentum trader, okay? And I'll talk about that more a little bit here too. But you've got to be ready to hit the ground running, because once the momentum comes in and the moves happen, you don't want to get in late or you're chasing it. You're chasing it with a bad entry, and then you have to get out early, you know. But lots and lots of people want to trade the stock market, and everybody wants to do it. They say they want to make money. Some people want to do it to supplement their income. Some people want to do it as their job. Some people want to do it, they say they want to get rich. It doesn't really matter why you want to do it, as long as you're focused and committed. But for me personally, in today's day and age, and I found this talking to lots and lots of people, I've had my business now for 15 years, teaching people, it's really peace of mind. When you don't have to worry about money, it's just a different mindset. And again, you know, I live in probably one of the most expensive cities in the world, in New York City. I live in Manhattan. And it's very interesting because the dichotomy of, you know, homeless people in Manhattan and then some of the billionaires, you know, you see it all here, from the richest to the poorest. And again, it takes work. You know, I wish I could say, well, no, you may go a process of taking years to figure out how to trade. You might take 30 classes, spend money on every single one until you find the right system and the right mentor. It's a back and forth, it's a process. For me, I actually took one class, didn't learn how to make money, but I learned a basis for technical analysis, which I in turn took and then created my own system, which took 3 years, which was a long time. And it was an arduous process because it was trading live money, risking my own money, winning, losing, back and forth, and I didn't know when or if I'd ever figure it out. But I did. And then when I transitioned into becoming a full-time trader and got away from my previous career, which was doing mortgages, I was just so happy because, again, I'm in charge of my own life. And knowing that, having that freedom, there's just no replacement for it. There's just no replacement for it. So I put the stats in here for year to date, room results. I have run a live trading room every day, Monday through Friday. Room opens at 9 a.m. We start trading at 9:30, usually done by about, I'd say like, 10 a.m. Eastern time. And again, I call the trades in the room. I call the entry, the stop. I have to update this. This is through the end of August. But my average risk per trade is about $4,000 a trade. It's on margin. These are all margin trades. And again, you would follow me in the room if you wanted to take the trades. So stats year to date for the room, 871,422 through 828. So we're at a 61% win ratio, 2 break evens, 80 losers, 125 winners, and 207 trades. You can risk less, you can risk more, but you must have a margin account to do these trades. I also trade options. I have the stats for the options newsletter here. I risk more for my options. If you want to do options, this is a newsletter service. You do not have to be in the room to get the trades. So I'm risking an average of about $8,000 a trade for my options. And again, this is something where if you want to sign up for the newsletter, you would just get the trades emailed to you in live time. Over $3 million a year for the options, 65% win ratio, 0 break even. We had 223 winners. So you can do one contract. You can risk $200. And if something costs more than $2, then you don't do that trade. So you have to take the size of account you have and risk what you have. So far year to date, again, this isn't through the last 2 weeks. I have to update this for the month of September, but almost at 4 million here and looking forward to a very good fall period. Again, we're starting out this month, September, with a very, what I would say, contentious Fed meeting because Trump fired Lisa Cook. She's not stepping down. That's going to go to court. It's probably going to go to the Supreme Court. Everyone thinks the Fed's going to drop rates a half or more. I think it's probably going to be a quarter. In which case, if that's the case, the market could have a negative reaction this week, despite the fact that it's been rallying so much. So it's definitely going to be an interesting time to trade. And again, I focus on gaps, and we're going to go over what a gap is. But the gist of what I'm trying to say is that you can earn good money if you're in the right stock pick, in the right direction, with size, and then you get a big move. Okay, that's the ticket. That's how you want to do it. It's not about trading. It's not about doing a million different strategies. It's not about being all over the place. You could do 1 trade a day, okay, or 2. You don't have to overdo it. It's not about trading like a crazy person either, okay? It's about honing it down, having a high win ratio, and nailing it. And then some trades are really big winners. So again, how can you make your dream of becoming a successful trader come true? Again, you go into this with an open mind, learn a strategy, get good at it, start with small size, build your account, add large size, and you go from there. It's one of these things where you have to be dedicated, you have to be focused. One of the nicest shorts we had this week, we did a put in this too, was Apple, which fell beautifully. Now I'm going to go over here what a gap is. We're talking about momentum, we were talking about gaps, we're talking about shorting. Apple had a gap on September 10th. So we did a short. We shorted this here. There's a trade on margin. We also did puts. We did the 230 puts. We entered 230.50, exited 228.80. This continued. I'm going to show you over here. Profit was $3,400. If you say, well, this is a margin account, our margin trade, yes, you could have done the 230 puts. That would have been a cheaper way if you didn't have a margin account to do the trade. So again, here's the momentum. This fell all the way down. Boom. So this was a short. Again, a big fat red bar depicts here what? Selling. So you want to short it. So what is a gap? A gap is the difference between the close and the open. So Apple closed up here, snug of the bug at one price, and opened down here at a lower price. Okay, closed at 4, open at 9:30, fell, dropped. okay? So again, a gap is the difference between the close and the open. This is a bearish gap. You also have bullish gaps. I'm gonna go over here. We didn't do this, but you could have gone long Apple. Stock closed here, gap up. Now, again, I didn't do this trade, but it closed down here early in September around 230 and change, gapped up here at 237 and rallied. Didn't rally that much though, actually. We did not do this. This was a nicer trade. We had more momentum here. Now, again, I prefer to short wide. Short moves happen quick and fast and big. Again, here was the Apple. We could have got in this earlier, actually. Stock closed here, gap down, open, dropped, boom. Rallied, boom. Again, I got out of this around 228 and change, but I want to show you where it came all the way down here, basically almost to 226. You could have held it even longer. So this is a 1 minute chart. This is a daily, okay? So I analyze my pick on the daily, okay? And I take the trade on the 1 minute. I determine the directional bias though on the daily based on a checklist. So this is what I teach in my Golden Gap class. So I teach a class once a month, but the class for September is next weekend. And that's where I teach my entries, my exits. How do I make the pick? How do I know the directional bias for Apple? How do I know Apple will fall? I go through a rating system. So I'm only ever trading gaps, number one. And number two, I'm only ever taking the gap in the direction of the gap. So if I would have rated Apple and said, oh, this doesn't rate good as a short, I wouldn't have flipped it. I wouldn't have gone long it, for example, okay? But one of the biggest trades we had in the last month, seems like a while ago now here, but actually one of the biggest ones we had was PLTR. It's another big favorite for a lot of people. And again, how did I know to do it? Because of the rating system. And I'm seeing all of this ahead of time in the pre-market. So we did the 180 puts in PLTR 814. I'm gonna go up here, show you go back, basically a month ago now. Here's the stock, closed here, gapped down. So this closed up here, snug as a bug, right at 183 and change, wherever it closed, and open here, and then I bought the 180 puts. So I'm buying to enter, selling to exit. So then it fell, boom, dropped, look where it went. This was a huge trade. So again, this was the biggest trade we had in the last month. We did the 180s, and I called it here. You would have gotten in at 1138. Cost was pretty reasonable actually for this stock, 325, sold at 35, and it was $95,250 profit with a 97.50 risk. Return investment 977%. These types of trades will make your money. If you did 4, you could have made over $12,000. What if you did 1? You could have risked 325 bucks. Again, it's not about necessarily taking size if you can't afford it to make money. One contract, and I'm going to go back to the chart here. One contract makes you money. And that's how you build your account, okay? Because again, if you want to get your account built up, you have to go step by step by step by step. You know, you can't risk your whole account in 1 week or 1 trade or even half your account, okay? But that was a beautiful what? Short, okay? It was a short. We did a put. A put is a short. Any questions here so far? Now, again, what I was saying was I decided to do this as a career. Now, if you're somebody that doesn't want to trade as a career, you want to do it on the side, that's fine too. That's fine too. If you want to do options, you put the trade on in the morning, you can put a sell order, a limit order if you can't watch it, or you check it in the afternoon, you check it at lunch. If you want to day trade, you got to be present, you got to be in the room, but we're still only trading in the morning for half an hour a day. We're not trading for 6.5 hours a day, okay? You need the right tools though to be successful, and you need the right tools to get good results. And for me, it comes down to the rating system, which is the work that I do in the morning. Then I'm not all over the place, and I'm not necessarily watching the news or what's happening, you know, with the economic data, because I'll see it all early in the morning when I get up. I use this. It's a very useful tool that I don't have to guess and think what's going to happen next. You are looking at the price action. You're looking at the chart. You're looking at the data. in the analysis of the chart. What is technical analysis? Technical analysis is looking at past price data to predict future price data. And that's what it is. So you're predicting when you see the stock here, again, this was over 180 when we did it. I'm predicting it's going to fall. Now, did I know it would fall all the way down to almost 140? No, but once it started going, obviously the trade was up a lot. You can write it out, but we did the 160s too on 819. It had another gap. Stock closed here, gap down. This is 819. Then we did a 160 put, which was crazy, even from where this was. But again, momentum is key to making money trading. This stock can go 10 bucks in a day, can go more. And it fell, boom. So we did a second one in this. Again, a couple of days later, we did the 160s out a farther date. I'm usually doing the weeklies. So I call this on the 19th. Got out the 20th. This was a 279% return investment trade. Did 20 contracts, sold it at 18, made $26,500. If you did 3, again, with an average risk of about $1,000 a trade, you could have made $39.75. Beautiful trade. Beautiful, beautiful, beautiful trade. Again, when you're trading, you have to be focused. You only really need, like I said, one good one. 2, that's it. This idea of trading all day is just going to bring you losses. Like, imagine if you're staring and you're trying to hit a dartboard and you want to hit a bullseye, and you're trying to hit the bullseye 20 times in a row. You're probably not going to. I don't care how good you are. So again, it's possible you could hit that bullseye once. That's possible. And that's what you have to try to do. So the checklist helps me try to hit the bullseye. You know what I mean? Doing the work, analyzing the data, going back to the daily chart, using the 26-point checklist. And again, this is the meat and potatoes of what I do in the class. Now, why do I prefer to short? And they said, wait a minute, the market's bullish. We're making new highs. Why are you shorting? Most of the ticker symbols and the trades that I just showed you in the stats were shorts. So again, crazy as it may sound, I've been making a lot of money shorting in a very bullish market. So it's like, how? Because I know what to look for to see what's going to sell off. And one of the reasons that I prefer to short is because panic selling comes in big, fast, swift, okay? So stocks just move and fall faster than they rally. I'm not saying the panic buying is not real, but I'm saying panic buying is something that's very, 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 very rare, okay? So again, it's not something that you do all the time, that you have all the time with panic buying, but it can happen. But panic selling is something that happens a lot. So again, how do I determine where the smart money is going? Again, in the PLTR, smart money was selling it. They were dumping it. They were dumping the stock. So I use the rating system, and again, it's based on technical analysis, and I do the work. I do the work by doing the prep work. Some people wait until after 10 a.m. to trade, retail traders. I don't do that. I'm done by 10 a.m., okay? You know, or from an option, I could be even holding it overnight. So here was Walmart. We did this. Again, what is a gap? A gap is the difference between the close and the open. Stock closed up here, gap down. Open, dropped, fell. Again, from the first day here, we're over 99, drops down, boom. It's at 95 something. Again, what is happening here? Selling. Selling pressure, okay? So you gotta short it if you wanna make money. We did day trade here in this in 822. We entered this in 98.45, boom. I'm usually looking for $1 or more, 97.38, got out, make 32.10. It's a nice trade. We did this here on the 22nd, right there. Again, we also did a put in that too. So again, what do? I find gaps every morning. I rate them using a checklist, which again is what I teach in my class once a month. Gaps have to be qualified. You can't short every down gap. You can't short every up gap. The checklist tells you what to look for in the price of the stock to determine if it's the right pick, if it's going to have a big move, what direction to do it. Okay, and again, I prefer to short, but that's my preference. I'm trading on the side of institutional money for momentum. Big momentum equals big money. Again, 10 cents, 15 cents, 20 cents, that's not a big enough move. it's not going to cover the trades that you take that lose. You got to have some big winners. Okay. Now we also did the PLTR day trade here, shorted at 154.90, boom, got out 153.50. We did this here, 825, stock close here, gap down, open, dropped, 825. So again, this was a short. It may not look like it, but it actually was. This actually was a short. So we did day trades in PLTR. We did puts in PLTR. Again, you can do both. I like to do both. You want to do one, that's fine. You can open up a cash account with as little as $2,000 as an options account and trade. You don't need a margin account to do options. I like doing both though. But again, if you're somebody that's been trying to trade the news or fundamentals, don't, because you're going to get tripped up. You're not going to have consistent results. The results don't always match. You could have a bad economic report, a bad earnings report, and the stock could rally. You know, you could have something that happens, you're like, wait a minute, this doesn't seem to make sense. Because sometimes things happen that don't make sense when you look at analyzing the reasons. But the price may tell you something. And that's very, very important. Okay. Any questions here so far? How are we doing? So the Golden Gap rating system is a useful tool. I use this tool each morning to determine what stock to trade and when. It is a very useful tool in any market, but particularly in this type of market. It also can help you decide if you should exit a long. Say you're in a long and you have a gap down. If rate's good, you want to exit it, sell the position because the stock could fall. So it's a very useful tool. It takes the guesswork out of your trading. So many people are trying to guess. They're 50-50 crapshoots in every trade they take. I don't trade like that. I'm either 100% conviction or I don't do it. Like that's literally how I trade and think. But in order to become successful in the market, you have to become an expert, a specialist in one specific strategy. I choose a strategy that reads institutional money, or what I call power money in the market. This brings momentum and opportunity. Reading this is a skill. The skill can be acquired with education. Okay. So again, when I started out, I took one class. I did not learn how to make money. I didn't learn a system that worked. There's virtually nobody that just takes one class and learns how to trade and is successful and goes from there. It's just not realistic. This is a process, you know, and so everybody goes through that process. I say if you've taken classes before, if you spent lots of money in classes and not getting anything out of them, maybe you've gotten something out of it. Maybe you didn't learn a system that worked, but you had one takeaway, you know, and you got to keep moving forward. Because if you want to make it, you can't give up. Can't give up. Can't say, well, I'm never going to take another class again. You can't. You've got to have a system that works, or you're not going to get the consistency. Yes, you'll win in some trades, but you'll lose in a lot more. And you can't do that. You have to win more than you lose, and you have to have some big winners. You know, my win ratio over any given year is between 60–70%. And look at the money I'm up, because some of the trades end up being big winners, but I'm still winning more than I'm losing. And anyone who tells you that you have something that's like 90% win ratio or something, that's not realistic. I'm here to tell you, again, I've been trading for 17 years. You know, you're going to take some losses, and that's why everybody has to size themselves. That's why I use stops. So once you get grounded in what it really takes to make it, that's when you're going to be ready to go. That's when you know you're ready to actually get real about it. I think a lot of people are unrealistic about trading. They go into it with unrealistic expectations about the money that they need in order to trade and how much they want to risk and how fast they're going to do it and how they don't really need to understand, but that's not true either. You have to understand what to do. People are curious. We're human beings. We are curious. We want to know. Just following trades is not the answer. You've got to actually understand what to do. So trading education is just, it's important. You know, far too often traders don't understand exactly how important it is. It's okay to ask for help and admit you don't know. It's okay to admit you're losing. You could say, well, I'm losing all year. I don't know what the hell I'm doing. That's okay. It doesn't mean you're dumb. It doesn't mean you're stupid. It doesn't mean there's anything wrong with you. You just don't have a good system. But there are good systems out there. My system is one of those. And you need a mentor too, someone you can email and ask questions to. it's okay to admit that what you're doing isn't working. The sooner you come to terms with reality, if you're losing money, that you don't know what you're doing and that you need help, the faster you can turn it around. When you live in a fantasy world, that's when it's problematic. As soon as you get grounded about it, that's when you're closer than ever before to actually becoming successful and making it real for you, even if you don't know what to do yet. Because again, a lot of people are living in a fantasy la-la world, and a lot of people live in that world forever. I hate to say it. And the fact is, you can turn it around very quickly if you learn what to do. That's just the reality too, okay? Excellent presentation, formally set up strategy with intelligence. Yes, yes, thank you. I don't want to get too off on a side thing here, but like there's all kinds of things out there right now where people are offering these prop accounts where you pay money, you pay a fee. And it says if you meet this thing, we're going to fund you or whatever. I'm not saying it's impossible, but I'm saying 100% of every one of those types of accounts make the criteria so difficult for people to achieve that hardly anybody achieves them, or maybe nobody. And if they do, they aren't on it for long and drop that. Again, it's another thing that's unrealistic. You're going to need your own money to trade. You got to have $2,000 for an options account. You got to come up with $2,000. You can trade other places with less. You're not going to have margin. You're not going to have 4-to-1 margin, but you're going to need your own money to trade. You got to have your own skin in the game, so to say, okay? You're going to need to pay for a class if you want to learn a good class and good information. You're not going to be able to go to a million free webinars and learn how to trade either, okay? So again, as soon as you get realistic with it, you're on the right path. It's like if you said, okay, I want to be a doctor. I want to be a doctor in a year. That's not possible. You have to go to years and years and years of school, medical training, internship. It's lots of money. You need lots of time, experience, all things like that. If anything, trading is a career that has a faster track than any other career that I could think of for the amount of money income potential, actually. It's just that many people can't even be patient with themselves for 6 months. They can't even be patient with themselves for 12 months. Like if I said in 2 years from now, you know, you could have an account that you could risk money to be able to make $4 million a year, would you do everything you needed to do to get to that point? Or would you be a pig, risk your whole account, blow it up, lose money, not, you know, take a class, go crazy, risk the farm? Like 2 years is nothing, really. And I'm not saying it has to take 2 years, but I'm just giving an example how everybody wants everything now, today, yesterday. You know what I'm saying? That's unfortunately the world that we live in, which has become just crazy fast, you know, but you've got to take it slow and you've got to get grounded and you've got to think, okay? You got to be normal. I hate to say it, but you got to be normal. How can you become successful trading? It's not by risking a lot. It's by being consistent. It's by being focused. It's by being practical. It's by being professional. Think of yourself as a business person. I'm a business person. I didn't know I was going to start my own business when I started trading, but I guess some part of me always thought I'd end up starting my own business doing something, you know, even like 20, 25 years ago. Always had that kind of, you know, mentality. But you have to think of your own trading as a business, okay? So you need a winning strategy, and mine is golden gaps. What is the gap? The stock gaps in the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. So we talked about this. We also did Dell. Stock closed here, gap down. This was snug as a bug down in here. This was back on the 29th. Stock closed up here at 133, gap down here to 124, open, dropped, fell. You actually could have done it over here. Could have done it this week. Stock closed here, gap down, fell. Even though this has a tail, you could have shorted it, could have made $2 here on the 9th. So again, I like day trades for the quickness and the speed of the execution. I like options because you can hold them overnight, but some people like options because you don't need a margin account. Because to have a margin account with 4-to-1 in a regular retail broker, you need 25,000, which will give you 100,000 in buying power. You can open up an options account though, like I said, with $2 grand, and open up a cash account and you can trade. Now, again, your risk is going to depend on the size of your cash. So again, to determine who's in control, the bulls or the bears, we're really going to find out this week. This is a very important week for the market. You could just sit and watch all week and say, I'm going to figure out what I'm doing this week. If you're in long-term trades, swing trades, long-term options, leaps, we're going to really find out here who's in control. Because if the bulls are in control, this market is going to fly like the dickens. And if the Fed's going to drop rates, and it's going to, if Jerome Powell is going to change his tune, it's going to fly. But if Jerome Powell will not change his tune, the market could absolutely tank. And then the bulls that have been in control are going to lose it. And the control is going to flip to the bears. And then if you're long, you're going to lose. Okay? So again, you can't make money if you're in the wrong direction against the side of the power. You have to get the direction right to win. It sounds so easy, but it's true. It's true. This is just like so simple, but actually it's true. If you get the direction wrong, you're going to lose. That's bottom line. Again, if you were going long Walmart into the support here, you lost. It fell for a week. Again, this is a big move in that stock. So again, I developed a system and I called it the golden gap. So what's the difference between a gap and a golden gap? A golden gap is a gap that reads 20 points or more per the golden gap 26-point rating system. You take the trade in the direction of the gap. You can do the trade as a day trade or an option. So how do I know ahead of time where stock will go? I rate the gap. I use a 26-point checklist. This checklist tells you what to trade and what to look for each day. So I did also, kind of funny now looking back that we did put in this just a few weeks ago. And it worked. We on 8/18 we did the 570Q puts. It was a good trade. We did a put here. Market sold off. I don't even remember the reason we sold off here. It doesn't matter. Shorted it. Got the drop. It was a nice big trade in here. Again, 518% return on investment in a market put that we did back on 8/18, which seems unfathomable now when you look at what the market did this past couple of days. But again, I'm shorting stocks and market and uptrends. I don't care. I'm not trend trading. That's not what I'm doing. I'm momentum trading. These were so cheap too. $1.70. Sold at $10.50. Profit was $44,000, risking $8,500. What if you did 6? What if you risked $1,020? You could have made $52.80. Beautiful trade. Again, we actually shorted this market. As crazy as it sounds, and it was a huge trade. Why? Because it fell off a planet. And it fell very quickly. And that's how selling happens. And that's how sometimes people love to buy dips and they love to buy support and they love to trend trade. And the market's bullish, I get it. But you could be up money for 6 months going long, and you could lose it all in a week and be down for the year in 1 week of selling. That's literally what happens to people. They get crushed. They get crushed because they don't know how to short. And they don't know how to determine that something's changed direction. And they only want to go long. And I don't know why. It's not me. I've never been like this, but most day traders prefer to go long. And that's in any market, really. But again, if you learn how to read the footprints of big position players before the momentum occurs, you can take a position in the right direction and get out after the move happens for profit. But you have to understand how to trade with the side of power, and you need to know how to find it. Knowing how to read what institutional money looks like is essential to becoming a successful trader. The benefit is that you can win big trading on the side of power. So many people are just all over the place. Like I said, they don't have a focus, and then they don't know what to do. I'm focusing on gaps. I'm looking for big moves. I prefer to focus on shorts first. I want momentum. I want to get it early in the morning. And then whether you have a small size or big size, you can get a good risk reward if you're getting the momentum right. You know what I mean? But how do I do it? I rate the gap using the 26 points, using the checklist. I do it all before the market opens. This helps me determine the side of the control. Because if I see the institutional money is on the side of the control of the bulls, then I want to go long. If it's on the side of the bears, then I want to short or do a put, okay? So it's all about control. You can't have it both ways. Is it in the bulls or the bears? And it can flip like that. And what my point is that the flip to the downside will happen much, much faster and more aggressively, just like if a bear was coming at you if you were walking in the woods, than any move to the upside. It's just the way that it is, okay? A big flow of money going a certain direction is what moves the market. Stocks, creates momentum, and sets the trend in charts. When you're looking for institutional money, you're really reading the side of power in a stock. You want to be on this side of the power. That's the only way you're going to make real money. It's the only way you're going to be consistent. I'm not saying you can't get lucky sometimes being against it, but it would be dumb luck if you did make it. It's not going to be consistently that you're going to win. The consistency has to be on the right side of the power. Big money, volume, momentum. We were talking about momentum, fall trading this week with the Fed. Actually, this past week was really, even though we rallied, if you look at the volume, I don't have my current charts up, but you can go look at your charts. Volume this week was really light in the market. I know we rallied, but it was very light volume. Institutional money is in charge of the market and stocks at all times, okay? So what do? I get up and I'm looking for quality. I only trade when it's a good gap, and I'm chunking it out. I call it chunk it, chunk it, chunk it, chunk it. Take a trade, get the move, get out. Take a trade, get the move, get out. Get the move on the put. If I'm in an option, get the move, get out. The big fat red bar, out. If I'm in a short in the morning on the 1 minute, get a drop, out. If we wait for drop 2, out. I'm not holding all day. Again, chunk it, chunk it, chunk it out. Again, how do you put together a whole week? Making $5 grand. It's, Monday you make $750, Tuesday you make $1,200, Wednesday you make $1,000. You chunk it, chunk it, chunk it. You don't trade all day. When I take a trade and I make money and I'm up, that's it, I'm done. Whatever it is. I'm trying to get $1 or more, but I don't keep going after it. Again, think of the concept of the bullseye. You're not going to hit that bullseye all day long. It's about working smarter, not harder. You have a better quality of life when you're also just focused on a very short period of time. It won't stress you out. Your eyes get tired. Your brain gets tired as the day goes on. The morning is the time to trade. Gaps happen in the market on a regular basis. However, some gaps are better than others. Some gaps are nothing gaps. And some gaps are very powerful displays of institutional money. The most important gaps of the market, though, are gaps that signify a change in direction or a bigger move in the same direction. Understanding which gaps are meaningful and which gaps are not meaningful in the market, though, will help you to know what to do and when a change is occurring. And that's how you know when the power money will flow to pay you. And that's what you want. So like I said, shorting is the way to go because I'm looking for big moves. I want to see the panic. Like, think about it. You have to be consistent. You have to risk almost the same amount of money in every trade. You have to get good at one strategy. You have to look for the power. You have to get the direction right. Just think about it. Like, everything I'm saying, it makes sense. You're never going to get good at every single million strategies. Just try to get good at one, okay? So my system tells you how, when, and when. How to make money in the market. Trade a strategy and system that is profitable. Golden gaps are a highly profitable strategy because they focus on large momentum to trade. What stocks should you trade? Stocks that gap and rate 20 points or more per the Golden Gap 26-point rating system. Trade the gap in the direction of the gap. When you trade them early in the morning in the open when they set up and trigger, you must have the structure in place in order to make any money at all consistently. It is about the consistency that many traders lack in their system. So the rating system that I do will measure gaps for rating them in the daily chart to find stocks to trade that have, number one, a high probability of directional bias for the entire day. Big move in the day, because that's how you're going to make money when you have a small size or big size. And again, if you grow your account, you can take big size. Early confirmation of the bias between 9:30 and 10 and precise entries with follow through and a good risk to reward target potential. So again, think of it like a business. You put a plan in place, you get organized. I like writing stuff down. I have notebooks and pads and stickies. I like to make a plan. I'm going to make this much money between now and the end of the year. I'm going to risk this much money Monday. I'm very like that with the writing. That helps you get organized, make a plan. Again, 1 to 3 R's. How much you can risk per trade? Are you going to do day trades? Are you going to do options? Are you going to do both? You know, again, what are you doing in the morning? You're going to focus on shorting. That'll help you. So the system I use to find the rat gap each day is the Golden Gap 26-point checklist. Like I said earlier, having conviction helps you make money. You get this from understanding why. Sometimes if you could trade the trades down. That PLTR actually was down before it was up. Took the trade went into the close on 4 o'clock that day, was down. So if I would have killed it, if I would have killed it, I wouldn't have made that money. But I didn't kill it because I like the gap. So understanding why helps you hold a trade longer, helps you hold a trade that's down till it goes, helps you take the trade, helps you take the risk, it helps you with everything. And it also helps you be less stressed because you're not totally worried and questioning yourself. Any questions here so far? A few minutes. But again, your dreams are possible. Be realistic and grounded so you can attain them. It is extremely important to be realistic and grounded because a lot of people are not grounded with this idea of making money trading. They think of it like gambling, and that isn't going to get you where you need to be. Some of the most successful traders in the world, some of the most successful hedge funds in the world, some of the most successful people that are out there, again, some of them I've appeared with on television, they are very serious about what they do. I mean, I'm very serious about what I do. And, you know, you have to get serious about it. It's learning, it's taking your time, it's understanding, and it's being realistic with your goals. And then you're gonna achieve the goals you want. The big goals you have are achievable in time. Once you learn a system that works and you give yourself the chance and opportunity to take your time to learn it to get there next without going crazy and getting into that gambling mindset, okay? So empower yourself today. The Golden Gap course is a complete system to use to trade. You're gonna learn all the nuts and bolts, the entries, the exits, the stops. You're gonna learn the 26 points, okay? So I teach it in class once a month. It's called the Golden Gap course, a full course in how to strategically find, pick, and play stocks that are professional bearish gaps. The dates of the class are next weekend, September 20th and 21st, 9 to 5. Class is online. You can be anywhere in the world and take it. Cost of the class is $69.99. Class is online. Some people have already signed up, already started to trade. They got the trades this week. The combo includes the trends course, which is the 23rd. That is $79.99. It's $1,000 more. You get another class. And I'm doing a birthday special. This past week was my birthday, which is going on through Sunday, which is tomorrow. If you want to sign up for the happy birthday special, it ends tomorrow. You do the class next weekend. You get that options newsletter free to the end of 2026, the trading room free to the end of 2026, and the market report subscription free to the end of 2026. Again, if you sign up for the combo, which is $79.99, you would get 2 classes, the Golden Gap course, which is Saturday and Sunday, and then the trends, which is Tuesday. So you basically be able to trade with me for the rest of 2025 and all of 2026. You get the options and the room. So whether you want to do day trades or options, if you don't know what you want to do, you'll have time to figure out, you know, what you want to do or just follow. Any other questions? Was you're awesome, but the different system, your current thinking? Yeah. Well, again, you know, what I do is very unique and very different. And I've been doing it since I started trading, 2008. If you're interested, email me at melissa@thestockswoosh.com. Any other questions here? My email in here. Wonderful. Have a great day, everyone. Enjoy your weekend. And if you're interested, you can feel free to email me or call me. Thank you.
Thank you, Melissa. What a strong way to start the day. She has put her email and phone number in there. She is always on Fox News. She really knows her stuff. So take advantage and contact her. Thank you so much, Melissa. Next up is a very popular guest and lead consultant at Big Trends, Chris Sayre. He's here to show you a laser-focused approach to trading QQQ options using just 2 powerful indicators, %R and ATR. Chris will walk you through how this setup helps identify high probability trades with short-term holds. using daily options and simple patterns that deliver clear entries. Please welcome Chris Sayre.
Anthony, good morning.
Good morning. Thanks
How
for
are
being
you?
here.
Hey,
I'm
thanks
good.
for having us again. Appreciate it. How are you?
I'm good, thank you.
Good, good. So we ready to roll? About a minute early, I guess.
Oh yeah, sorry. I apologize. Yeah, I
No,
guess we're a
that's
little early.
hey, I'm ready. I got a lot to share, and you know me.
I know.
I get cranked up for these things. Really enjoy them, and appreciate the opportunity once again for you to have us.
Thank you.
All right. Hey, folks, good morning. This is Chris Sayre coming to you live from the Big Trends World headquarters in Lexington, Kentucky. As Anthony was telling you, we're going to be talking about how to trade the Qs, right? Whether you've been trading a little while or for multiple decades like myself, QQQ is one of the most popular securities out there, one of the most heavily traded, one of the most liquid securities day in and day out. Now, before I get myself into any trouble, got to read the disclaimer to you. The information provided in this presentation is based on our proprietary research and is intended for illustrative purposes only and are not to be construed as specific advisory recommendations. Stocks and options trading have large potential rewards, but also large potential risks. The past performance of any trading system or methodology is not necessarily indicative of future results. See our terms of use on the bigtrends.com homepage for more information. So just a little quick information about me and Big Trends. So if you've never heard of Big Trends was founded by Price Headley in November of 1999. So that means we're quickly approaching our 26th anniversary. Fun little fact for you, I was actually one of Price's earliest clients back when he launched Big Trends. You can see that I have a background in the financial services industry, but if you look there at the last bullet point, I'll be with Price and his team 14 years on the 26th of this month. On the front lines, every trading day, interacting with traders just like yourself. If you're looking for some help with your trading, maybe our QQQ options playbook strategy can help you. So what are you going to learn today? As I just said, QQQ options playbook is the name of the trading system. Here at Big Trends, we call them alert services. You can call it a subscription. You can call it a newsletter. We're going to talk about how we boosted results with less work, tactics from our many decades of experience. Again, being on the front lines here at Big Trends for almost 14 years, interacting with traders just like yourself. Most folks do not want to screen watch all day long. If you do, that's fine, that's great. But just based on my experience, most folks don't want to do that. One of the things that I also have learned over my several years of experience is most people are visual learners. So we'll have a lot of case studies for you today, chart examples, so you can see what these trades look like. And then I'm going to let you inside of the QQ options playbook strategy. And of course, have a special offer for you at the end of my presentation. So let's talk about the strategy guidelines of QQQ options playbook. Average holding period, 2 days or less, but no day trades. All right. So if you're worried about being labeled a pattern day trader, no worries when you subscribe to our QQQ options playbook. We're in and out of these trades in very short order. So what type of strategy? So we're technicians here at Big Trends. You may have noticed on my bio, background in finance, Price Headley, our founder and CEO, economics degree. He's a CMT, CFA. So we understand financials and all that stuff. But we have found over our years of experience using technical analysis is the best way to go for short-term trading. So our team, Price and his analysts, are using 3 different %R, that stands for percent range, okay, signals analyzed on a daily chart. So what options do we trade? Straight calls and puts, so no spreads of any kind. And as you can see down there at the bottom, using 3 DTE expiration. Well, what does that mean? That just means 3 days until expiration. So when I first started trading and investing back when I was 18 years old, all we had were monthly options. If you're newer to options, monthly options expire the 3rd Friday of every month. And now securities like the Qs have options that expire every day. So when we send out a signal to our QQQ options playbook clients, we are using 3-day until expiration options. So as I said earlier, we're using a daily chart. So listen to this. Remember I was talking about screen watching? You don't have to do that with a subscription to our QQQ options playbook because new trades can only trigger once per day. Now they can come out Monday through Friday if the market's open, but they're going to be sent 3:40 p.m. Eastern time. So in that last little bit of the trading day. Now you may say, well, Chris, The market closes at 4. That's accurate. Your trading platform bell will go off at 4 o'clock Eastern time. However, these queues trade until 4:15. The options on the queues trade until 4:15 Eastern time. So this defined scanning session eliminates noise and allows us to use the power of those 3-day until expiration options. Now you see eliminates noise there. I put it in red with our team, okay? Why? There's so many sources of information out there. Again, I told you, I've been doing this since I was 18 years old, 56 years old now. It's amazing to me how much information flies around out there, okay? And to me, a lot of it is noise and chatter. That's why we're technicians. We follow the patterns. And scanning for these signals every day has resulted in high trade frequency, something I've heard over the years here at Big Trends, that traders, they want action, and they also want large profit potential. Now let's talk about that, right? So how to get the most bang for your buck while managing your risk. Now these 3-day until expiration options allows us to get a ton of leverage for a small investment. Check this out. The average contract price has been $4.13 per contract over the last 12 months. So you can do this strategy for as little as $500 a trade based on the average over the past year. Now trades are exited after 2 days at 3:40 p.m. Eastern time if they have not been closed before then. This avoids being affected by the final day of volatility. So remember, we're trading 3-day until expirations where we're getting out of the trade before that last day of expiration to avoid volatility. Now you see this line here, if they've not been closed before then. Well, we target 100%, okay? And we're using a 50% stop. So please hear me when I say this. It's not an absolute. Not all trades are going to be 50% losses. Not all trades are going to be 100% wins. As it says there, we will exit a trade if neither of those parameters are reached. So step 2, let's look for a specific setup. Now, each trading day is going to fall into one of 8 categories. 3 of those categories are tradable patterns. So 37.5% to fall back on some of my old brokerage days when stocks traded in 8ths. We look for the percent R. Again, percent R stands for percent range, or your trading platform may have it as Williams percent R. We give all credit to Larry Williams, but he used a negative scale. A lot of trading platforms now use a positive scale and have named the indicator percent R, 0 to 100. We like that. We like that positive scale. And we're going to look for these setups within certain windows using candlestick patterns. Now, our team, again, Price Headley is our founder and CEO, and his team of analysts, they use the historical profit factor to determine which days were the best for long trades, short trades, or neither. So as I said, people are looking for frequency, but they're also looking for accuracy, right? And based on my multiple decades of experience, some days the best trade is not trading at all right? As much as you may be itching for a trade, maybe you're on a hot win streak and you're like, man, I got to keep this thing going. Don't force the action if it doesn't fit your system. So historical profit factor, what does that mean? It just means based on trading the cues within this system over time, it has shown a positive edge. Now, past performance, right, doesn't guarantee future results. Future results are going to vary. But let's talk about some results because people always want to know. So this trading system, again, is called QQQ Options Playbook. As you can see down there in the bottom left, it was started in January of 2023. Up to date through this morning, if you'd allocated up to $5,000 per trade, all wins, all losses, no compounding, no commission, no subscription fee, you'd made $101,130. And as you can see over here on the left, that's a 404% return if you'd started with a $25,000 account back then. Now, as you can see in the banner, traders with smaller accounts can trade fewer contracts. So remember, I told you based off the last 12 months, you can actually do this strategy for about $500 a trade. Now let's break it down to $1,000 a trade and starting with a $5,000 account all the way back to the inception in January of 2023. $18,148 in gross profit, a 362% return. Again, no commission, no subscription fee. But again, folks, this is all wins, all losses, no compounding. Of course, they make us tell you this, past performance doesn't guarantee future results. So let's review a recent winning trade. Then I'm going to explain more about how QQQ Options Playbook works. So as I told you earlier, every chart is a what? It's a daily chart. So let's just write daily up here if you just joined. These are daily charts, okay? So each bar, each candle, 1 day of trading action. Now you're going to notice that all case studies today are based on allocating up to, but no more than $1,000 a trade. Nice round number before any commission or subscription investment. I told you earlier the technical indicator that our team is using. This is percent R down here at the bottom. All right. So you already know some parameters about the system. You know we're using daily charts. You know we're looking for price action patterns. You know that we're using percent R indicator, and you know that we're using 3-day until expiration options, right? And this is just the first case study. So we enter this trade on Thursday, September 4th. Why do we enter that trade? Well, you see percent R down here at the bottom in this upper third in that breakdown of the indicator. Now, what I'm not going to tell you today is the exact setting that Price and our team of analysts use for percent R. However, when you do subscribe today with the special offer that I have for you, one of the resources that you'll get access to in addition to your trades, we call it the settings and rules sheet. It's a 2-page PDF breaking down the trading system for you in bullet points, paragraphs, so you know exactly why Price and our team are sending you these trade alerts. If you're not interested, that's fine. You can just sit back and get your trades, but we are there to help educate you if you want to be educated. So we get the percent R indicator down here where we like it. We get a gap up from the prior morning and rally higher, and we enter that trade. Now on that Friday morning, it hit our 100% profit target before the market flipped. I believe last Friday, a week ago, the jobs report came out. Initially, the markets, if you will, liked it, and then people started dissecting it and thinking about it, and the market flipped. So that's why we use 100%. We're not greedy. We're like, man, if we can double our money, especially in less than what? You get in at 3:40 p.m. on the 4th, and you're out that next morning, you're in that trade less than an hour total market time. Think about that. Making 100%. That trade generated $740 in gross profit. And you see that contract price was $3.70 a contract. As I shared with you earlier, the average has been $4.13 over the past 12 months. Now, I told you this earlier as well. Not all winning trades are going to hit 100%. Here's a time stop example, because remember, we'll exit these trades if they don't hit the 50% stop or the 100% profit target. We got a gap up here, a move higher. We've got percent R down here in the upper range that we like. And then 2 trading days later, we close it down for 70.30% per the time stop rule. $516 on that trade. Remember, all trades today are based on allocating up to, but no more than $1,000 a trade before any commission or subscription investment. Now, we're trading a single ticker, right? We're dialing it in. We're keeping you focused. We're trading one security and one security owner only. As I told you earlier, it is one of the most highly traded securities every day. Liquidity is fantastic, and frequency has not been an issue. As I mentioned earlier, we start off targeting 100% for each trade, which was achieved with these next 2 trades, right? So we get in on November 4th, last fall, we enter $4.01. We get out the next day for 100.75%. Now you're going to notice on this call trade, percent R is down here in the bottom, right? So different than what I've shared with you so far on those first 2 case studies. Why? Because if you've been following me for the entirety of the presentation, there's 3 tradable patterns that our team looks for. This is the second one, all right? So now we look for percent R to be in that bottom third. And if you just joined, this is percent R, which stands for percent range. Now we get a gap down and a move down and an oversold reading on the percent R indicator. We enter, we close here, and that trade, excuse me, makes $808. And then the very next day, we get a signal like I showed you on the first two case studies. We get a gap up and a close higher. Percent R is in this upper range. The very next day, it gaps higher and hits the 100% profit target, 100.49%. That trade generated $822. And if you look at these contract prices, 409, 401. Okay, again, on average, you can do this strategy for as little as $500 based off the 12-month average. Now, listen, I am grateful, like you heard me tell Anthony in the beginning, I am grateful that Anthony has invited us back to speak to you all today. I am grateful to my boss for giving me the opportunity to present to you. Based on my years of experience, I want to share something with you, as you can see here on the slide. Not all trades are going to be winning trades. Not all trades are going to hit the 50% stop. Not all trades are going to hit the 100% profit target, right? Some trades are going to be time stops, but there will be losing trades. So if you're expecting perfection, please do not sign up today when I share the special offer with you. Glad that you're here, glad that you're watching. But if you're expecting perfection, we're not perfectionists. We're dedicated, we're determined, we're systematic. As I told you, we're technicians. But let's address losses. Why? Because they're real. They're going to happen. Here's a trade where we got into some calls, right? You see the candle movement that we like, a gap up here, move higher, right? You got the percent R indicator in the overbought area with that gap and move higher. And the trade just flipped and went down the next day. We got stopped out for 53.15%. Here's another example. About a month ago, we get into calls. Again, percent R in the top piece. Got a gap down and a move higher. A move that we like. Gap down that next morning. We got stopped out, as you can see there, for 50.17%. Losses are going to happen. Ray, thank you for your nice comment. He says you're solid. I appreciate that. Very kind of you. So listen, QQQ Options Playbook has been finding an average of 8 new options trades per month. So not a trade every day. Remember, this is strategic. 3 out of 8 tradable patterns. 3. So you're not going to get a trade every day. Strategic. So let's look at this trade. Here's some calls. Look at this gap down. Market had been moving downwardly, gaps down, but it closes higher with percent R in that top third. We enter that trade. It gaps up the next day and rallies, hits our 100% profit target. That trade made $553. Well, why only $553 if we're using $1,000 per trade? Because the contract price was $553. So under that premise, you can only trade one contract, right? Again, all before commissions or subscription investment. And of course, past performance doesn't guarantee future results. Here's a trade that we entered on June 23rd, 430 a contract. Market essentially opened flat, but it rallied higher. Percent R in the overbought area that we like with that move. And then look at this gap up, making 100%. That trade generated $860 because you could have done 2 contracts under the $1,000 premise. Here's a trade in June as well. Market's ramping higher. We get a gap up from this close, moves higher to confirm. Percent R, if you just joined, this is percent R down here for percent range, and it ramps higher for us 2 days later, making 100%, $792 on that trade, $396 per contract. Now, I'm surprised nobody's asked. Yes, we talk about 3 days until expiration, right? Options. But nobody's asked about the option selection process. Well, our team, again, Price Headley is our founder and CEO. They use the average true range, ATR. Now, that's one of the things you'll find out when you sign up today on the settings and rule sheet is how our team uses ATR and what setting they use for ATR to assist them in the option selection process. So it's not just as easy as you trying to take my chart examples today and going, all right, I'm putting percent R on my chart. I'm going to go back and look at the days that he got in and try to figure out what percent R in setting that they're using. That's fine. You can try to backdoor that if you'd like. But what you're not going to know is the option selection process. It's one of the reasons why you would hire us based off that historical profit factor that I've told you about. Here's a trade about a month ago, 6 weeks ago. These are calls. We got a gap up and a rally higher. We've got percent R in that overbought area that we like, and then we get a gap up that next morning, making 100%. That trade generated $936. Why? Because it was $312 a contract. You could do 3 contracts there under the $1,000 threshold. Here's a trade for you on August 21st. Saying you're buying calls here after this? You're stepping in, buying calls after this down move. Yes, we are. Why? Because we have the oversold reading on percent R that we like. We're not trying to call an absolute bottom, all right? We're not saying, hey, the pressure is done. We're just saying it needs to stop for a couple days. And we hit it right the very next day for 100%, $852 in gross profit on that trade. See there, $2.84 per contract on that trade. Trading 3-day until expiration options can be seen as aggressive. Anybody think that? Anybody out there trading like this? But with our unique trade management, it has been extremely successful. Here's a reminder how the strategy has performed over time. So if you just joined QQQ Options Playbook, we call it an alert service. You can call it a trading system, a newsletter, a subscription, whatever you'd like to call it, but the name is QQQ Options Playbook. It was started in January of 2023. And as of this morning, if you started with a $25,000 account, allocating $5,000 a trade, you'd be up $130, right? $101,130 gross profit, no commission, no subscription investment. That's a 404% return, trading one security, no compounding, adding up all wins, subtracting all losses. Think about it. Again, if you just joined, breaking it down to $1,000 a trade, same time frame, 362% return with a $5,000 account, $1,000 trade, $18,148 gross profit before any commission or subscription investment. As they make us tell you, past performance doesn't guarantee future results. Future results are going to vary. But here's an example of a $5,000 account, what that looks like visually. $5,000 has grown to $23,148. As you saw, $18,148 of that is gross profit. $5,000, $1,000 a trade, no commission, no subscription investment. Past performance doesn't guarantee future results. Anthony and his team at Traders Corner, right, invited us, they invited you. And so since you're a Traders Corner attendee, I haven't received approval to offer you a fantastic trading opportunity. I told you in the beginning it was coming. Now it's the time for you to decide if you want to put big trends on your trading team and sign up with us today. I'm going to show you how you can get real-time trade alerts when this strategy finds a trade. But this is only available to the first 34 traders. And Anthony and his team can vouch for me. There's more than 34 of you in the room today. The last time we did this to Anthony's team, tons of traders signed up. And you may say, well, what about having too many subscribers? Folks, that's not a concern. Why? Because QQQ is one of the most highly traded securities out there, right? You can wipe all that worries away. Wow, 34 seems like a lot. It's not. It's not. If you're not trading the Qs, pull up a chart, look at the volume in the Qs. QQQ Options Playbook, 3 months. Trade with us for the next 3 months. Resources, Price Headley, again, our founder and CEO is going to do weekly video updates for you. You heard me reference the settings and rules sheet. It's a 2-page PDF. Those resources are going to reside in your Big Trends account. When you sign up today, you're going to get 2 emails. You're going to get a purchase receipt and a welcome email. In that welcome email, it's going to tell you how to find those resources. Also within that welcome email is going to be a special email address. It's a dedicated email address to Price and his analyst team. Should you have any questions about the trades, the trading system, how they use average true range in the option selection process, you can put Price and his 35+ years of experience, our team of analysts experience on your side. Total package value, $891. Monthly list price, $297. But I told you, special package for you today. So 3 months, total package value, $891. Again, 34 traders can sign up today for just $177. And that's not per month. It's not $177 per month. I know I showed you $297 month list price. Price and our marketing team approved for me to come to you today at $177 for 90 days worth of access. And guess what? It does not automatically renew. How do you sign up? You go to members.bigtrends.com/corner. Now I'm going to take you there. Okay. Looks like Anthony maybe have already put that in there. No, let me put that in there real quickly. members.bigtrends.com/corner. And I'm going to take you to our checkout cart and check out how easy this is. It's 1 page, simple, and it's secured. Let's start over here at the top left. Billing information, first name, last name, email. Please put in your trading email address so you can get your purchase receipt, your welcome email today, and you could get your first trade as soon as Monday afternoon. Contact information, Anthony did put that for you in the chat box. It's also listed here in the checkout cart in 2 locations. You see that we take the 4 major credit cards, Visa, MasterCard, Amex, Discover. If you slide down to the bottom of the column, you'll see that we also take PayPal. So 5 ways for you to sign up. Again, it will not automatically renew. So how will that work? How will renewal work? 3 days prior to your expiration, our team will send you an email presenting you with the opportunity to renew. If you had missed that email, you ignore it, no worries. Your subscription will simply expire 3 days later. Terms and conditions are listed in 2 locations, 1 there, 1 down here, and the contact information is listed at the bottom as well. It's 1-800-BIG-TRENDS. That's 1-800-244-8736 or email clientcare@bigtrends.com. The office is closed today, but somebody will be back in on Monday at 9 a.m., but you're taking the chance that one of those 34 spots are going to be gone. And as it says down here in the footer, we're here to help. Remember, we've been around for almost 26 years. I've been here for almost 14 of them. And don't forget, I was one of Price's earliest clients when he launched Big Trends. Members is plural, BigTrends is plural.com/corner. Lock down your 3-month subscription for just $177. Little FAQ here for you. What type of strategy is used? Buying calls or puts. So no spreads of any kind. If you can just simply buy a call or buy a put, you can sign up. How are you going to receive those trade alerts? Via email. As I said in the checkout cart, put in that email address that you want to use to get your trades. You see out here to the far right, WhatsApp. We do not text. We don't text, okay? For almost 2 years now, we've been using the free, no-cost app called WhatsApp. You can put it on your computer, your laptop, your tablet, mobile device, or all of them. You can put it on all 4 of those devices. It's free. There's no cost. Do you have to use WhatsApp? You do not. You can simply get your trades via email. But once again, we do not text. WhatsApp is faster, more efficient, and again, it's free. Beats texting handily. When are the new trades sent? Remember, you don't have to screen watch. 3:40 p.m. Eastern time or when the new trades come out. When are the trades closed using the time stop? Remember, I showed you that case study. We get in, and if we haven't hit the 50% stop or the 100% profit target, we will close that trade down 2 trading days later at 3:40 p.m. We get you in, we get you out. I'll show you a trade example here in just a few minutes. Remember, the system averages about 8 trades a month. Day trades, not a worry. Average contract price, you've heard me mention this a few times throughout the presentation, $4.13 a contract. Resources, remember, if you want to utilize them, if you just want to sit back and get your trades, that's great. If you want to learn more, that's great as well. Price Healy, doing weekly video updates for you. Settings and rule sheet, if you want to learn the trading system, and a dedicated email address to Price and the team should you have any questions about your trading system or the trades. Now let's review the recent winning trade one more time. So if you just joined, this is a daily chart. Daily chart. So each bar, each candle, red or green, represents 1 day of trading action. The indicator down here at the bottom is %R, stands for percent range. On this particular trade, we got a gap up and a move higher, and we have the %R in the overbought area. One of the 3 tradable patterns that we like. Got in, got out that morning of the jobs report before the market flipped, hitting our 100% profit target. That trade made $740. So as I said, what do these trade alerts look like? Thank you for asking. September 4th, 3:40 p.m. Eastern time, buy to open. If you're not familiar with that terminology, it's trader jargon. Just means you're starting in a new position. I'm going to a college football game this evening. There's going to be some tailgating going on. If you were to be there and you walked up, I would say, hey, what's your favorite beverage? Water, soda, adult beverage? And if it had a lid on it, you'd have to open it. Same thing with these trades. You've got to open a trade to trade it. Buy to open. Remember, we're only trading one security and one security only, the Qs. We tell you exactly the expiration to use. September 9th, remember, Qs have options that expire every trading day. We tell you the exact strike price. Remember, we're using ATR, average true range, ATR, in the option selection process. This is a call, so you know the direction. We even give you the option symbol down here at the bottom, and we tell you what to pay to get in that trade. And we also remind our subscribers that these options trade until 4:15 p.m. Eastern time. All right, don't forget that. I learned that the hard way several years ago. Got surprised in a negative way. So please remember that. The next morning, before the market opens, 9:15 a.m. Eastern time, the bell rings at 9:30. We give you the stop, $1.85. We give you the target, $7.40. So if you want to, you can set up a bracket order so you don't have to screen watch. You can set up what's called an OCO. One cancels the other. I use them a lot. I do a lot of presentations here at Big Trends. Okay? So I have trades on. I don't have time to watch them while I'm doing a webinar presentation, so I'm using OCOs. It just simply tells the trading platform, if one of those levels is reached, execute it, and then immediately cancel the other level. So as you know from this example, the stop was canceled and the profit target was hit. Do you have to use OCOs? You do not. But as I told you earlier, we get you in, we get you out. You know exactly what to trade, you know what to pay, and you know what the parameters of the trade are before the market opens. So what's this trade look like? Well, if you'd allocated up to $1,000 to that trade, it would have been 2 contracts, $740 in that trade. Because if you trade a third contract, you've been over the $1,000. Hit that profit target of 740, that's 1480 less the 740, makes 740 because it was an even 100% gain before commissions, before subscriptions. Think about that. You could get your first trade Monday afternoon, and even if it's a time stop trade that's slightly positive, depending on what size trader you are, it could cover today's special package. Remember, it's 3 months, $891 retail. That's getting marked out, right? We're marking that out. First 34 traders can lock down 3 months for $177 when they go to members.bigtrends.com/corner. Don't delay, act today. Now listen, I told you I've been here at Big Trends for almost 14 years. The 26th of this month will be my 14th anniversary. Told you Price Healy started the business back in November of 1999, so quickly approaching the 26th anniversary. One of the joys of my job is getting to know you as a trader, how you trade, what do you think, and also learning about your family if you want to share. I've had some great conversations with our clients over the years. And one of the things that I like is when our clients share with us testimonials, unpaid, unsolicited. So I'm going to read you a couple testimonials. And remember, these are unpaid, unsolicited. High price, just wanted to thank you for your QOP trade setups. I'm finally growing my small account after many years of failure and stalemate. Though I'm not courageous enough to stay in for 100%, 85 and 90% have been great for my account. I'm so encouraged now. Thanks again, Joan F. Unpaid, unsolicited. And here's one from Tom W. Bear with me. Dear Chris and all at Big Trends, I cannot thank you enough for always working with me to smooth out issues or questions I have with my subscriptions. I've been with you now for 10 years plus and don't regret for 1 minute for choosing BT as my #1 and only trading organization now. I spent years prior to BT trying many different programs and all without success until Big Trends. Not once have I ever had an issue that BT could not fix or suggest a way to correct. Their customer service is the best and above all others I've dealt with prior, and never without a quick response or phone call to answer any questions or issues I was dealing with in my account, and always with professional and courteous responses every time. You will not regret joining this team of experts, and I'm sure you will always be pleased with their professionalism and knowledge in trading, especially with options. I'm blessed to be a part of this organization and always will, Tom W. Again, folks, unpaid, unsolicited testimonials. Remember, $5,000 account, $1,000 to trade, all wins, all losses since the inception in January of 23 through this morning, it would be a $23,148 account. Past performance doesn't guarantee future results. Future results are going to vary. But remember, this trade that we just closed about a week ago made $740 in hardly no time. Remember, we got in at 3:40 p.m. on the 4th of September, and you saw the gap open on the morning of the 5th, hitting our target, 740. So total time in the trade, less than an hour market time. Now listen, past performance is no guarantee of future results, and not every trade is going to be a winner. I showed you some losses today. We've talked about time stops. I've shared a lot of information with you. But one trade could cover your special package today. 3 months, retail pricing, $891. First 34 traders, $177. Remember, that's not per month. That's for all 3 months, and it does not automatically renew. Members, bigtrends.com/corner. Members.bigtrends.com/corner. Let's go to that page one more time in case you just joined us. I threw some information for you in the chat box. Remember, the office is closed today. Someone will be in on Monday at 9 a.m. But the contact information is up here at the top. It's at the bottom, as I shared earlier. You see this email field highlighted in red. Why? Can't tell you how many times over the years people type in the wrong email address, or maybe they type in their secret email address, but not their trading email address. And then they're wondering why they're not getting their trades. Folks, I know you're excited to sign up. We cannot wait to do business with you. Take your time. Put that email address in there correctly. 4 major credit cards: Visa, MasterCard, Amex, Discover. We also take PayPal, as you can see down there at the bottom. 5 ways to sign up. $177, does not renew automatically, okay? It won't. No surprise charges from us. Not going to happen. $177 gets you in for 3 months. Remember, it's members, plural, bigtrends.com/corner. Members.bigtrends.com/corner, all for $177. Anthony, you out there?
I am.
All right.
Thank you,
Well,
Chris.
I mean, I tried to get it closer this time, Anthony, but as you can tell, I get so excited. I get moving on these slides. There wasn't a lot of questions, so maybe I covered everything that was on people's minds. If they've got some questions, they can throw them in now. If you want me to stick around, or if you got your next guest ready to go, however you want to do. You tell me what you prefer.
If you have some free time, our
Sure.
next guest isn't here yet.
Okay.
So I want to ask you, so
Yeah.
who's your team? University of Kentucky?
Yes.
And is that the game you're going to go to today?
Yes, they play Eastern Michigan tonight.
Yeah.
It's a night game. It's the first night game of the year. They had a tough loss last week to Ole Miss, Mississippi.
Yes.
But we are season ticket holders. Our family's 4 generations deep at the University of Kentucky. So
Wow.
as poorly as the football team was last year, yes, I'm back over this year with hope and optimism that we're going to do okay this year. So we love it. Our family goes, a lot of good friends, and it's supposed to be a beautiful day here today. So looking forward to that. Do you have a team yourself?
University of Florida and University of Miami, just alumni.
Okay.
2 really good programs as well. I think you have a
Absolutely.
really great coach, don't you? Is that Stoops?
Well, it is
the coach?
Stoops. It is
Yeah.
Stoops. He's done a good job, but I think he's maybe getting a little comfortable in the position, if you will. So the
Mhm.
recruiting's been a little lackluster. He lost his main recruiter to our rival down the road. A gentleman named Vince Morrow left and went to Louisville, which I find an interesting move. So we've had some issues with offensive coordinators over the last 5 or 6 years. I don't know if you know who Liam Cohen is. He's the offensive coordinator in the NFL. He was with the Rams, and then he came to us for a year, and then he left, and then he came back, and then now he's gone. I think he's at Tampa Bay. I can't remember, but so we've had some movement in offensive coordinators, and that's just hard to get quarterbacks and receivers that hop in, and they're like, well, who's going to be running the playbook? And it's changing all the time.
It sounds like maybe Stoops surrounded himself around some good people, and they're getting poached from him. Is that
Yes.
possible as well? Yeah, that's what it
Right.
looks like.
Right.
He's
Florida's got a
coaching
big
people up
game
and they're
today.
taking them. Yeah.
Florida's got a big game today. And so does University of Miami. Don't they play South Florida, who beat Florida last week?
I'm not I think you're right. And South Florida's on fire right now.
Yeah, they are.
That's a good program. Yeah.
It is. Okay. Anything else I can answer for you?
No, we went off topic. That was good though.
That's all right. That's all right. You know me. We've done this enough times. You know I love to chat.
Thank you, Chris. That was
Anthony, thank you.
We appreciate it, man. Enjoy the game today.
Thank you. See you.
Thank you.
Bye-bye.
Thanks. Chris, really clear actionable option strategies. Take advantage. That seems like an amazing price there. 90 days for 177. Really enjoy big trends. That's really what they focus on, are big trends. Thanks, Chris. Next, we are joined by Peter Schultz, a nationally recognized options educator and the founder of Wealth Builder Publishing and The Winning Secret. His presentation is called A Winning Options Strategy for the Lazy and Unlucky. And inside, he'll show you how to win consistently using a formula with overwhelming statistical odds. No screen watching and no guesswork. Let's welcome Peter Schultz. Peter, are you there? Peter, I think you're on mute.
I am. How's that?
That is good.
Alrighty. Is this Anthony?
Yes, this is Anthony.
Fantastic. Thanks for having me on.
Hey, thanks for being here today. I think today's your first time too, right?
It is, yeah. It's good to be here.
Thank you. Thanks for being here. Really appreciate it.
Yeah, my pleasure.
Right now, I think we just need you to show your screen.
Okay, do you want me to get started or do we want to wait till the top of the hour? What's good for you?
Oh yeah, if you could get started now. If you need 2 minutes, don't worry about it. The audience could grab a cup of coffee or a tea or something if you need some time.
I don't need time. I can get started.
All right, excellent. Sorry, we rushed you a little bit there.
Okay. Can you see my screen?
Yes, The Winning Secret. For the lazy and unlucky, I actually had to stop like mid-sentence as I was talking. I was like, oh my God, it reminded me of myself for a second. We've all been there, right?
I know what you mean. It's so true, and especially if you're a trader, you know, God, it can be so frustrating sometimes. So that's exactly what I'm going to talk about, and hopefully, you know, give folks some good solutions. It took me a lot of years to figure this out, to figure out how to start not tearing my hair out. So you let me know when you want me to go. I'm ready to go.
All right, you go ahead, and you'll go until about 12:45.
Okay, that sounds great. So we got a lot to cover, so let's get going. This is, here, no, I think I got it. We got it. Okay, so this is the winning secret for the lazy and unlucky. And I just want to introduce myself real quick. My name is Peter Schultz, and I've been trading every day for 30 years. And I'm the chief strategist to the winning secret. And I'm going to show you some things that will help you win consistently with your trading. And this is no matter what kind of luck you've had in the past. And if you've lost a little bit or you've frustrated a little bit, I completely understand. I've been there more times than I'd like to admit. So none of us thinks of ourselves as lazy and unlucky. Hopefully you don't think of yourself as that, but we've all felt that way at times. And that's especially true when it comes to trading. And here's a scenario, see if you can relate to this. So you put all this research into a trade and you find this perfect setup based on all your technical analysis. You see the fundamentals are pointing in a certain direction. You see that the wind's at your back because the market is heading in that direction. And then some surprise comes along, something completely unexpected, and the stock just reverses and stops you out of the trade, and you end up losing money, and you can't figure out why. You don't know what went wrong, and you're just going, you know, that was like the perfect setup. And sometimes when you find the perfect setup, you tend to push more money into the middle of the table than you normally would, which makes it even more frustrating. So like I said, I've had that experience a lot. If you're an options trader or you trade with any kind of leverage, it's even more exaggerated. That happens because, you know, the wonderful thing about options is that great big lever can make you money really quickly, but it also takes money away really quickly, and the option can diminish in value really fast. So that's frustrating when the trade reverses. So the traditional approach, and a lot of what you've heard about when you attend these kind of events, a lot of what you see is a lot of fundamental and technical analysis. And the fundamental part, if you're a short-term trader, is usually trading into an event. Good example is the FOMC meeting this coming week, or earnings. Earnings are another great event to trade into. You know, either up or down, or you take advantage of the volatility and you get out right before the event. There's a lot of ways to do it, but especially for short-term trading, a lot of what we look at is technical analysis. So we're looking at the chart, we're seeing which way things are going, we're seeing where the momentum is and what's likely to happen. So all of those tools are fantastic. I'm glad you have those in your arsenal, but I'm going to give you one more that I think will make all the difference. So when you do all that, you do the technical, you do the fundamental, you trade into events, you do everything right, you can still lose. And sometimes it's too much and too often. So what's the solution? What can we do about it? What can we do? And I hate to say this, but kind of take ourselves out of the equation. A lot of people talk about emotional trading and how tough it is to keep your emotions out of your trades when there's money on the line. That's super, super true. So what can we do to give us ourselves an edge that doesn't have that much to do with us? The trick to making money dependably over the long run, without getting your emotions involved, without worrying about what kind of luck you've had in the past, or I always do that, or I always screw up this way, or whatever. We need a mechanism to take ourselves out and give ourselves a probability edge no matter what. That has nothing to do with us. And the trick is to stack the deck in your favor, stack the decks overwhelmingly in your favor on every trade automatically. So how do we do that? How do we go about doing that? So if you've traded options before, you know a little bit about that game. You might know a little bit about what people typically do when they first get involved in options. And sometimes it's a good thing to do. So I'm not putting this down, is they buy an option. So they buy a put on a stock they think is going to go down. They buy a call on a stock that's going to go up. That's great when you have a great setup and you want to use a small amount of money. If you want to really build up your account, if you want to get the odds on your side, if you want to win the majority of the time, if you analyze the options pricing formula, you realize that by becoming a seller, by switching to becoming an option seller, you're going to start trading at the highest end of the probability curve. And I'll show you how we stack the deck. And this is an easy thing to do. It's one little switch in your thinking that'll instantly stack the deck in your favor by over 80% on every trade you make. And we completely remove ourselves, our own biases, our emotions, any kind of history we've had, any kind of mistakes we've had. You remove that instantly by giving yourself an 80% probability edge the minute you put on the trade. Once you do that, you've got that. And you have an 80% chance of winning on that trade no matter what else happens. And I absolutely love this. And you know, the analogy that I use is, say you went over to a buddy's house and he said, listen, I just picked up this coin at the novelty store. It's weighted on one side. So every time I flip it, it comes up heads 80% of the time. And listen to this. If it comes up heads, and you can call heads on every flip if you want to, and when it comes up heads, I'm going to give you $1,000 every time it does that. So you're out in the backyard, it's a nice summer day, and he's flipping this coin, and you're calling heads, and every time it hits heads, he hands you a $1,000 bill. My question to you is, how long would you stay out in the backyard with your buddy flipping that coin? And I would suggest that you'd probably stay out there until it got so dark that you couldn't see outside, because it's just a setup where you just automatically win and you don't have that much to do with it. Once you make this decision, you're essentially calling heads on a coin that comes up 80% of the time. It's kind of cool. Now, why is that and what's going on in our favor? Now, if you're an options trader, you might know a little bit about this already, but stick with me, and because you're going to learn some new things. And if you're not an options trader, this is something I really want you to take a good look at. So the thing about options, what makes them so different from stocks, is that they have a limited time span. And once all the time is out of the option, there is no more time value left in that option. That option's time value is worth nothing. It's worth zero. This is why people lose so much money trading options. This is why people say that options are risky, because people buy an option and they pay all of this really big money for this time value, and then time is going by and the clock is ticking, and what the trader thought was going to happen in that time period doesn't happen, and they lose all their money. So an option is composed of two parts, time value and intrinsic value. And we don't have to get into too many of the details, but if you're just selling, if you're selling an option that's out of the money, all it is time value. So I'm going to get my little pen here and I'm going to show you some things that are kind of cool. So here's what's most interesting about options and time decay is, in the beginning, when there's a lot of time left on that option, it decays, but it decays very slowly. So it starts going down, that time value is going down. Now, I want to make something, a really important point here, and that is that the person that bought this option paid for that time value. The person that sold this option took in that time value. So let's say you're, in this case, you're the seller, and you take in this great amount of money, and this wonderful amount, it hits your account the minute you put on the trade. Now, in this period of time right here, this amount is not diminished that much. It's diminished a little bit, but not that much. And this might be, say, you know, anywhere from a month to 3 months of time in this time period right here. In the last 30 days of an option's life, it starts to decay much, much faster. And what we found is a sweet spot in the last about 2 weeks to 9 days of time. You can write this down, about 9 days of time, anywhere from, even say 16, 15 days of time here, down to 9 days of time. This sweet spot right here, you're getting a lot of money for your options, a lot of money for selling these options, but look what happens to that time value. So the game here, if you're wondering the game that we're playing, the game that we're playing is we're taking in a pretty decent amount of money, a pretty good chunk of money, and then we're watching that disappear as time decay makes that option less valuable. Now, the time decay will go by faster when the option goes in your direction or the underlying goes in your direction, but it doesn't have to. And that's what I love about this, is you don't have to be so right on direction. So all other things being equal, you're going to naturally win. So this is a built-in advantage that doesn't go away no matter which direction the stock's going. So here's what I want to show you. This is on the Thinkorswim platform. Now, this is the platform that we recommend for options trading and doing this strategy. And like I say, even if you've never done this before, if you've got another strategy that you really like, if you're an active trader, that's great. I don't want to take that away from you, but I want you to consider doing this with a fairly decent sized chunk of your money, because what it does is it creates this weekly cash flow. We have options that expire every single Friday, and you start setting your up. We do 2 trades a week. I come out with them late Tuesday night. You enter those trades Wednesday for the following Friday's expiration. So we're in these trades about 9 days at a time, but they overlap. So we have options expiration happening every Friday, and I like to refer to that as payday. So remember that coin that we talked about where it comes up 80% in your favor. So the kind of option that we would naturally sell, and this is, and I'll show you how to set up your columns on Thinkorswim. I have a whole tutorial on this to get the proper data at the top of each one of your columns. This is implied volatility, this is the delta, and this is the probability of being out of the money. So if we're selling an option that's all time value, we want that to be out of the money by expiration, because when it is out of the money, it's completely worthless. So if we're selling an option that has a, say, a 20 delta or an 18 delta, we're ending up with about an 80% to 81% chance of this option expiring out of the money, expiring completely worthless. This right here is your percentage of winning. And I have a quick question for you. How many investments have you done in your lifetime where you saw the exact percentage right down to a 1/10% of you winning on a particular trade? You get into real estate, you know, you buy a piece of real estate, a house, a speculative piece of real estate that you think is going to go up. Is the agent or the broker, or the person that sold that to you, going to tell you have X% chance of winning? Or even with stocks, when you're buying or selling a stock. This is what I love about options. They're based on a pricing model that's called the Black-Scholes options pricing model. It's what made options possible way back in the day. The mathematicians that came up with this, there were 3 of them, they came up with it in 1973, and it's no coincidence that the options, the modern options market started in 1973. These 3 mathematicians, so one of them died over the course of this time period, but in 1997, the 2 that were left got the Nobel Prize in economics for coming up with this formula. So the cool thing about this formula for us is we can get in there and we can see where the probabilities are. The cool thing about it right now is you don't have to do a single bit of math to figure out your probability. You just trade with an options-friendly broker like Thinkorswim, who's now owned by Schwab. They used to be independent, but they're owned by Schwab now. And you set up your columns the right way here, and you can see your exact percentage of winning before you ever place that trade. I think that's awesome. And how many trades would you do, and how much money would you put on the line, and how much would you bet if you had an 80 to 81 to 82% chance of winning on that particular trade? And I'll show you what happens if you lose too. So this is actually pretty interesting. I think that's important to know what happens when you lose and what happens when you win. So here's an example of a trade that we just did this past week. And so the thing is I don't want you to ignore fundamental analysis and technical analysis. So here we have a stock. This is COF. This is Capital One Financial, and it's got this fantastic uptrend going. We see where it comes down and it just hits its uptrend support line, it bounces off of it, and we see a situation where we're in a bullish market, so the wind's at our back, but the stock is starting to come back down towards the support line. This is an excellent opportunity to sell what we call a put spread. So this is my actual commentary right here from our subscription service. So you're seeing the same thing that our subscribers see. So here's how you do this trade. And if you've done this before, that's fantastic. If you don't, this is going to be kind of a really cool thing for you to see. So we sell the 215 put, and we sell that, and we take in a fairly decent chunk of money. Now, what we're doing when we sell that put is we're selling the obligation, we're selling somebody else the right to put that stock to us at 215. They're only going to do that if the stock is less than 215 at expiration or sometime during the course of it. If we don't want all that liability from $215 all the way down to zero, so we come down here and we buy ourselves a hedge. And in this case, we're going to sell the 215. We are going to buy, and we like these narrow spreads. So this is just $2.50. We're gonna buy the 212.50. And what that does is our risk is only the distance between these two strikes. We can't lose any more money than this $2.50. But here's what's cool. On a 250 spread, I like to take in 50 cents, a minimum of 50 cents. And so what that means is we subtract the 50 cents from the 250 spread, and that means that the maximum that we can lose is $2. Now, your risk is fairly low on this, and we're making 50 cents. So if you're making 50 cents, you have a 50-cent profit on a $2 potential risk. That means that we're getting a 25, because 50 cents is 25% of $2. We're getting a 25% return, and we're getting it for a very short period of time. So like I say, this is just 9 days, but 2 of those days are the weekend. So that means we're only exposed for 7 days. And if you don't like the way this thing is going, you can close it early and get out of the trade completely and remove all that risk. Most of the time, we let these things go to expiration. So what we have here is a stock that's coming down towards support. Every single time it's done this, it's bounced, it bounces. Every time it gets close to this support line, it bounces. And every time it does that, it makes this support that much more credible and that much stronger. And that's exactly what I would expect Capital One Financial to do. So this is a typical kind of a spread trade that we do, really sets the odds in your favor. And I want to make one more point. So you say, okay, well, there might be some risk here. So, what could possibly happen here once I put on this trade? So when you put on a trade, there's only 5 things and 5 things that a stock can do. So let's just take a look at those right now. So once you put on this trade right here, you sell this spread, let's say this stock just takes off and goes straight up. If that happens, you win on this spread, you win the entire, keep the entire 50 cents, and we make our 25%. If the stock doesn't go straight up, but if it just continues along its trend line, it just goes up a little bit, you win, you keep the entire 25%. If the stock actually doesn't go up at all, and it just kind of wavers along and goes sideways, this still expires worthless. You keep the 25%, you win. Even if the stock goes down, if it goes against you and goes down a little bit, but doesn't go down very much and still stays above your sold strike, you still win, you still make your 25%. The only way you can lose on this trade is if the stock suddenly falls out of bed and gets into your spread and gets into your sold strike. Now, chances are that's not going to do that. We're doing that in an ascending market. We're doing it with a stock that likes to bounce off this trend line and go up. Chances are that's not going to happen. But if it does happen, that's the only way you can lose on this. So you win, just as a very rough example, without getting into our percentages on exactly what your risk is, you win on 4 out of 5 scenarios. And that's pretty darn reassuring. That's why I love this as a consistent cash flow strategy. So combine this huge probability edge with the technical analysis and market sentiment analysis that you're already doing in your trade. So you find a setup that you think is going to go up, and instead of buying a straight call on it, or instead of buying the stock, you sell a put spread. Your odds of winning are through the roof, and actually your return is pretty darn good. So you combine what you already know with this probability advantage, and it doesn't matter if you've been lazy or unlucky in the past. It doesn't matter what kind of luck you have, because the probabilities don't lie. The probabilities always work no matter what else is going on. And like I say, you combine that with a wind at your back, with the market heading in your direction, and you know what? It works just as good when the market's going down. So if we start to go into a bear market, oftentimes September is a little bit bearish. If we start to go into a bear market, it works just as good to sell call spreads on stocks that are going down. So this is a huge advantage. It's the big secret. I call it the winning secret. That's actually the name of the subscription service and the education part of it, because it just works so well. And I've got so many rave reviews, and we've had so many people that have been with us for so many years because they really like that cash flow coming in every month. It's pretty darn cool. So once again, how much can you make? And we already talked about that 25%, that making 50 cents on a $2 investment, but how much can we lose? So remember when we talked about the most you can lose is the distance between the two strikes. So in this case, that's $2.50. We're selling the 215, we're buying the 212.50, that's 250, but we're already getting 50 cents on that, so we're reducing our risk right there. Well, here's a little secret about this, and this comes from options theory. This comes right from that formula that we talked about, that Black-Scholes Nobel Prize winning formula. So here's what's going on. If this stock goes down, keeps going down, and it breaks this uptrend, and it keeps going down and actually hits our sold strike, so it hits right here, we enter an automatic stop. So we put in a stop order where we're saying, listen, this sold strike, it's below support. It should never get hit if this stock is doing what it's supposed to. But if it does get hit, we want to be stopped out of that trade. We want to close this spread down, completely get out of it. We want to buy what we sold, sell what we bought, get out of the spread. And here's what's interesting about options theory is if you close this spread right when it hits your sold strike and you don't let it go all the way through, but you close it right here, what happens is instead of your 250 cost to close, that gets cut in half. And if you close it right here at your sold strike, it, according to options theory, it will only cost you $1.25. In other words, it will cost half of this 250. So we already took in 50 cents. That's ours to keep no matter what. Our cost to close is $1.25. So that leaves us with a 75-cent loss on this trade that went against us. Now, that doesn't happen too often. You know, as you can see, I mean, this is a really strongly trending stock. It's got good fundamentals. It's going up. You've got all these things going for you, but we just acknowledge, if we're traders, we acknowledge that the market is random. Anything can happen on any given day. You know, Jerome Powell could make some pronouncement one day and the market gets spooked and it really drops. And if your sold strike gets touched, we're out. We don't want to wait for this thing to go through all the way through. And the amount that you can lose is 75 cents. So if we can lose 75, but we're making 50, that means we make back this 75 cents. We make 50 cents of it back on our next trade. And the next trade after that, we're profitable. So it only takes actually 1.5 trades to get back to profitable. But here's the cool thing about that. You have an 80% chance of winning. So you're going to win. You know, options theory tells us, and this actually is borne out in our own track record, you're going to win on about 80 or actually a little bit better, because a lot of the time the odds are better. Plus we have the technical analysis going for us. You're going to win on a little bit better than 8 out of 10 trades. So if you're winning on 8 out of 10 trades and it only takes 1.5 trades to make up for a losing trade, you have a mathematical expectation of winning. And I cannot tell you how wonderful it is to trade knowing you have a mathematical option, you have a mathematical expectation of winning over the long term. So no matter what happens in the short term, you know that if you keep trading, you keep having these odds in your favor, it's just going to come out in your favor. This is all those fantastic, great big, you know, gorgeous casinos in Las Vegas and Atlantic City. They're all based on probabilities that actually give them less of an advantage, less of an edge than this does. So you actually have a better advantage than they do, and they built entire businesses that have been around for 50, 60, 70 years based on probabilities that are not as good as what you have right here. So you know, with this kind of mathematical probability of winning and how little it takes to make up for a losing trade, you know that you're going to be making money over the long run. And this is why people love this, and this is why people stay with me. So I want to make this timely, so let's just take a look at some market influences likely to drive direction over the next several weeks, so we kind of have a little bit of an idea of which direction the market's going to go. So The big one is inflation reports and how they affect the Fed. So we've been watching these really closely. We had a couple of big ones come out this last week. So the consumer price index was a little bit of a surprise to people. And that just came out on Thursday, and prices were up 2.9% in August from a year earlier. And it's returned to its highest level since the start of the year. So that was up from 2.7% in July and 2.3% in April. But it was in line with expectations, and look at this. So you can see how high inflation was right here. So that was about in the middle of 2022. So this is the consumer price index, the prices that we as consumers pay for things. So if you're looking at this right now, and you're looking at this chart of the consumer price index, and it was a stock, and you were trying to figure out which way the stock was going to go, what direction would you think it was going to go? We have this kind of resistance line right here, and the stock is hitting up against this resistance line. We have a little bit of a support line going down here, but look at the overall direction. The overall direction is to the downside. So until the CPI really breaks up and starts going up higher and gets over 3% and starts getting close to 4%, there isn't a lot of concern here, and that's why the markets didn't do terrible yesterday. So they went down a little bit. That was a little bit of profit taking. That's a little bit of natural up and down in the market, but we did not get a crash yesterday because this number was just not that bad. Also, earlier in the week, we got the producer price index, and that really surprised everybody to the downside. Final demand edged down to a -0.1% right here. So whatever happens in producer prices usually ends up in consumer prices a month or two later. So we're not super worried about the consumer prices and consumer price index because the producer price index is pretty tame, going down. This is actually deflationary. So this really surprised a lot of people, and I guarantee this is music to the Fed's ears because this is going to open the door for a rate cut this next week. So the other big thing that we have that the Fed's looking at really closely is job growth. So if you guys caught this news this past week, this was absolutely huge. The Bureau of Labor Statistics came out with this analysis that they do they always come out at this time of the year for the previous year. And they found out that the US added 911,000 fewer jobs over the last 12 months that ended in March. And they only had 1.79 million jobs to start off with. So this reduced the jobs by over half. And the Fed really takes a good look at the labor market because they want to know how that refers to the economy. With 70% of our economy based on consumption, employment has a huge amount to do with how the economy is doing and what's happening. So when people saw this job revision, there was a lot of speculation. Economists went back and said, I think we were in a recession for part of last year. And we're still coming out of this right now. So this is why the labor market is so darn weak right now. And we also had a labor report that showed pretty dramatic revisions down for July and June. So this is, this shows a weakening economy. That's true. But what it really does is, as far as traders in the market is concerned, is it informs the Fed that it's okay to drop interest rates. So we've got this great big meeting coming up on Tuesday, and that's the FOMC meeting coming up on Tuesday and Wednesday. And the actual announcement comes out Wednesday afternoon, September 17th. That's this coming Wednesday. And the market expects a 25 basis point cut, but could get a 50 basis point cut based on some of this data that we just looked at. A weak jobs market, kind of tame inflation, nothing kind of getting out of hand. The Fed's kind of run out of excuses, especially if it's starting to look like we've actually been in a recession for some of these quarters going back over the past year. So we could get a 50 basis point cut. My suspicion, if I was to guess, if somebody had a gun to my head, I would say that we're going to get a 25 basis point cut, but the Fed's going to be talking really dovish at that meeting on Wednesday afternoon. And I think between a 25 basis point cut and the Fed being open to more cuts in the future, maybe another one this year, maybe in December, I think we're going to see this market go up. So I think the market might be a little soft. There might be a little profit taking kind of going into the meeting. We might be going a little sideways while people wait for the announcement. But I think after the announcement, I think it's going to be super, super bullish. So this is a really good market to sell put spreads in. And it's great. And you can also do long strategies, but if you really want some dependable kind of profits, weekly profits, where the deck is really stacked in your favor, I want you to try this strategy. It's actually really cool. So, so another really good bullish anticipation is the anticipation of third quarter earnings, which start in a month. They start in about mid-October. And unlike other recent periods, the revisions trend lately has been positive. So estimates for Q3 are modestly up since the quarter got underway, since the start of July. And earning estimates have increased for 5 of the 16 S&P sectors. And some of the sectors that are looking bullish, the estimates are coming up that you might want to take a look at, is tech, finance, and energy. And we're going to see, I think the market in general will be bullish, but I think those 3 sectors are going to have a particularly good time going into the next month or 2 or 3, or all the way into the end of the year. So this is also another bullish influence. Now, what's interesting right now, this is fascinating. So all of those, we've had a big green arrow over to the side. Let's go back just a little bit. So this arrow right here is telling you which direction we think the market's going to go with this particular influence. So the one negative influence is seasonality. So we look at September, and September is typically a weak month, and October is interesting because it's bifurcated. So the first half of October is typically very bearish. A lot of the time we see almost waterfall-like declines going into the first 2 weeks of October. And then October, after about October 15th or so, it just really climbs. Sometimes it just goes straight up. It's a great time to get long. And then November is one of the best 3 months of the year. And usually December is actually pretty bullish as well. So seasonally, September is typically weak. We go into the first half of October, which is even weaker, and then we get this huge bounce. Now, what's going to change that for us this year is this FOMC meeting. So if Powell is wanting to cut rates, if they want to be accommodative, they're going to loosen monetary policy. That's very bullish. So we could see a little bit of an early start to that uptrend into the later half of October and into November. So these are all bullish market influences. So if we have a bullish market, if the market is tending to trend higher, if we've got some bullish kind of influences, huge influences on the horizon, and we concentrate on the FOMC meeting and interest rates because they've been a big driver lately, but earnings are what ultimately drive the market. And we're starting to see some upward earnings revisions, and actually companies are starting to do pretty well. So that's all very bullish. So when we have that kind of a market influence and the market is wanting to push higher, are we going to look at put spreads or call spreads? We want to look at bullish strategies. And so in this case, that's put spreads. What are some stocks that we can be looking at where we could right now cash flow those stocks and make some money in the coming week or 2 weeks? Let's just take a look at a few. So this is CMI, this is Cummins, and look what they did. So this is a bullish pennant or a bullish wedge pattern, and that's where it's going. It's going up. It's got a nice upward trend, but then the stock actually runs into some resistance and starts going sideways. So that happens. Now, this is mostly, almost always, a very high percentage of being a bullish pattern. And where you really want to have your trigger for a trade is when this overhead resistance gets broken. We just saw that on a pretty good breakout. We're starting to see the MACD turn higher, the histograms turning higher, and we're starting to see that on-balance volume turning higher, which means people are voting. They're starting to buy more shares. There's more positive volume than negative volume, and we have this really great breakout. So a great play here, and we just initiate the play right here, and we're going to do it for the 19th. The expiration is going to be the 19th of September. That's just next Friday, just a week away, so that's just 5 trading days. And we're going to sell right here. These are $10 wide spreads, so you're going to sell the 390, and you're going to buy to hedge. You're going to buy the 380. That's a $10 spread. Usually we like our spreads a little tighter than that, a little more narrow, but that's all that's available on Cummins right now, CMI. So that's a $10 spread, and to get our 25% return, you would want to get a $2 credit for that. And that was what was available here. And if the stock goes back down to test this, so this should now turn in, this old resistance should turn into new support. So we have a little bit of a pullback, and we'll collect our $2 and then watch the stock just keep right on going. So this is a really nice setup. You can take a look at that. These are just some possibilities that are actually happening right now. Some really good ways to make money. Okay, here's one that we really like. This is the semiconductor index. This is the SMH. As you can see, it's sort of bottomed here. It's been playing with this support level. And then it's also got a resistance level up top. So what you want to see here is either a break of support or a break of resistance, and that's going to tell you which way this thing's going to go. As you can see, we've had a really nice uptrend right here. And when these things trade sideways for a while, this usually resolves to the upside, and that's what we just saw here. So we saw a break of this resistance level. That tells us that it's got another leg to go. Typical, kind of classical technical analysis tells us that if the range, the sideways range, was from 280 to about 300 or so, we've got about a 20-point range here. That tells us that it's got about another 20 points to go to the upside. So this should be a pretty nice run on the SMH. So what we do here is we go just below this new support. We sell the 297.50 put. We buy the 295 put to hedge. That's just a $2.50 spread, and we take in a 50-cent credit. And for just a very short amount of time, we're looking at a very sweet, very generous 25% return. Now, if you're an options trader and you typically bought options and you're used to getting, I like to shoot for a 50% return or 100% return, you can get those kind of returns, but it always doesn't work out. So you really have to offset that with some pretty big losses where you lose the entire investment on that. So people say, I'm a big time player. I really like to shoot for the fences. I really like to make, go for like 100% return on my options trades or whatever. That's fine, but take a hard look at your win ratio. Take a look at what you're really netting. So if you can net 25% with a high degree of consistency, when we get done looking at a few charts here, I'm going to show you what that turns out to. So this is another one. This is Goldman Sachs, the famous vampire squid, really famous on Wall Street. They're the biggest investment bank out there. Really nice breakout here, and they're actually retracing a little bit. Would expect this to come down a little bit, so we're going to sell the 750 puts. We're going to buy the 747.50 puts. Once again, this is a very bullish setup. We have a really nice breakout here, and we're going to get this 50-cent credit for just a very short amount of time. Expiration's next Friday, and you're going to get your 25% with a high degree of confidence, high degree of certainty. Other thing I really like about this strategy is once you put it on and you set your stop at your sold strike, you do not have to watch the play. So you don't have to be in there every day, hovering over it. You can go out, you can have a job, you can go out and do other things, you can spend some time with your family, you can recreate, and you can have these trades working really good in your favor. Most of the time they expire worthless, but when they don't, you've got a stop in place to get you out at the perfect point without you having to watch it. Here's another one. This is General Dynamics. Once again, really nice uptrend. There's been a big demand for defense in this country. There's a lot of conflicts going on around in the world. Right now, we're trying to help Ukraine. There's other things going on. So General Dynamics, a lot of the defense stocks have been doing really well. Once again, this stock retraced to support, their uptrend support line, and then took off. And when this resistance was broken, that's our indication to sell a new below support. This is now new support put spread. Once again, we sell the 322.50, we buy the 320, we get our 50-cent credit, and we get our 25% return with a really high degree of certainty. And this breakout is super positive on pretty big volume, big breakout for the day. We want to see that retracement. We want to take advantage of that retracement. And then this typically bounces and keeps right on going. So the things that we look forward to for the best spreads, the things that we look for is we want to see weekly options expirations because we want to be right on that perfect part of the time decay curve. We want to get that really rapid time decay, but we also want to collect a lot of money for our sold options. And you do that by by specifying exactly how much time you want. We can do that with weekly options expirations. We want tight spreads. On the big indices, sometimes we do $5. We want to really shoot for about $2.50 or $1 even. If we have $1 strikes, we'll do a $2 spread, and that works out really, really well. You want narrow bid-ask spreads. If something isn't traded really heavily, your bid-ask spread will be too wide, and it's too hard to make money on that. So we look for something with a lot of volume that has narrow bid-ask spreads. One of the big, any of the big stocks that have a lot of options traded on them are really good candidates. I like to do stocks that are over $100 a share so we can get more premium. And we want stocks that are headed in the general direction of the market to give us the highest odds of winning. So a question that a lot of people ask is, okay, if I can make 25% and I can do it fairly consistently, what can I make on this strategy? Well, you're not going to make 25% every single time. Sometimes there's losing trades. We have to factor those in. We don't use all of our account for this strategy because we want to hold back a little bit of money for buybacks, to roll things out, to make a bad trade turn into a good trade. It takes a little bit of cash to do that. So what could we make on this realistically in the market? So do we cut that 25% target down to 20%? Is it more realistic to look at maybe 15%? I think anybody doing this, even if you're really lazy and unlucky, and even if you really haven't done too well, I think anybody can do a consistent 10% every 2 weeks doing this. I don't think that's a problem. But just for the sake of an example, and just for the sake of the skeptics out there, I'm going to cut this all the way down to 5% every 2 weeks. Now, keep in mind that we're cash flowing this every week, and we're typically in these trades about 9 days. So it's less than 2 weeks. We're actually turning our money faster. And I think you can do way better than 5%. But let's just take a look. If you consistently did 5% every 2 weeks, what your account would compound into. So if you started with $10,000 and you got just 5% compounded every 2 weeks for 2 years, this is what it would look like. At the end of 2 years, your account would turn into $104,000, and you'd be bringing in over $10,000 per month. And if you're looking at this chart right now, you might be saying, well, Peter, nothing ever works out that way in the real world. I mean, there's ups, there's downs. No return in the world, in the real market of trading, is ever going to be this consistent. And I would say you're absolutely right. I completely agree with you. What this is actually going to look like is something more like this. You're going to follow this line because the probabilities tell us that it's going to, and the probabilities don't lie over time. It's just over time, you are going to just kind of follow in generally this line. Some weeks you're going to be better than others. Some weeks you're going to kill it. Some weeks you're going to have a little bit of a loss. But over time, the probabilities in the options model and the probabilities of doing this, all other things being equal, this is what your account's going to look like. It's a really good way to grow your account over time. It's a really good way to create some incredible cash flow. That's why I've been doing this. This is our main bread and butter strategy. I feel really good about turning people onto this, and people have stayed with me. We've been in business now since 1999, and people, believe it or not, have been with me all that time. People come on board and they don't quit. I put together a really, really great package, a really good strategy to make this, really easy for you, really easy to get into and understand. It's called The Winning Secret. The education part of this is a 161-page downloadable ebook. It's got charts, pictures, graphs, everything you need to know to start profitably and stay that way. If you want to watch a video, I've got 10-chapter video series. They're short, to the point, they're entertaining, they're fun. You'll really understand what's going on. I actually show you the charts. I show you where to get in, where to get out, when to let it go to expiration. You'll also gain access to our archived tutorials and our videos, everything. The education part of this, you have access to all new editions for life as an owner of this package. And then this is where the rubber really meets the road. This is our subscription service. Comes out every Tuesday night. I provide you with 2 trades. One of them is a more conservative trade that you can do in a Roth account and see this tax-free buildup, get a tax-free income. And that's usually on an index. And then the other one is on an individual stock. So you have 2 trades every week. So that gives us 2 paydays every Friday. Really fun. This is the subscription. This is about $97 a month, $99 a month right in there. But I include your first month with this package. So I want to let the market pay for your subscription and the market pay for your education. We all know that the best way to learn is through one-on-one instruction. So I'm going to have Deanna go over this. Once you become a subscriber, she's going to show you how to take advantage of it, where to go, how to get the information, how to place your trades, the best broker, how to set up your columns so that you know how to get the right information to see this, like that delta and that probability of being out of the money. She really holds your hand and walks you through it. And this is what sets us apart from others, is we really give you, and this isn't a group presentation or a webinar, this is live one-on-one, so you can ask your questions, and she's really good at getting you set up right. And then this is really the coup de grace. This is really, really special. So we have options coaching. We have Alicia, she's so good at this. We have 3 session packages. We have 8 session packages. People have gotten back-to-back 8 session packages, like 5 or 6 of them. Is it because they have a hard time figuring out what a call or a put is? No, it's because Alicia is really good at making people money. She's really cool. She's got a great personality. She graduated at the top of her class in finance in the university in our little town that we live in. And it's just been a boon having her on board. She's the one I go to when I want to bounce off new option strategies. So we're going to include a 1-session coaching with her. We hope you go on for more, but this will do you so much good, learning how to actually go in there and cash flow, what to do. She can set you up, and you guys can go out there together. She can see your computer, and you guys can go out on the Thinkorswim platform and find some really great trades. So you get all of this. It's at a really, really great price that I put together. Go to thewinningsecret.com to see what we're offering this at. We've sold this for thousands of dollars in the past. You're going to get the coaching session. You're going to get the orientation. You're going to get your first month free to the subscription, and you're going to get all the education for a really low price that I know anybody can afford that really wants to do this. So that's the best strategy I've ever seen for stacking the deck in your favor. Even if you're a little bit lazy and unlucky at times, I think you're going to find yourself to be very profitable and very lucky doing this. So I hope you learned something. It's really been our bread and butter. It's done really well for us. I like making people money. It kind of makes us friends, and we tend to stick together for a long time. So I don't know if we have time for any questions, Anthony, but if we do, this would be a good time to ask them. And then we can go on from there.
Yeah, if anyone has any questions, please feel free to ask right now. I really like how you presented everything real like easy to understand for everyone. It seems like at all levels. So audience, please, yeah.
I appreciate that. I think some people make this stuff a little bit more complicated than it needs to be. And the parts that are complicated, like the delta and the probabilities, I go over that with you, and I explain it not only in the education, but really give you my thinking behind each trade. You know, the direction things are going, which way the market's likely to go, why we're trading, why we are, and then really good write-up on each trade. You know, you get to know how we think and why you should do it this way. And I also have, if we need to get out of a trade early, I have text alerts and emails. We don't send them out too often because usually this just works, but if there's some action that you need to take, I let you know.
We have time for, I guess, one question real quick. What if you don't have options knowledge? Carlos is asking.
Well, you know, that is actually what the educational package is for, and I start at the very beginning, and also on the website. So our website is wealthbuilderpublishing.com, and you can find that by going to thewinningsecret.com. That's the name of this strategy. We also do some other things. But at wealthbuilderpublishing.com, I've got a really, really outstanding free options course that you can go to and really learn about everything about options, how they trade, the strike prices, the expirations, the probabilities, all of that. But I also include that in the educational part of this package. So if you sign up for this package, even if you've never traded an option before, you'll get some really good education and some really good hand-holding. And you'll get good hand-holding from Deanna here in the yellow, and also Alicia. They're great teachers, and it's one-on-one. And there's no stupid questions. I mean, just ask away, and we're really happy to answer.
Well, thank you so much, Peter. If there's any other additional links that you want to share, maybe you could include those in the chat as well.
Yeah, let me see if here's a little bit of chat. And I'm going to go
the winning secret in their .com. I didn't know if there was anything else that you wanted to put in. And
well,
I put your homepage.
Yeah. Wealth Builder Publishing. And I'm just typing that in now.
All right. Thank you,
And
Peter. If it's okay, as you do that, I'm gonna introduce our next guest. Thanks, Peter. Your strategy, yeah, your strategies are a breath of fresh air for anyone looking for a simpler, smarter way to trade. Thank you, Peter. We really appreciate you stopping by today.
Thank you, Anthony. I appreciate you having me.
Thanks so much. Coming up next is Silas Peters, founder of T2 Markets and T2 Trade Lab with over a decade of experience across institutional desks in the futures options space. His session is titled Escape the Chart Hopping Trap, Discover the 111 Method for Stress-Free SPX Income Trading. This is a fully rules-based income strategy designed to work in just minutes a day while helping you know when to trade and just as importantly, when not to. Well, so important. Let's welcome Silas Peters. Silas, you there?
Good afternoon. Test 1 2 3. Can you guys hear me okay?
Yes, thank you.
What's going on, Anthony? How you doing?
Hey, we're doing really good. We apologize, we're a few minutes behind, but we'll give you that time back.
Okay, no worries. No worries at all. Just let me know when I'm ready to rock and roll.
Oh, you could start.
Okay, perfect. All right, I just want to do a quick audio visual check with the rest of the crowd here. If you don't mind, just type a 1, a 2, a yes, a hello, a hi, hola. If you can hear me and see my screen, please. I think we're good with the Traders Corner team. Okay, perfect. Thanks, Jack. Thanks, Carlos, Chris. All right, guys. So first off, I want to say thank you, welcome, happy Saturday. Thank you to the Traders Corner team, Anthony, Marie, for having me on. Always appreciate the opportunity very much. And like Anthony said, we're going to talk about some SPX income trading. And I just caught the back end of Peter's presentation. It sounds like we are doing a lot of the similar things as far as it relates to options. And so that's it is a breath of fresh air because it's something that actually works. And we're going to talk about this very simple method and strategy, even if you've never traded before, and even started with a small account. So my name is Silas Peters from T2 Markets. I'm going to show you how to build daily income from SPX options without guessing direction, without spending hours at the screen, and without needing any prior trading experience. And by the end of this session, you'll see how traders just like you, beginners, burnt out veterans, even full-time professionals, are now collecting 3 to 5 income checks a week using a rules-based strategy. It literally only takes about 10, 15 minutes a day and has proven itself across thousands of trades over and over across more than a decade of data. Now, I want to set some expectations. This is not some get rich quick nonsense. You're going to discover a real proven strategy to build consistent income using SPX options. And it's the same approach that I use every single day in my own accounts. Now, you're going to also see how to potentially generate wealth or build wealth from SPX income options while avoiding the high narrative traps, high risk gambling, not from wild bets, but from a methodical system using repeatable trade setups and mechanical rules. Now, what's great about this is this works without needing an audience, without selling anything, without running ads, without staring at charts all day. There's no special skills needed, no selling, no dancing on TikTok, no massive risk, just one repeatable skill that pays. And as Rob Schneider once said, you can do it. And I know you can. I know you can if you put in the work. Now, are you in the right place? Well, if you want to build an online income and need a process you can trust, then you're absolutely in the right place. Now, I'm going to go through and talk about why I think this is some of the best income or the best income source ever. This is number one. SPX trading is a solo sport. It means you don't need to answer to a boss, find clients, or chase customers. And once you learn how to do this properly, no one can take your income away from you. Reason number two, when you learn what I'm about to cover, you can make money if the markets go up, down, or sideways. And it doesn't matter. We're not trying to predict the future. It's about collecting income from it. Number three, there's no building websites, no building funnels, no social media dancing. You master one skill, and I'm going to show you how simple that can be. And this is great. This is something that is 100% recession proof. Mobile ready. Yes, it works in recessions, booming bull markets. It does not matter. And you can even do it from your mobile phone. It's also president proof. Left to right, blue, red, green, brown, doesn't matter. The income system works regardless of who's in office. And then number 4, just 10 to 15 minutes a day. Can you ask yourself this? Can you spare 10 to 15 minutes a day? It's all it takes to place your trade and move on with your day. There's no second guessing, no stress, just results. And then number 5 here, the SPX income system is easy to learn. There's no more zombie trading, no more chart hopping, no more stacking, 27 indicators, just a clean mechanical approach that flat out works. If you simply do what I do, you'll start getting the same results that I get. It's really that simple. So you ask yourself, what should we trade? I traded everything. Stocks, futures, Forex, even books. Yeah, I used to trade books on Amazon, and it required a lot of effort, and the margins were extremely thin. But only one market gives me the speed, liquidity, and reliability that I want. It doesn't matter if 1,000 of us are doing the same thing, and that is using SPX options. And this is one of my personal favorites, and it's the core of the entire income system that I'm going to walk you through here today. In fact, I like to be in good company, like that of Uncle Warren. Warren Buffett, you know who he is, who sold billions of dollars in cash secured puts during the 2008 crash. And this isn't just some brand new idea. This is just rarely executed with the kind of precision that I'm about to teach you. And this system right here is fairly new. You couldn't do this, couldn't trade this way that we're about to teach you 2+ years ago. But it's become one of my favorite strategies. And that's how powerful and how timely all of this is for you. Now, quickly, a back story on me. Who am I? I'm the founder of T2 Markets, Blue Marlin Advisors. I'm an entrepreneur, risk taker, full-time trader. I'm a speaker, author, educator. I've worked at the Board of Trade, family office, 15+ years of experience in the markets. But most importantly, I am a husband. I am a father to 2 beautiful girls, and I'm a mentor to thousands. And this right here is what makes it all worth it. Okay, my obsession is helping serious traders get real results. Now, before we dive into the theory, I wanted to quickly cover some stats on SPX. This is the instrument we're going to be focusing on. I want to talk about volume. As the data of this graphic, SPX has seen a huge jump in daily trading activity. That means more opportunity, better fills, faster trades, and the volume continues to explode, which means liquidity, which means opportunity for you and I. Is everybody here familiar with SPX? Type a Y, type a yes. Everybody here familiar with SPX? So what I'm going to do now is break down SPX and SPY. Why SPX over SPY? Well, here's the deal. SPX has no dividends, while SPY pays a dividend every quarter. SPX is European, which means no assignment risk, while SPY is American style risk. SPX settles in cash, while SPY settles in shares. SPX ceases trading daily at expiration. And we like this. We like this to the fact that there's no assignment risk and that it settles in cash, okay? And so SPX options gives us a unique trading edge that we will use to fully exploit. And that makes it safer for income traders like us. Now, if there's a better, faster, or easier way to generate real income online, then I haven't found it. And I'm sure we've all looked at some point or another. Now, before we dive into this, I'm going to give you my no BS strategy. You're not going to make $10,000 a second next week. This is not, there is something for sale at the end, but no, you don't need to buy it to benefit from this training. I'm a trader first, but what I'm about to show you is one of my favorite ways to make money in the markets right now. And frankly, I don't see that changing. Now, there's 3 core secrets that we're going to cover that change everything. Number 1 is why traditional trading is broken and how we aim to solve it. Number two is why most traders struggle and how the market is rigged against them unless they know what I'm about to show you. And then three is how to build an account that grows while staying safe. Smartest way to balance risk and reward for maximum growth. So let's start here. What's the real difference between trading and investing, and which one actually matches your goals? Well, we know with investing, it's a slow, kind of passive and often uncertain path. You kind of hold and you hope. With trading, you take control. You take control, but you also take on more risk if you don't have a system. And so SPX income trading combines the best of both, the control and speed of trading, with the safety and consistency of a well-managed investment process. We're talking rules-based, low screen time, low stress, and it's perfect for those who want steady wealth without waiting years. And here's the truth. The market is designed to take your money unless you know how to play the game. And today I'll show you exactly why most people lose and how to flip the script and finally trade like a professional. Now, stats don't lie. You've probably seen something like this before. Over 80% of retail traders lose money. Most blow up their accounts in 3 months or less. Most investors don't fail because they're dumb or they're stupid. They just follow bad strategies and they've got their risk to reward flipped upside down. This is documented reality. And so a lot of this probably sounds familiar. Who is bogged by paralysis analysis? Constantly adding and removing lines, tools, indicators, just trying to, quote unquote, see if this works. Maybe you're fumbling entries, exits, targets, taking trades that look good in hindsight but keep ending in losses. Or you bought yet another course that's impossible to replicate. You're thinking, maybe this time I'll get it right. The system never delivers. Maybe you're zombie trading. Come on, guys. Who is this familiar with anybody? Scroll through chart after chart, hoping the next one is the one. It's exhausting and it doesn't work. Or maybe your results are just mediocre. Maybe you wiped out a few accounts, you YOLO'd a few trades. You're not alone, but it doesn't have to stay this way. Or you're frustrated because it's not working for you, except for the occasional lucky win. Nothing feels repeatable, no consistency. Well, the real reason most people lose money is because they're winging it, making stuff up as they go along. That's not a system, it's a gamble. Your worst enemy in trading, again, isn't the market, it's your emotions. History proves it. Dot-com bubble, 08 crisis, even the 2020 crash, most traders panicked and lost, but many profited. Why? Because they followed the clues and they followed the rules. And so that stops today. No more guessing, no more hoping, no more hype. This is what you do instead. One simple strategy, master it, trade it the same way every day like clockwork. A rules-based system that's been proven over time, back-tested, repeatable objective is how you create consistent income without emotional whiplash. Retail traders, as you guys are well aware of, are always last to act unless you have a system to guide you, and that is exactly what we're going to do today. No more timing tops and bottoms. You collect income while everybody else argues about direction. And the best part, it works in bull markets, bear markets, sideways, chop, doesn't matter. This income method helps you build daily gains with minimal effort. It removes the emotional decision making. You're not panic selling, chasing green candles. You're following a plan that's already proven to work. And it compounds over time. Small, consistent wins stack up fast, and that's how you build a real trading account without the burnout. Now, I don't want you to take my word for it. I'm going to show you some data. Okay, I want to show you some data so you can see it with your own eyes. Now, this system is based on rules. Rules can be back tested. What you're looking at here is 10 years of data over 2,000 trades, all from a single setup. This isn't cherry pick. This is every single occurrence of the pattern over a decade, traded mechanically, no discretion, just like a factory. The same setup, same outcome, same process. It either works or it doesn't. We don't guess. And yes, this is on the S&P 500. The ticker is SPX using 0 DTE options. Now, we call this core setup the tack and turn. It's a swing trade structure designed to profit when price taps the zone, then reverses. Simple, repeatable, and powerful. You don't need to be perfect. Just follow the rules and the results speak for themselves. And you'll see setups like this appear every single week, and we take the ones that meet the rules and then we leave the rest. And here are some examples. Trades in SPX. Trades in SPX. $5 return, 52.8% on the option. Here's one on Hershey stock, just to show you that, yes, we can trade other stocks, futures. Here's another one, a $15 move in the stock, a 91.8% on options, 90% on options, 90% on options, 91.4% on options, 93.3% on options, 84.4%. Slower trade, we still come out ahead. This is return on capital, 98.3%. Here is one where we have multiple setups. 58, 9.6, 11.5. Here's a 95% return. This is what a high probability system looks like when it's doing its job. And our students are crushing it. They're not just participating, they're crushing it. And these results are coming in nearly every single day because we're trading this every single day together. So now I want to get to part two. This is where we go a little bit deeper and talk about why traditional trading is flawed and the fix. Let's talk about what's broken with traditional trading and how to fix it the proper way. So most traders are stuck in a flawed model, trying to predict price direction, time the perfect entry, micromanage exits, and it's exhausting. And here's the truth. Traditional trading is 100% dependent on picking the right direction. You only get paid if you nail the move, which is rare and hard to replicate. It doesn't factor into volatility, market conditions, price behavior, and that's why most traders leave huge gains on the table because they're flying blind. But here's the fix. We trade with the market, not against it. We're using modern tools, new option explorations, and repeatable setups, and we do it without getting emotions involved. We don't need to be right on direction. We don't need the market to make a huge move, and if it does, we just get paid faster. No overcomplicating. This lets us get paid without perfect timing, and that's the edge. And it's a game changer once you understand it. Now think about this. If you knew the market was about to make a large directional move higher, you'd buy, right? You could profit without guessing direction. Would you take that trade every time? Of course you would. Now, it sounds obvious when you think about it, but you'd be surprised how many people don't, and they actually just miss out on the opportunity altogether. What if you could profit without timing a move or picking the direction, and even if you did, you get paid a little bit quicker? And that's what this system is designed to do. That is what we're going to learn today. So whether SPX goes up, down, sideways, you get paid as long as your setup and risk profile are correct. You get paid without picking the right direction of the market. It's a simple, optimized process that works with market movement instead of trying to fight it, which I know plagues people time and time again. So how do you actually profit from this? Well, let's walk through the exact mechanics. I'll show you how this works time and time again. Now, I want to compare this to how most traders think profits work. In traditional trading, you only get paid if you're bullish and you buy and the market goes higher. And the move has to be large enough. So if it makes a huge move, great, you get a big win. But if it barely moves, you get nothing. Or worse, you get long and the market reverses, you lose. So now you got to be right about direction and timing. And the market has to cooperate with a large enough move. That's a lot of ifs, a lot of ifs. But with income trading, it's completely different. You get paid even if the market moves slowly or not at all. The market can move slowly, it can move sideways, and it can even go against you, and we still get paid. It's like getting paid to wait. Small moves, we still win. Sideways chop, we still win. Big move in our favor, great, we win faster. The only time we lose is when the market moves against us too far and we're still in the trade at expiration. And that's 100% okay. We'll still have wins and losses because it's part of trading. And get this, a perfect entry is not needed. Quit wasting your time trying to find the perfect entry and then trying to find the perfect exit. We know that the loss is even predefined. We know exactly what the worst case scenario is before we place the trade. It is so refreshing. No surprises, no disasters, no margin calls. So let's walk through how we profit, okay? This is where this style of income trading flips the script on everything you thought you knew. A trade doesn't need to go big to be profitable. In fact, I don't care if it moves a penny. Doesn't even need to move much at all. We're not relying on speed, direction, timing, just probability and time decay. Okay, we're not using stop losses in the traditional sense. So a trade that goes against us early can turn around and finish in profit by the end of the day. And believe me, it happens time and time again. Okay, the market can go up, great. It can go sideways, or a little up, not as great, fine. Go sideways, even go against us, and we get paid. We get a move in our favor. Beautiful. This hits our max profit quickly, and we're out. Small move, no problem. Still a 100% win. And then even if a tiny move, just 1 penny, 1 cent in our favor, can deliver a full win. And that's the edge of being at the money with the spread working for you. And even if the trade moves slightly against us, we can still close for a partial win. Anywhere between 0 and 99% of max profit is still on the table. And that's a good feeling to have when you're in with real risk capital. Trade didn't work out, we already know what the loss will be. It's a risk-defined strategy. It means we can't lose more than the cost of the spread. So, for example, if we do a $5 wide spread and we receive a $2.50 credit, the most we can lose is $2.50. So I can go walk my dogs, I can go play golf, I can go swimming, I can go do whatever I want to do. Worst case scenario, we let the trade go all the way, but most of the time, the market gives us plenty of time to adjust, manage, or simply let the probability play out in our favor. We're not trading naked options. We're not holding for weeks. We're taking quick, controlled, structured trades and stacking small wins. The real power isn't just the wins, it's the confidence. To know exactly what to do, when to enter, when to exit, and most importantly, when to stay out. And that's why traders who follow the system don't panic. They're not glued to the screen. They place the trades, manage the position, and move on with their day. Don't overthink it. The rules are the rules, and when you follow the system delivers. So I want to zoom out here, 30,000 foot view of how this works. First, we're going to identify what we call a pulse bar. Next, we wait for a clean break of that bar. Then we wait for what's called a profit package. Finally, we manage the trade or we let it expire for max profit. That's the entire model and how we do this in less than 15 minutes per day. Congratulations, pat yourself on the back. You have a profitable online business. And so what do you need to run this strategy? Well, not much. Any charting platform works. I personally use TradingView, and this is a platform that we have pre-built indicators and workspace templates for. But you could technically use any brokerage or firm out there that has basic charting. And for options execution, I prefer Tasty Trade or Thinkorswim. You could use Interactive Brokers, E-Trade Fidelity, all that stuff, as long as you can place a basic option spread, okay? So first one here, pulse bar. We identify this in the first couple hours a day. You don't need 14 indicators or some NASA terminal. This strategy is built on clean charts and one visual cue, which is the pulse bar. Less clutter equals more clarity. So what is a pulse bar? Let's break it down. Pulse bar is a 30-minute candle that closes in the top or bottom 10% of its range. It signals strength, bullish, bearish, in a way that's easy to spot and act on. And here's what it looks like. A bullish pulse bar equals a close in the top 5% of the range, okay, top 5% of the range like we see here, and higher than it opened. A bearish pulse bar closes in the bottom 5% and lower than it opened. So one glance, one condition, and that's your setup trigger. So again, very specific characteristics, closing in the top or bottom 5% of its high to low range, okay? And so we know that the high to low range is what? 100%, right? High to low, it's 100%. So all we're looking for is a close in that top 5% or a close in that low or bottom 5%, okay? Bearish pulse bar, bullish pulse bar, not very difficult. So if you're doing this manually, that's fine. It's very simple. Just get the Fibonacci tool on the platform. It's available on every platform out there. Set it to show 0, 5%, 95%, 100% levels, and then measure the high to low of the first 30-minute bar. Okay, or not the first 30 minute, the other 30-minute bar. If the close lands in the top or bottom 5%, then congratulations, that's your pulse bar. So can we automate a pulse bar? Can we automate it? The answer is yes, we can. Because pulse bars are a mechanical rule, we can have them actually coded into TradingView. Okay? Because it's rules-based, automation is easy. And my team and I have already coded tools that detect pulse bars on TradingView. And we don't just stop there. We have additional filters like ATR, time of day, directional bias, swings, and so you're only seeing the cleanest, highest probability setups, none of the other noise. And they're visually marked, and they're also automated for you. In fact, this is a sneak peek glance at what it looks like here on TradingView. Visually marked, you'll see dots, triangles on the chart, labels, projected break zones, calculated in real time, no guesswork, just execution. This is TradingView, so it's browser-based, simple, desktop, laptop, phone, we've got you covered. Pretty slick. And so you're probably thinking, this is cool, but what about performance? Well, since this is a mechanical-based program, we can run backtesting and get some data. Now, although we have a nice, smooth upward sloping equity curve, you can see that we still have maybe some lumps and bumps there in the middle, okay? But when we've added some additional automation to the software, we're able to increase or enhance that equity curve, okay? And this is what it looks like. We now have a much smoother equity curve. And this right here, trading this style, this method gives you a proven edge. If you don't have a proven edge in the markets, honestly, you don't need to be in the markets. You're probably saying to yourself right now, Silas, if this is so good, then why don't you just trade it yourself? And I get this all the time. Why not just trade it and keep it to yourself? Well, you want the simple answer? I do trade it every single day when I'm at my desk, and that is most every single day. I trade the system live with my own money and prop capital in real time. And what you're learning here isn't theory. This is not some recycled fluff. These are the exact strategies that we use in our own accounts. A screenshot from Tasty Trade. Live real money accounts, not a demo. Tasty Trade doesn't offer fake data or paper trades, so what you see here actually happened. And you'll see all these open positions here using the same pulse bar strategy I've been walking you through. And the edge applies, guys. I'm going to tell you again, the edge applies across SPX, futures, even stocks if you wish to adapt it. Originally, this was developed for a similar strategy around futures and stocks, but when 0 DTE SPX options came along, it changed everything. Same rules apply, bigger edge, more frequent payouts. And look, our students are having and replicating the same success. I love trading, but I also love teaching. Helping others master this system and others is part of what drives me. I know what it's like to struggle with bad information and useless strategies. And so now I'm able to help others avoid that pain and speed up their process. And we've got these success stories that come in every week because we're trading this every single week. So let's get back on track for a moment, because by now you've seen the edge, you've seen the proof, and the pulse bar setup in action. The step one is simple. Okay, wait for a pulse bar in the first 2 hours of the day. You already know what that is. It's a 30-minute candle that closes in the top or bottom 5% of its range. Step two is where the money's made. We place that profit package. That's our active money credit spread. And now that you know the setup, let me show you exactly what a profit package is and how to place one. So, what is the profit package? It's a trade essentially with two parts. Think of this kind of like a game. Player one sells an in the money option, player two buys an out of the money option. Same time, same direction, and specifically, it's you're selling one strike in the money and you're buying one strike out of the money. Simple credit spread structure. And this is what it looks like on a real options chain. You're selecting two strikes, one slightly in the money, one slightly out of the money. And that's where we get our credit from. Okay, you'll notice the strikes are $5 wide, $5 apart, then that's our defined risk. And so breaking this down, it means our ITM in the money means the option is already profitable. It's in the money at the moment of entry. OTM is out of the money, means it's not yet profitable. Now, by combining both, we build a position that gives us a net credit and cap risk. Don't overthink this. Use your strategy selector on your platform, choose vertical spread, and then pick your strikes. It's done in seconds. This is an example of a bullish profit package. You sell the higher strike put, you buy the lower strike, and you collect a premium for placing that spread. This is a bearish version. You sell the lower strike call, you buy the higher strike call. Same idea, just flipped upside down for a downside expected move. Logic is the same, the execution is just mirrored. So you say, well, which way do we trade? Well, it's quite simple. If you see a green pulse bar, you're bullish, you place a bull put credit spread, usually on the right side on the option chain. If you see a red pulse bar, you're bearish. You place a bear call credit spread on the left side of your chain. And that's step two of the SPX income system. Place the profit package. And now that you've seen how simple this is, whether you do it manually or you automate it with a platform strategy builder, you walk away. This is the best part. You walk away. You don't stare at charts. You don't micromanage. You let the trade do what it is designed to do, because the edge is already baked in. Time decay is working in your favor, and you define your risk up front. Let the trade do its thing. Walk away. No babysitting. No micromanaging. And here's what most traders miss. We only lose if the trade finishes in the money at expiration. That means we've got the whole day for the market to turn around, pull back, or just go flat and still come out with a profit. And so that's how trading should feel. Stress-free, mechanical, confidence in every position. You follow steps, manage the trade if needed, and let the system do its thing. No panic, no overthinking, just results. So to recap, you walk away, let the trade do its thing. You're not watching charts, you're not second guessing. The system is doing all of the heavy lifting. Now, step four is this: rinse and repeat. It's not about chasing perfection. It's about taking the same high quality trade setups day after day, just like a production line. So now we get into part three. Okay, part three, and that's how to build an account that can grow while staying safe. This is the smartest way I know how to balance risk and reward for maximum growth without taking dumb risks, without needing huge accounts, without guessing your way through trades. As I keep saying, this is one of the most powerful short-term strategies out there. It's fast, flexible, semi-automated, and lets you build an account without years of waiting or watching charts all day. And again, as I've said again, time and time again, it's not just working for me. We've got students that are crushing this every day. Same tools, same results. The only difference is how consistently they show up and how quickly they take action. So I've shown you how this works, but now I'm going to use numbers, because it isn't just about theory, it's about repeatable outcomes, and this is where it gets fun. What I'm about to show you is not a promise, it's a math lesson, okay? Think of this as a demonstration of what's possible when you follow the rules consistently for 10 to 15 minutes a day. So let's say that you start with 5,000 bucks. You risk 5% per trade because we're only trading SPX and we're using defined risk strategies. For every three winners, we assume one losing trade and one no trade day. It's a realistic rhythm, even if you're only trading mornings. So week one, win-win, loss, win, no trade, three winners, one loser. That gives us about a $500 gain on a $5,000 account, almost a 10% return. Okay, not bad. Week two, similar setup. This time you gain 550 bucks, up just shy of 10%. Week three, another profitable week. Week four, another profitable week. You're looking at $2,300 or a 46% gain, okay, over a 1 month trading period. So you started with 5,000 bucks. You risked 5% per trade, won three, lost one, no trade per week, made about 2,300 bucks for the month. Now it doesn't end there. Once you've got consistent profits, you start to compound. You know the quote, Einstein, compound interest is the eighth wonder of the world. And this is where it starts to get fun. Instead of starting month two with $5 grand, now you're starting with 7,300 bucks. Raising position size 5% of your growing accounts, your risk per trade now increases, and so does your profit potential. Now, I'm not going to sit here and bore you walking through trade by trade by trade, but let's fast forward and see what happens. Without doing anything different, your gains start to accelerate. Month two brings in 3,300 bucks. By month six, your balance is sitting around 49,000. By month 12, 484,000 and more than $150,000 in monthly income if you're compounding aggressively. $5 grand, risking 5% per trade, 75% win rate, building a $150,000 a month income in 12 months. Now, before we get all carried away, let's be clear, that's a math lesson. Could you build a substantial income starting from $5 grand? Sure. Is it likely? Not without consistency, patience, and time. But what matters is this. What matters is this. Even a fraction of that could change everything. Would you admit that that would be a game changer? I mean, I'd have to check your pulse if you said no. So we know the math works, but does this strategy actually work? Well, you've seen screenshots from our live Tasty Trade accounts. No demo mode, no faking fills, real trades placed in real time. This isn't winging it, guys. This is rule-based, back-tested, forward-tested, sideways-tested, live-tested with real capital across thousands of trades over years of various market cycles. And it's extremely flexible. While SPX is my go-to, you can adapt this to futures. I do trade this on options, futures options, ETFs, even stocks, as long as they meet the basic setup criteria. But for simplicity's sake, SPX is still the most elegant version of this system. Remember, this is one of 7 strategies we have in our back pockets. Again, another one, a clean morning setup. We had a pulse bar forming. Again, these set up damn near every single day, and it is the most systematic and mechanical trading strategy that I think I've ever come across. That requires no stress, no emotions, no discretion. And it's not just me doing this. You're going to notice a theme here. Small risk, steady wins, real money, using the exact same process that you are seeing today. This is not cherry-picked unicorns. These are students following a mechanical system. And since you're here today, I want to help you get your own success. You've learned how to spot pulse bars, you knew how to place profit packages, you know how to manage trades and stack wins, and how to grow your account safely in maybe 10 to 15 minutes a day. The question is, what are you going to do about it? It's decision time. You've got the strategy, you've got the rules, you've seen how to make it work. What to do next? Again, this isn't some theory session. This isn't a watch and wait situation. This is about execution. You can keep watching webinars and chasing YouTube videos. Nothing changes. But if you take action, you've got a real shot at building something powerful. Think about this for a second. Where will you be in 12 months if you keep doing what you've been doing? Will you have the same results you want? Will you have the consistent income machine working for you? Or will you be stuck guessing, over trading, and hoping? Right now, you got 3 choices. Do nothing. You close it down, walk away, stay where you are. Green door number 2, try to piece it together yourself. Rewatch this, take notes, maybe eventually get it working. Or 3, let me help you. Install the system, get it working in days instead of months. Trade with clarity and trade with confidence. I'd love to help you so you don't have to figure this out on your own. Today, I've shown you one piece of the puzzle. Now, there are 7 other money-making patterns that we use that will complement just what you've seen. And if you want support while mastering this, then I'd be delighted to help you. This is my complete rule-based trading system that lets you potentially generate consistent daily income using pulse bars, profit packages, and our mechanical entry and exit rules. The system works, but it works even better with guidance and feedback. And we pride ourselves on our student success rates. And if you're the right fit, then I'd love to help you get there. But the program is not for everybody. I'd honestly rather you not join if it's not the right fit for you. And here's what I mean by that. This is for you if you want a structured, rules-based strategy. You don't want to watch charts all day. You want to trade part-time without being glued to your screen, and you're ready to follow a process and stop guessing. This is not for you if you want overnight millions. You're addicted to meme stocks and moonshots. You don't follow rules, and you prefer trading based on feelings. If you can't commit to a simple process, then it's not for you. So is everybody still with me? I've got a couple more minutes here. If you're still here, still listening, I've got your attention, then this is probably something that you're looking for. So this is how you can get started today. Get started today with what we call the SPX income system. This is my complete self-paced course that walks you through everything from the basics to automation to risk management to mastering every single trade type, including the one we just covered. It's designed to take you from zero to confident execution. First thing you're going to see inside the membership hub is our 5-day boot camp on demand. Myself and our options coach working through theory, strategy, setup, live trade analysis, and execution, setting up your option chains, and so much more. No fluff, only actionable education and strategy. For those that want to dig deeper, really want to spend more time in the charts, the breakdown, the theory, Q&A, no stone left unturned. You'll find everything you need in our library, archive, and trading suite. We've made this about as simple as possible to get you going and onto the charts. No more fumbling around with complicated installs, tutorials, crazy configurations. We have already built workspace templates for you. All you have to do is literally copy paste. In under 5 seconds, you'll now be able to see and spot and trade our 3 core setups with ease, giving you the setup and entry criteria, suggested strike selection and key stats, directional bull bear bias and trend. So there's no second guessing. And that is only 3 of 7 total income strategies. So just imagine the possibilities here. And our motto is leave no trader behind. This is why we run a live members only Telegram room, runs 24 hours a day, 7 days a week, where our students ask questions and those questions get answered. We discuss setups, entries, wins, losses, occasional bad jokes here and there. We're a community and we help each other, okay? And as I've already mentioned, 7 income strategies total with entry, exit, risk management rules, strategies for those that wish to be more active or some that wish to be more passive. Guides, case studies, daily market analysis and updates. And you're also going to get access to all future live boot camps that we hold with this system. So here's the offer, guys. 5-day SPX Income Bootcamp on demand, complete strategy archive and trading suite, 3 pre-built indicator and workspace templates, members only Telegram room, 7 total SPX income strategies, all of the guides, resources, case studies, and more. Total value is over $6,400. Now, we're not going to charge anything close to that today. We are on a mission to create as many successful SPX options traders as possible because we believe in our program. We are that serious. We believe in helping our students. And bottom line is this: we want you to start trading with confidence. We want you to start getting real results. It's not going to cost you $6,000 to join us. It's not going to cost you $4,000 to join us. It's not even cost you $2,000 to join us. You can get started today. If you're serious about your trading, ready to take this next level and join myself and thousands of other students who are actively trading this method, you can get started today for a one-time payment of $14.97. Go to spxincome.t2markets.com and get started immediately. One-time payment, no renewals, no subscriptions, no additional fees, lifetime access. You can get started today. We've done a deal with PayPal where you can finance through PayPal, do a direct purchase through PayPal. You'll see that on the order form. And I want you to get involved in our community, okay? Get involved in our community where we help each other out. We're trading this day in, day out. And the only wrong choice is really doing nothing. You know, if this resonated with you today, then trust it. Because a year from now, you'll be looking back at this moment as either the day everything changed or the one you let slip past, okay? We trade this every single day. We have results, we have wins, we have losses, and we share that together. It's not a coincidence that you're here today. You've made it this far because this has spoken to you. And now it's your move, and you can get started by going to spxincome.t2markets.com and join us, join our team. Let's build this together. The tools are there, the support is here, the results speak for themselves. You just have to take the next step. Here's your offer guide, SPX Income System. You can reach out to support@t2markets.com if you have any questions, comments, or feedback. Our website is t2markets.com, and I want to turn it back over and try to get the team back on time here. Thanks so much to the Traders Corner team. Everybody have a terrific Saturday, and we look forward to seeing you on the inside.
For that excellent presentation, Silas. Great insights into structured trading and consistency. His promotional link is in the chat, so be sure to grab it. Thank you so much. Up next is Oscar Carboni, founder of Omni Trading Academy, who brings a combination of technical expertise and floor experience to his chart-based approach. His talk, according to the charts, not the word on the street, is all about stripping away market noise and learning to trust what the chart is really telling you, because that's where all the news, data, and market emotion is already baked in. So let's welcome the great Oscar Carboni. Well, good morning, good evening. You're on mute.
Are we unmuted?
Yeah, there you go.
Well, good morning, good afternoon, good evening, traders from across the globe. Traders Corner, thank you so much for having us. Great day watching the presentations. Thank you for allowing me to present today. So, traders, am I on? Is this it? We're on me, or we're having a conversation here, sir? Guess it's on me. Traders, good day. My name's Oscar Carboni. I don't know how many of you know me, but I'm somebody who worked on the trading floors his entire life since 18 years old, helped develop the systems that we all call what we trade on computers today. I was a computer nerd in the 80s and helped the exchanges put charts on computers. I've been at this forever, and here's what I've got to tell you today. I've got nothing I would dream of selling you. I've got a great Omni system. I wouldn't dream of boxing it up and selling it to just anyone in the world who wants to buy it, because let me tell you right now, if you use price ladders where you place your orders, have you ever noticed on those price ladders, sometimes you see 5, 6, 10, 20. You sell your system to thousands of people around the world and they try to place orders at those prices, your system blows up. I wouldn't dream of selling my system. I teach 5 people at a time, 4 times a year, And that is it. I would never dream of boxing this up, but I've got something great I'm going to share with you. I'm going to give you great information that can help you move forward and make some money in the next few weeks or months, and it won't cost you a dime. Here's what I got for you. So I put out a YouTube video just about every night since 2006. I've got 19 years of videos. In these videos, I basically tell my Omniacs from around the world what's going to happen tomorrow using technical analysis, the Omni system, Oscar's market navigational indicator. Then I'm in a live trading room acting out those very same trades the next day. People from around the world tune in and I take them through those trades. We do this 6 days a week from Sunday night straight through to Friday night. It's very easy to find. I'll show you quickly. I wasn't planning on it, but the room's here now. I'm waving to you because I'm always in this live room. If you wanted to find me, you could simply just go to livewithoscar.com. Well, you go to none of these. You go to livewithoscar.com, and it's very simple. You just register. Likelihood is something will go to spam, unspam it, send it back. In 2 minutes, you put a username in and you join me in my free live trading room at livewithoscar.com, and we can spend the rest of our lives together. I can teach you many things, help you get through these crazy markets, and maybe, just maybe, we can make a few bucks together. So let's take a look at what's going on. Omni Trading Academy is what I run. I've been running it my entire life, but I've got no PowerPoint for you, and I've got no really pretty AI pictures. I've got great knowledge. It's going to work a lot better than pretty AI pictures, I promise you. So you can find me there at any time, livewithoscar.com. If you like what you see, join the free trading room. Not even a credit card is required. Nothing is required to spend your life with me every day. If you really like what you see, I'm going to Australia to do an Omni boot camp for 4 people live in Australia. If you're from Australia, go to Omni boot camp and tell me if you'd like to join. I'll see if you qualify for a seat, but that's not what this seminar is about, this webinar. Here's what it is about right here. After reviewing many of my fans' emails from around the world, I've got 2 questions that are most common asked of me. Oscar, would you please explain this in your webinar on Saturday? Question 1, Oscar, is the year-end call for 75.12 in the E-mini S&P still valid for this year of 25? 75.12. By the way, that's my badge as well. What a crazy call. Number 2, what will the rate decreases that are going to happen on Wednesday do to the markets? This is what people need to know for next week. This is what I'm here for. So let's go on a little hunt and see for ourselves exactly what is going on. We're going to answer these questions in reverse. We're going to take 2. We're going to look at what should happen with interest rate decreases. Then we're going to go to 1 and find out if we're still on target to go all the way to 75.12 in the stock market, S&P this year. By the way, that call was given when the markets were at their lowest point at 4,800. Go Omni call. All right. First, we will do a review of the AI Revolution portfolio, because in October of 23, this is 25 now, just about 2 years ago, NVIDIA came out. NVIDIA had a price of $1,000 and people couldn't afford it, and they all wanted to be in the AI revolution. So I grabbed my Omniacs from around the world and I said, here's what I'm going to do. I'm going to put together a portfolio of fantastic stocks that you should put in your account that will make up for not being able to afford NVIDIA, but these stocks are the AI revolution. Put them in your account and hold them and forget NVIDIA. This is where you'll make your money if you believe in the AI revolution. So that we started in 2023. The first thing we're going to do is go over that AI portfolio and see where those stocks are now, because I've got traders around the world that have been following this AI portfolio and they have these stocks. So every time I do a webinar, first thing we do is update the AI portfolio, then we go learn some new stuff. So after we check out the AI portfolio, next we will check on the technical health of our stock markets and see where they can likely go from here. I hope many of you take this information and make sound trades, put on great positions. I hope this presentation helps you dramatically. Let's start with the AI portfolio. You're looking at NVIDIA. Traders Corner, you guys have been watching this for 2 years. You know these stocks. NVIDIA came out and just exploded. That was before, if everyone remembers, when we had this share split. NVIDIA was over $1,000. It was $10.50 a share. And I put out this video in October of 23, and I said, listen, welcome to the AI revolution. This industry is young. This revolution is just getting started. How would I know? Because I've been on the trading floor since 1982. When the computer revolution came out, the markets rallied for about 7 straight years. Nothing goes straight up, but we had a 7-year bull run. When the internet came out, we had about a 7-year bull run. Go back and look, kids. I'm not making this up. I lived it. Now the AI revolution is out. It only started in November of 22, kids. It is a baby. This is only 2025. You've got 4 or 5 years of bull market coming based on what we know. And what we know is the computer revolution took the stock market up for 7 years. The internet, when that came out in 1994, took the stock market up for about 7 years. I promise you, AI, the revolution is taking us higher. So I said, I hope these cheaper alternatives I'm about to show you will allow you to participate in the AI revolution, as NVIDIA is way too expensive at $10.50. Now, we must remember we're going back to the date here of October of 2023, when Omni started getting interested in the AI revolution. So I said, traders, let's go look at the series of stocks you can afford, and let's go look at that series of stocks. So first one I gave out was the AI play called the AIQ.Q on Metastock. If you look at this fantastic AI stock, I mean, look at it go. It's an ETF. Look at it go. I mean, could you imagine? We got involved with it here. That's what I did the first webinar. Now, every time I do a webinar about these AI stocks, I put a little diamond or a W at the webinar. Webinar, keep the stocks. Webinar, take some stocks out, keep the rest. Webinar, hold all the rest of the stocks. Webinar, hold the stocks. So this is what we do at each webinar. This one we're going to continue to hold. It's the AIQ.Q. Now, traders, I grew up on Wall Street, and I have told my traders 1,000 times, this whole gamut is based on market geometry. You can come up with gimmicks, you can come up with beautiful AI pictures, you can come up with these programs that run all sorts of stats for you. And I promise you, you're not looking at what Wall Street is looking at. They are looking at complete simplicity. I know that doesn't sound right. I grew up on Wall Street. They're not looking at complication. They're looking at simplicity. How do I know? I'm going to show you 2 examples of the most simplest things that we do on Wall Street that make money almost every time we see them. Here's example number 1 of how geometry works. Watch this. This trend line right here is something that Wall Street is using called forward geometry. I have a trend line that starts here, goes from one low to the next low. That's it. The rest of this chart doesn't exist yet. None of this has happened. I've got a little baby trend line right here and a little chart. Watch what happens when I extend my trend line. How did they know to buy it here? How did Wall Street know to buy it here? How did Wall Street know to buy it here? Even with the Trump tariffs, it only went through a little, came right back, got right back in the channel. Now, that was the whole bottom of the channel. You tell me Wall Street's not playing off that, you don't know how to read a chart. Now, watch this. Example number 2. You tell me Wall Street doesn't use geometry, you don't know anything about markets. Here we have another trend line. It goes from this high to this high. That's it. The rest of these bars haven't happened yet. They don't exist. What could happen if we extended this trend line? Oh my God, it hits here. It hits here. But what's it do every time it hits? It backs off. Hits here. Backs off to where? At the bottom of the trend. Hits here. Backs off. Remember, that was a teeny little trend line over in the corner there. How does Wall Street know? They love geometry, kids. I grew up there, I promise you. It's all about market geometry. You'll see. Now, trading is risky, and we always put our stops in first, because no matter what we do for trading, you don't know what's going to happen next. So what we do at the Omni Trading Academy is no matter what trade we're going to take, we first place a protective stop in the market. Then we get into a live position, so that no matter what happens, our insurance policy is in place before we drive the car around. So here's your first and second example of market geometry. Those are crystal clear examples. If you don't see that, you should rerun this tape when it's over. Next, the next stock in our portfolio was the BOTZ. It's the bots.o on Metastock. Look at this insane ETF. Look at how from down here, when Omni started liking it, we did our first webinar, and then second webinar, and then third webinar, and we just kept advising traders to hold on, and you'll see what happened during the tariffs, and you'll see why my traders were told to hold on to these trades even during the tariffs during this session. So the bots looks pretty good. Let's move to the next one. You're going to hold on to bots. We're not going to get rid of it. Buzz, fantastic. And once again, look at the geometry that these clowns used all the way up. I mean, these guys know what they're doing. Wall Street, they're so smart about this. Simple and smart. So Omni likes it here. I start telling the world about it. We do webinar after webinar, and look what it's done now. Now it's in a massive bear flag. It just, excuse me, a massive bull flag, if you will. It just broke out of, on its way to run up to new highs. So Buzz K was a fantastic alternative to NVIDIA so far, and were the rest of those ETFs. Let's go look at more, because first we got to get through this portfolio before we even learn anything about markets. IQM, the Franklin Intelligent Machines ETF. Once again, we gave this out back here when Omni got interested. And we did our webinars all the way through telling people, our Omniacs, please stay in the 25-bar algorithm or the 25-bar moving average. Wall Street is keying off of it. They're just programming it into the stock. Stay with it, stay with it. And look what the stock has done so far. Excellent work by Wall Street holding up these ETFs and these AI stocks. Let's go look at the next one. Loopy, another insanely strong ETF based completely on AI. Look at the rally it's getting into now. Look at this green channel. Away we go. We're going to continue to hold. Every one of these I've shown you so far. We're not removing any of these from our portfolio, but boy, are they cranking it out for us, aren't they? Now, some of these have been removed. LRNZ about 1, 2, 3, 4, 5 webinars ago, we removed it. I didn't like the way it was acting. I didn't like the Omni signals we're getting, Oscar's Market Navigational Indicator, the Omni. So we removed LRNZ back here where we say removed. And even though we removed it, it still made its way up. Look at that. Insanity, right? There's no stopping this AI revolution. Traders, if you like what you're seeing, if you want to join me, if you're in Australia, this is going to happen in Australia, in Queensland next month, go to omnibootcamp.com and fill out an application, and I'll see if you get approved for one of the 5 seats that I'll be teaching students in Australia. So AI Play Learns is out of the portfolio. Next, another one we yanked from the portfolio right here where it says removed, and look, it still made its way up. I mean, it's making new highs now. So even the laggards that weren't really staying with the rest of the AI portfolio, even they have caught up. Just amazing. There's no stopping this AI revolution. I know you've heard on TV and certain places you read on the internet, the AI revolution's almost over. They've put too much money in it. Don't listen to nonsense. Listen to the charts. They're much smarter than people are. UBOT, the Robo AI automation ETF. We loved it for a while. We got rid of it right here where it says removed, right? So we can show you, you know, I do these webinars as often as I can to keep my Omniacs apprised of these stocks to make sure they keep in their portfolio or remove what should have been removed. If I remember right, we've only removed 3 out of about 15. And let's go to the next one. Okay, this one hasn't been removed. Defiance is a nice one, by the way. Omni gains interest back here. It just starts to go. A nice fat run up. Tariffs knock it down, and look at the explosion we're getting now. Another bull flag type of formation here. Breakout. We love the Defiance Quantum ETF. We would keep that in our portfolio. And finally, the one we added not too long ago. So in 23, we started this portfolio. In 24, we added MSTR. Now, MSTR is more wrapped up in Bitcoin than just about any of the other AI stocks I showed you. And look at the difference. All those AI stocks are going through the roof. If you remember, Bitcoin made its high a few weeks ago, around 124, and so did MSTR. So what I will tell you is MSTR is finding support right here, and so is Bitcoin, by the way, which we will get to in this webinar. So We still like MSTR. That stays in the portfolio. We started liking it at 184 with a 277 target, which got hit. And since then, we've just maintained hold on to MSTR. So that is the portfolio that I always show at the beginning of these webinars, because I've got a lot of traders around the world that actually put these on. Traders, you're doing great. Hold on to them. I love what we've done since 23. Now let's go to work. Kids, let's go find out what else is going on. So the first question, well, the second question I'm going to answer first. What happens to the markets when Powell, who is being forced, by the way, to lower rates? And he's succumbing to pressure, which he shouldn't do, but I'm not a politician, I'm a trader. So let's go find out. Chart 19 should get us there. Okay, here's your T-bonds, traders. What's happening with T-bonds is that they're starting to head back up slowly. They have broken out of this really long-term trend line. You can see right there. And if Powell continues to go on a rate decrease program, because he's going to talk about it this Wednesday coming up, are we cutting rates once only and that's it? Because then the bond market will fade back down. Are we going on a rate cut campaign? The bond market will fill in this area right here. Now, what makes that important is this. T-bonds work like this. If you don't know this, quick lesson. When T-bond futures go up, interest rates go down. This is inherent. This has to happen. Powell doesn't have to say or do a thing. When you see the market, let me just grab a little thing here so I can, there we go. When you see the bond market going up, interest rates are going down. When you see the bond market going down, it is raising interest rates. I promise you this happens whether Powell and the Fed says a word. This is automatic. So if you've got bonds on a little teeter-totter and we're out in the playground, if you got T-bonds on one side, if they're going up, it makes interest rates automatically go down. Now, bonds have slowly been trying to rise since way back in May, between May and June. And now they're starting to get on a rise, and this is good because once again, when bonds go up, interest rates go down. How would that help the market? Wait until you see. Next, let's go look at the market now. Will interest rates going down help the market? 1000% yes. Technically, anytime you lower interest rates, you force the market higher. If you look at the E-mini S&P right now, it's above all of its previous highs. It's above all the static. It's above all the traffic, and it's starting to run. Why? Because we're going to lower rates on Wednesday. Even if Wall Street comes in on Monday and Tuesday and pushes this market down, they're taking it up once the rates get lowered. Why would the market go up if they lower rates? Well, it's going to make everything go up. It buoys up everything. Stocks. Why do stocks go up if the Fed lowers rates? Well, stock companies that are public issue monthly bonds to traders, investors all over the world. Investors give them money. That's how JP Morgan pays its month-to-month bills. It sells forward bonds. Now, if it can borrow money at a cheaper price, it can afford to sell the money at a cheaper price. In other words, if a stock is worth $2 because it could borrow money at 4%, if it could borrow money at 3.5%, the stock automatically goes up in value. Automatically goes up in value because now the price of money's gotten cheaper. That is going to happen to our stock market. They're going to lower rates, and it's going to buoy the stock market. So E-mini S&P is showing you that it wants to go higher already, right? Let's look at Nasdaq. Look at this Nasdaq chart. And once again, it looks like it just wants to explode, right? It's broken above. We had basically a beautiful pennant, got above the pennant, but bigger than that, the market geometry has worked all the way up, all the way. You had a one-day penetration or violation of this support. Wall Street jumped on it the entire time. And now that we're breaking out, they're heading towards the top line, which is what happens almost always after hitting the bottom line. So they are using geometry and they're going to take this market higher. I promise you that is what is going on here. So that was ES and NASDAQ. By the way, once again, Omni Camp will be held on October 17th through the 21st. It's a 5-day session when you're with me at the Gold Coast, Queensland, Australia. Just go to Omni Bootcamp if you're interested in that. I usually host these here in Las Vegas, but we're going abroad for this one. So Nasdaq looking like it wants to explode. By the way, the highest Nasdaq's ever been in its life is where this line is right now. What does that tell you? All right, we're getting ready to lower rates. These things are going to go. What else is next? Look at this guy. The infamous YM chart. This is the mini Dow. So when you look at this, here's what you've got. A market that put in what we usually consider a flat top. And I promise you, if you've been watching my videos for 20 years, these flat tops work phenomenally well. But on Thursday, they took us above the flat top, which turns this flat top into an ascending wedge, right? Now you got an ascending wedge. You've got interest rates about to be lowered. You've got all the reason in the world to take this higher. And of course, you just recently bounced off the bottom of the geometry. Wall Street wants to take this higher. The mini Dow is going higher. Flat tops usually produce market drops. In this case, it did not work. And the market looks like it went through and took out stops. Now, there is one thing that could happen here. You could end up coming down for 2 days, Monday, Tuesday, till the Fed meeting, and then back up will go. So be ready for that this week, traders. It's not going to be easy because the Fed's going to speak, but the Omni will tell us whether we should be long or short, no doubt. So that was your YM. Let's go now look at slightly longer term pictures. This is what bottoms markets, traders. This is a massive, massive head and shoulders formation with a V bottom. And this is what's happened since we've come out of the head and shoulders. Now, you got to remember, all of this has happened since the tariff lows, right? When everyone thought the world was coming to an end, not the Omni, you'll see by the end of this webinar. And market came racing down. Well, look what it's done. All it's done was put in an inverted, bullish, inverted head and shoulders with a V bottom. And look at the run you've had so far without the Fed lowering rates. Wait until they lower. All right, let's go look at the next one. That was Russell, right? Let's go look at the ES. ES has the same thing. Look at this. Tariffs came out here. Boom. All it did was give us the lows or the bottom of an inverted head and shoulders. Right shoulder was made. Look at this run that's taken place so far. Nice V bottom, nice bullish run. Nothing wrong with that look, right? Let's go look at another. Now you're looking at the Nasdaq. Nothing wrong with that look either, right? Fantastic looking chart. I did tell everyone when we created these formations before any of this existed that these are bullish formations and we would go higher based on analysis. Higher we've gone. So OmniX have seen every one of these charts as they were created, by the way. I'm showing you charts now that we all used in videos and at my trading academy every day. So now these are charts that worked out really well, but we did create them as they were top day charts. I just want to give you some confidence in where this market is going and what the Fed lowering rates is going to do. Everything we look at so far is pointing up, not down. And let's go to YM. Once again, you've got the same thing in the mini Dow. Look at this monster move, and the Dow has put in all-time highs where it's never been before. So, you know, I think we're answering the question ourselves, to be honest. What is going to happen when they lower rates? This is going to continue. But let's be sure. Let's look around and just be sure. So what else do we have that should end up with a nice push once they start lowering rates? Let's go here. Hi-ho, silver. Look at this thing, kids. Now, welcome to bull flag heaven. Talk about simplicity. This is a market that just loves to put in bull flags, except for this one little piece of it. We don't know what it is. Bull flag, bull flag, bull flag. They work like crazy. It's just what Wall Street likes in silver. I don't care. I don't reinvent wheels. I find out what wheel works. I put it on my car. I drive it really fast. This is the wheel that works in silver, obviously. So we put this trade out on Friday, and this bar didn't exist. And I said, traders, get ready for the upside. Hi-ho, silver. This was in my video Thursday night for Friday. And boom, away we've started to go. Silver targets, traders, if you want to know where we're going next, 44.27, then 44.52. Now, you're looking at someone who spent his entire life. First of all, I grew up in the silver pit. That's the first trading pit I was ever in my life back in the 80s. And I've spent my whole life telling people, when silver, the dog, sticks its ugly head up, take out your lawnmower and chop it off. It's been my advice to my OmniX around the world my whole life. Here I am 44 years later, and I'm giving higher targets. Could you imagine? Whoever thought I'd do that? but I follow charts, not my opinion. My opinion is silver's a dog. The charts say it's going up. We follow charts, not my opinion. Silver. Now let's go to gold. By the way, I build these webinars the night before the webinar. I've got no PowerPoint. I've got nothing specially made for you cats. I look at the charts. I build the webinar literally the night before. I built this last night. So looking at gold, came out of a massive, huge pennant, this blue pennant, broke out in a channel. Away we go. Gold is going higher. Oddly enough, in the old days when rates were going down, it would make gold go down too. When rates were going up, it would create inflation fears and gold would go up. But in this case, lowering rates is just going to create more money and buoy everything. Silver, gold, you name it. You know what else is going to get buoyed by this? Let me show you this next one. Bitcoin, it is just starting to feel it now. Look, I've been showing this chart for months and months and months. We've made so much with it so far. And got my OmniX, at least I got long all the way down to here on Bitcoin and expected this, and here we go. I'm so glad I bought all this crap. It's told you cats and videos every night to buy it with me, or just about, and in my trading room. So here we are breaking out of a massive bull flag. By the way, bull flags are all over the charts lately. It's not like I like bull flags. It's not like I care about bull flags. I care about whatever is current at the moment. If there were something that weren't bull flags, I could care less what the formation was. That's what I'm interested in, right? I'm into whatever the markets are into. They're into bull flags right now, like you've seen all over the charts, and so am I. So breaking out of this bull flag, we are probably now going to take out the 124. Nothing goes straight up, as we know, but we're going to probably take out the 124 highs and go to my 126 target. That comes next in Bitcoin, 126. We had 121, 124. Both of those were hit. 126 comes next. We'll see what happens when we get there. I'll pull another target. Don't forget Australia. Come join me in OmniCamp. Go to omnibootcamp.com. One OmniCamp in Australia. You either hang with me for 5 days or you don't, kids. I will change your life if you do. So make sure you fill out those applications. What else is out there? So now we looked at Bitcoin, and we could see a lot of the markets that are going to go up because they're going to lower rates. Will we make the 75-12 year-end call? This badge has nothing to do with the year-end call, by the way. Well, let's go look around. So next chart we should look at is this. I call this chart masterpiece. We've been using this chart for several years now to keep us in check. Several years. Us Omniacs have been using this chart to keep us in check with the Nasdaq. And what this is showing us is not only has the Nasdaq broken out above what used to be considered a double top, it's on its way to all-time new highs. It is going. Nasdaq doesn't want to hear anything about it. The only time Nasdaq had trouble this year with tariffs. Tariffs here, lows were in, got back into the channel, away we go. This is answering the question about will we go to 75-12 to the yes side so far. Let's go to another chart. This chart, Omni action traders around the world, I completely amazed myself and all the rest of my Omniacs with this one. You have to see what we did. Last year, this is a testament to the power of technical analysis. That was to remind me, grains are going to close during the week. This is a testament to the power of technical analysis. There are many witnesses to me creating this chart in 2024. There is no better chart reader on this planet than me and the Omni. Watch this, just watch. This is insanity. Here's where we are in November of 24. Nasdaq is running away, going crazy, making all-time new highs. And I came out with this targeted area by April of 25, 15,300 in Nasdaq. And here's what happens next. We missed it by this much. That was how little the bar needed to go further to hit my target. We were trading at 21,553. And Omni gave me a call for 15,300. And I went, oh, I can't even show this to my Omniac. So I showed it to him. And I said, here's what we're going to do. We're going to pretend this call doesn't exist. And we're going to put this chart away. And we put it away in December. We didn't bother to look at it again until April. When April started and this started to happen, we needed to look at this chart again. And look what analysis did for us. I mean, has anyone ever been able to make calls like that way before they happen? Insanity, right? That is pure technical analysis. What else is out there? Here's the one that's the real kicker. Traders, a little explanation of this chart. That's why there's some words on it. This is the E-mini S&P weekly bar chart, the S&P weekly bar. Tariffs get announced and I come out with, please stay calm, do not bail out of stocks. I'm going to do a seminar. I'm going to do a series of videos. Don't get out, and here's why. So, speaking about the power of technical analysis, on Sunday, April 6th, right before the tariffs were going to be announced, I started a series of videos. In those videos, I begged people, don't get out of the stock market when it cracks. I'll explain why. So I started them on April 6th. My video was released on Sunday before the markets opened, because on Friday and over the weekend, if you remember, we had a big problem. So the title of the series of videos was Do Not Bail Out of the Stock Market. Wall Street support is on the way. On the weekend and on Friday and on Monday, you had the biggest CEOs of Wall Street come out. Morgan, Goldman, you name it, Kramer as well. They all came out and said, we're going to have a major crash and then a recession because Trump raised tariffs on us. And here's what I did. I came out and said, hold on, everyone, don't go anywhere. Proof charts know best, stay calm, don't get out. And I did this. We were all the way up here. Tariffs got announced. I came out with this circle. There was no bars here at all. And I said, do not get out. We have a targeted area, 49.75 to 47.75. If it drops in that area, you get long, don't get out. The market dropped right to our area, like it was scripted, right to the Omni area, and exploded out. So let me just do a little more anatomy of this. When Powell stopped lowering rates, a lot of people forget he used to lower rates. This was the day or the week Powell stopped lowering rates. Immediately the market started to go down. Immediately. Then when Powell was done, Trump came out and said tariffs. And immediately the market started to really fall apart. And the analysis told me, tell your Omniacs, get out in front of this camera, tell them when this happens, don't get out. And that's what I did in a series of videos. We didn't get out. We didn't get out of the AI portfolios. We didn't get out of our trades. In fact, I convinced people to buy more when we got down here. And look at what's happened since. We've had a 1,774 point rally off these lows. We hit 66.06 so far from 48.32. We made fresh new highs coming out of this. We need 906 more points to reach my 75.12 target. 906 more points in the next 4.5 months. You think we can get there? 3.5 months. If you look what happened, we rallied 1,700 points in 3 months. You don't think we can rally 900 points in 3 more months at the end of this year while the Fed's lowering rates? The answer is yes. We will hit 75.12 target this year. That is the presentation I had for you traders. This is what I wanted to show you today. I wanted to show you that we will go up when they lower rates, even if it's not automatically right in the beginning. It has to push us up. And yes, we will reach 75.12. Now, if you want to hang out with me in my live free trading room and learn some of this analysis, I promise you this much. I know you won't believe me, but what I just showed you here, this is my technical analysis 101. I am laying on a cot in pre-kindergarten, drinking warm milk and eating cookies right now. I swear, this is as simple as I could get and still be effective. It's much, much more intricate when you do the Omni, and the Omni tells you exactly where to buy and sell and where to place your stops. It's way cooler, but I've got to give you the abstract analysis to at least show you our goods, what we're capable of. But boy, are we capable of a whole lot more than this if you ever meet me in person. If you want to at least hang out with me, remember, join me in my free live trading room. It's really easy to get to it. It doesn't require a credit card. You're just going to simply go to livewithoscar.com. In fact, let me make it easy. Let me just type it for you. Just go here. The membership is absolutely free. You might have an email go to spam, unspam it. Come join me in my trading room. I live in this trading room. I live these charts. This is my life. This is my presentation to you. Come spend your life with me like I spend my life doing this. We'll all be better traders in the end. With that, Mr. Trader's Corner, I give my time back to you. Thank you so much for allowing me to present.
Thank you, Oscar. Your ability to decode the market through clean chart analysis is second to none, and you are one of one when it comes to the geometry. Nobody is doing it like you are, sir. Thank you so much.
Thank you. Enjoy your day. I will see you all at livewithoscar.com. There is this. Every video ends the same way. You got to let me end this one the same way.
Oh,
you with me?
This is all you.
Come on, are you with me, kids? You know this by now. 1, 2, 3. Stops are in. Emotions are out. Traders, learn it, live it. That is the truth. Put your stops in first. Keep your emotional decisions out of decision making.
Thank you so much for those reminders, Oscar. You called the AI revolution better than anyone I know, and it was the same thing with the cryptos. So we really appreciate you being here, and we wish you in the future OmniX all the best of luck. So thank you so much for sharing.
Thank you so
what
much.
you did
All
today.
the best to all of you. Appreciate you.
His link is now available in the chat for those who want to learn more. So be sure to check it out. His trading room is free to join up. Check it out, and definitely look at his YouTube videos because they're very good, very good. Okay, now let's turn to Dr. Daniel Sinnig, co-founder of Trading Indicators, a global leader in custom-built indicators and trading automation tools. His session, How to Find Your Next High Probability Swing Trading Setup, will show you how to filter out noise, scan smart, and use multi-time frame tools to pinpoint swing setups using a unique power of 3 pattern-based model. Let's welcome Dr. Daniel Sinnig.
Yes, hello. Can you guys hear me?
Yes, we can. Thank you so much.
What's going on? Yeah, I'm super stoked to be here. And what a great presentation by Oscar it was before. I was mesmerized. It was fascinating. What a great presenter.
He is so good. Yeah.
Yeah. All right, perfect. Well, I hope I can, keep up with the pace. And today we're gonna stay in the same realm of swing trades. I believe Oscar also talked about a bit of a longer term trading. Today we're gonna talk about swing trading and most notably about how you can spot the most, how should I say, the gems in the haystack, or the needle in the haystack, because there's so many stocks to trade, and but how do we know which ones to pick of these big ocean of stocks? And this is going to be today's topic, and as you will see towards the end, this is something that everybody can do in just a couple of minutes, given the right tools. And what this is all about, we're going to discover together in this presentation. All right, so it's going to quickly go to my proper view. There we go. And Anthony, can you confirm that you can see my screen?
Yes, and your microphone sounds great, by the way.
Perfect. Okay, great.
Yeah.
Excellent. Okay, so let me ease you in. Of course, we all know this. There are thousands of stocks to trade. There are about 5, 6, 7,000, depending how far you want to go out. So there's so many to trade, so many options to that you can pick possibly when it comes to swing trading. And as we all know, a stock may go up and a stock may go down. And it may seem like, at least at first glance, it may seem like a coin toss, a 50-50 decision of the whether, the stock that I am picking off this ocean of stocks will go up or will it go down. Well, I have good news to you. It doesn't have to be a complete coin toss. Of course, there are no guarantees. I'm not claiming to have a crystal ball in front of me. There are no guarantees, but I strongly and firmly believe there are things that you can do to gain a bit of an edge, especially if you are using and following a systematic and repeatable process with a market edge. Why systematic and repeatable? Well, I'm an engineer. I'm actually a software engineer by training, and as an engineer, we don't believe in doing things ad hoc. We believe in being systematic, and this is so important because only if something is repeatable and systematic, you can actually optimize it. You can improve it. If it's completely random and ad hoc, there's nothing really you can improve on. But if it's clearly defined of what you need to do, what are the steps, there's optimization potential. And what I'm going to show you today is a process which has already been optimized by us because it was systematic and repeatable to begin with. All right. Now, how this can give you an market edge, let me try to show you. And these are some trades that we called out in our newsletter in the last couple of weeks. These are all public. You can go to our homepage or subscribe to our newsletter. You would have gotten the same trades in your inbox. Here's an example. Williams Company, ticker symbol WMB, a long-term uptrending stock, hit a key support level. We called it out. There's some other factors that came in. This could be an interesting idea for a long trade. 1 week later, actually bought some options. At the same time, 1 week later, it was 4.6% in the profit. As an options trader, you can imagine how you could potentially benefit from this. But even as a swing trader, this is it's a decent move. Another example, a couple of weeks further, maybe 2 months ago, we called a short trade in the United States oil fund. USO. Why? It hit a key resistance level. It was sideways to begin with, hit the upper range of the sideways channel. We called a short trade in our newsletter. 1 week later, 8.3% moved to the downside. Imagine you had traded this with put options, for example. Another example, the Brookfield Corporation, a recent one, a long-term uptrending stock. This is a pattern that we call the zone break retrace. Sounds complicated. I'm going to ease you in today. Made all-time highs, came back to a broken resistance level, now acting as strong support with a pullback on our trend radar indicator. 3 weeks later, 7.9% in the profit. And I have one more example. I'm going to actually get to how you can find these trades. WW Granger, GWW ticker symbol, long-term uptrending stock, hit key support. And also here we called a long trade on this one. 3 weeks later, 9.1%. So these are the trades that we call out every single week in our newsletter. Of course, there's some trades which don't go our way, but oftentimes they do. And as you know, in trading, it's pretty much what we call a numbers game. Yeah, you cannot be right all the time. That's impossible. That's not possible in trading where there are no absolute certainties. But there is something that you can do to push the odds in your favor. Now, what we did actually to find these trades I just showed you is we followed a very easy 3-step process. And as you'll see, actually, the real thing that you need to do is only step 2 at the end, because this is where our scanning capability comes in. But if you want to break it down into all its details, it's really 3 steps. Step 1 is, you need to know a little bit about how markets work, what drives the markets, what levels, for example, does price react to. How can you use this information to project where price may be in the future? And let's face it, we as traders, it's a little bit about forecasting what may happen in the future. Yeah, a little bit about pretending we have a crystal ball where price may be in the future. And for this, we need to get a basic understanding of what drives the market. That's step number 1. Step number 2, once we know which setups are the most promising one that would drive the market into one direction or the other, how can we actually find these setups? There are thousands of stocks. We cannot go through all of these stocks manually. It will take us forever. Would exhaust us. We need a tool which can find these stocks, these setups for us. A tool that can scan through thousands of symbols, thousands of stocks to find the ones with the most promising setups. And step number 3, of course, eventually you need to action on your trade. Once you find a stock with a nice setup, how would I action on it? Would I buy the stock outright? Will I perhaps do an options play, buy some calls, sell some puts, whatever it may be? That's step number 3. You have to plan out your trade based on this setup. Now, these are the 3 steps, and actually mainly step 1 and 2. These are the steps that I want to talk about today. If that sounds good, please be comfortably seated, lean back a little bit, and let's get to it. All right, real quick, who is this guy? Who's this guy telling you about 3 steps on how to find the most promising swing trading setups? Well, my name is Daniel Sinnig. And you can see it here on my picture. This was taken multiple years ago. It doesn't really matter. And I am one of the founders of tradingindicators.com, a company specializing on building innovative trading indicators. We have built indicators for clients all over the world. Many of the trading educators that you potentially listen to, we were behind the scenes, behind the curtain, building their indicators. You've seen it all. You've seen the good, the ugly, but also the indicators that worked. And today we're going to use some of the indicators that we found worked really, really well. But perhaps interestingly, if you zoom back a little bit into the past, my initial career objective was actually not to become a trading educator and a trader. I am a software engineer by training, and I always wanted, when I was a child and in early university, I wanted to become a professor in software engineering. So I went through all the levels. I did my my master's, my PhD, my postdoc in software engineering. I started I started teaching at various universities in and around Montreal, which is where we are headquartered. I'm German. I live in Montreal now. So I started teaching software engineering. But you know what? Doing all these years, I was fascinated by the world of finance and the markets and trading by itself. So I started trading on the side. And unfortunately, as you start out trading, oftentimes you tend to make all kinds of mistakes. And so did I. So I overtraded. I took way too much risk. I traded when market conditions were not right. I took revenge trades, all the bad habits that people do when they start off. And after donating quite a bit of money to the markets, I came to the hard realization, oh boy, trading is not as straightforward as I thought, and I need help. And for me, needing help meant I need better tools, better software tools, which will help me make better trading decisions. So I rolled up my sleeves and I started coding. And the very first tools for trading, which I've written, they were exclusively for my own purpose. But once I realized, oh boy, these actually do make a difference. They actually do help me make better trading decisions. We then decide to create tradingindicators.com and make these tools, our best tools, our flagship tools, available to the public. All right, but enough about me. Let's get into today's topic. I do need to remind you, though, real quick, that trading does contain risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to hypothetical performance or backtest performance, or really anything based on historical price data, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and strategies discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right, let's go back to our three-step process. Know what drives the market, finding stocks with clean technical setups, and plan out your trade. And by the way, by the end of this presentation, I will present to you, I believe, 3 or 4 stocks which right now in this moment have interesting setups. So please stick around for that. But let's zoom in. What drives the markets? Well, what we discovered, and we're not the first ones, but people have discovered, I should say, is that there are landmarks on every single chart. And these landmarks are typically levels of price which have certain properties. Now, they could have a property like, price would approach such a landmark and bounce off from it. Or perhaps, it would have magnetic properties where price is automatically attracted to such a level. So these special regions of price, they do exist on every single chart. Let's zoom in a bit further. So these landmarks exist on any chart. This could be a daily chart. It could be a tick chart. It could be a 50-minute chart. They exist everywhere. But there are 2 problems. First off, oftentimes they are a bit hard to spot, especially with the naked eye, without any indicators. And secondly, it is not always so straightforward to estimate how price may react to these levels. But as you will see, once you master this technique, which I'm going to teach you today, you can make an educated guess of how price will react to these levels. And of course, most importantly, that's what we are all here for, we can profit in the process. Now, so for example, we may see here, okay, on this hypothetical chart, this price here made an all-time high back here and a couple of swing lows back here. And what is interesting about certain levels on your chart is that they have forecasting characteristics or properties. For example, you can see this all-time high later on in the future. And again, trading is about forecasting what will happen in the future. Later on, this price level was revisited by price later on, way down in the future. Or this series of swing lows, which also in this case built a landmark, was revisited to some degree in the future. So there are some properties of these landmarks that can help you forecast the future, but you need to be able to spot them. Now, these landmarks can have all kinds of names. Some may call them swing points, or perhaps support and resistance levels, or perhaps liquidity zones. Now, we at Trading Indicators, we opted to use the most cryptic title. We call them liquidity zones, but it really doesn't matter how you call them. What's important is to know that these zones exist and price will react to these levels in a certain way. What's also interesting is that we as retail traders, we don't have the buying power to create these levels. That's impossible. We cannot submit these orders which would drive the market and make certain things. These are caused by the big players, or the culprits, as you mean them, by the big institutional players. But what we can do as retail traders, well, the big ones, they call the shots, they establish these levels. We as retail traders, we can follow the patterns. But of course, we need to understand where these levels are, which are oftentimes not as easy to find. And of course, we need to estimate how does price react to these liquidity levels. Now, let me give you some examples of how this could work, because these levels, once you know where they are, they will affect price in the sense that they could attract price as magnets. For example, they could have magnetic properties. They could stop a movement of price, and price may bounce off from a level. They may be broken, and then certain interesting properties or things will happen, and they can be two-phased. Well, for example, a support level, when broken, can become resistance, or vice versa. Here's an example. All right, let's look at this chart. So where are we right now? So let's hypothetically assume we do have a resistance level all the way on top here and a support level all the way down here. Let's just assume this. And price is right in the middle of these two. Now, when this happens, oftentimes what you will see is that price is magnetically drawn to either extreme, either resistance or support. It is unlikely it's going to hang out in the middle for a prolonged period of time. So price will be drawn to either this level or this level. And in this case, price decided to go downwards. It approached this support level down here. All right, so now price is no longer in the middle, it's near support. And one educated guess that one could make at this point is, okay, price is approaching a support zone, and this support zone will prevent price from moving even further down. Instead, price will bounce off this level towards the middle, in between support and resistance. And guess what happened in this hypothetical case? Price actually did bounce off this level, and once again, it's in the middle, in between support and resistance. And at this point, once again, we could make the educated guess, okay, price is not going to hang out in this middle spot forever. It's going to approach either resistance or support below. And in this case, price went all the way up to resistance. And again, here we could have made the educated guess, okay, price may be bouncing off this resistance level, or perhaps price will break it. So let's see what happens. In this case, price once again bounced off this level. We're back in the middle. Again, our educated guess in this case is price will not stay here for longer. Back to support, bounce again towards the middle. In this case, we are breaking above this resistance level. Okay, so price is no longer in the middle, in between support and resistance. It's now broken out. All right, so what can we assume now? Well, in this case, we could predict, okay, we now have a breakout scenario, and we could trade the breakout direction, meaning we can anticipate this breakout to continue a bit further in the breakout direction. And we did break above this level, and price initially went up, but then it came back down to the broken resistance level. We call this the zone break retrace setup. The market does this sometimes. It's trying to fake you out a little bit by coming down to the broken resistance level. And as we know, resistance, when broken, will change roles. It will now act as support, and this could be a launchpad for price then finally moving into the breakout direction and higher. So this is how market dynamics work and how you can make sense out of market moves, which may seem to some degree random if you don't know what these levels are. So zone break, retracing again to this broken level of which is now acting as support, and then the actual move happens. So once you know where these levels are, things can actually make sense on your price chart, and you can predict with some degree of certainty what or where price will be in the future. All right, now with this, you may ask yourself the question, okay, that's all nice and dandy. This all depends on where these levels are. But how can we spot these levels? Well, we have developed an indicator using our software engineering knowledge, which is able to spot exactly these levels on the chart. And of course, once you know where these levels are, you can then make the exact same predictions as I just did using the example. Okay, so that's what we developed. And it's not just this, we've also developed a scanner, or let's say a dashboard, which is able to scan for certain setups. For example, for a stock which may be approaching a key support level, or perhaps a stock which may be approaching a key resistance level. And once you have this knowledge, you can then, come up with your trading thesis, projecting in your mind at first where price may be in the future. Now, this brings us to step number 2, find technical setups. So now we have an indicator which can bring us these levels onto a chart, and finding technical setups is all about a scanning tool which can scan through thousands of stocks. And our scanning tool scan through almost 6,000 stocks to find stocks which currently right now have interesting technical setups. I'm going to see this tool in just a second. All right, so introducing Liquidity View, our scanner for swing and option traders, a scanner which allows you to scan for these high probability setups where price is approaching a key level. You may expect a bounce or a break of this level. You can define watch list, you can define alerts, and you can filter for all kinds of scenarios. Now, I don't want to be too theoretical, but I do have to cover maybe 3 more slides before we get into the actual scanning process. So slide number 1 is it's about one of my favorite things to scan for. By heart, I'm a trend trader. A trend trader likes the fact that, a stock is consistently making higher highs, and you can just benefit in the process. And in my heart, or my view, the longer a trend continues, the more likely, or the longer a trend is established, I should say, the more likely it is that this trend will continue. But, as a trend trader, there are good moments to enter into a trend trade, and then not so good ones. So, for example, of course, hindsight is 2020, but in this case, a not so good moment to enter into a trend trade would perhaps being up here when everything is extended. Everything's extended. We are at thin air levels. We are far away from our averages. Perhaps as a trend trader, it makes more sense to wait until prices come down a little bit, until trend takes a bit of a pause. We call this a pullback. Now we can see it here as well. Price was very expensive up here and then pulled back a little bit. We call this oftentimes a healthy pullback, which can be a very interesting long entry opportunity if you're able to spot these stocks, which are, first of all, in a long-term uptrend and currently have pulled back. So let's keep this in mind. This is our criteria number 1. Criteria number 2 for my favorite setup is I don't just want to have any pullback. I want to see a pullback where price pulled back to a key support level. Why do I want this? Well, for 2 reasons. First off, it's just one more checkbox in my list, which in my view increases the odds of the stock not going further down, but instead going further up, trading towards the middle, in between support and resistance. So one more box. And secondly, it's something that has to do with risk management, because once I know a stock has pulled back to a key level, guess where I can put my stop loss at? Right below this key support level. It's a very clearly defined technical level, allowing me to place my stop exactly where it should be instead of being random. And of course, knowing where your stop are is so important for position sizing, for knowing how much your risk is, and so forth. So this is why I like my pullback to coincide with a key support level. Now I'm going to switch over now to the dashboard. I'm going to show you how fast you can find stocks which satisfy all these criteria. So introducing our liquidity view dashboard. So I'm going to go over here to the dashboard. You can see it's completely web-based. And on the left-hand side, we have our scanner. And on the right-hand side, we do have our charting component. All right. Now, what we see right now is the scanning component. Here we can see we are scanning currently through 5,646 stocks. And remember, that we had certain criteria that we'd like to scan for. And the criteria number one was we would like to see a stock similar to this one here, similar to Citigroup, where price has been pushing higher for quite some time. If I go back here a little bit further, just bear with me until this reloads, we can see this stock by this label here has been bullish since February 2024. So a long-term bullish stock. So how can we find these stocks using our scanner? Because not every stock is going to be bullish. Well, we do have a scan criteria for this. If I go over to the right-hand side here, you can see a column called MA Rush. This column may be named a bit cryptically, but actually there's a reason for this, because this indicator, which draws these labels onto the chart, either bearish or bullish, it's called MA Rush. This is just the name we've chosen, but that's the indicator that we use to determine trend and trend strength. So what I can do now in our dashboard here, I can use one of these filters next to this column. And remember, we're scanning through 5,600 stocks. I'm going to go here and select our bullish filter. And once done, we only see the stocks which are currently bullish. For example, here, AbbVie, you can see it. Let me just scroll over here. AbbVie Inc. bullish. Oh, this is one of my annotations here. Let me just take it out real quick. Hide drawings. Bullish for 428 trading days, or ADI. And semiconductors, we also show what's the industry group in the sector this stock is in. Bullish for 52 trading days. Where do I see the 52 trading days? What's this number here? This number next to the green arrow, it says 52. And if you were to count from the last bar on your chart all the way back to this label, you would get to exactly this number, to 52. All right, so step number one is accomplished. We now have all the stocks which are currently bullish, but that's not enough. We also want a stock to have pulled back by a certain degree. Not like this stock, it pulled back a little bit, but we want this pullback to go down further. This is where our second indicator comes in. This indicator down here, which is called our trend radar indicator, which shows us the degree of a pullback within a trend. So for example, here we are on an uptrend, but then prices came down a little bit. We can see here, it came down at some point to 1, 2, 3, 4 levels, while the last level is still green. We call this in our book a level 4 pullback because it went down 4 levels deep. So we can scan for these pullbacks too, using this pullback column in our scanner. So I can click on this, on the filter next to it, and select level 4. And once done, now all of a sudden we only see stocks which currently pulled back by 4 levels. For example here, Cisco Systems, a technology stock. Of course, everybody knows Cisco, bullish for 243 trading days and currently pulling back at level 4. That's opening it up. Yes, we can see it here. Cisco Systems trending, level 4 pullback with the last bar. You can see this little red area. It's 4 levels down. But so this is Cisco. Perfect. Or another one here, DIS, Disney, the Walt Disney Company. Yeah, also here currently, what's an uptrend? You can see it's trending upwards. We pulled back to a level 4, and this could be another candidate. But there's one more ingredient missing. Because remember what we said, we want the stock to coincide with a key support level, which is this red level on your chart, the support zone. Right now, Disney, for example, is nowhere near the support level. It's really far away, actually. It's close to this resistance level. This one would not qualify. So how can we scan for this? Well, let me go back to our filter here, and I'm going to select this column here, Liquidity IQ Setup, which relates to the indicator which prints these levels on the chart. And I will select long bounce. We have many different filters here, but long bounce means it's a stock where price is currently near a support level and maybe bouncing to the long side. So I'm going to click on it. And once done, we can see now we have only 2 stocks remaining of our 5,600 stocks. And then I do one last thing. I sort by trend duration, because in my book, the longer the stock has been an uptrend, the more stable this uptrend is. And the first stock that comes up right now is Boston Scientific Corporation. If I open up the chart, you will see what I mean. So I'm opening this one up, and you can see This stock checks all our boxes. It's long-term uptrending, no doubt about it. Trending up. It made all-time highs recently, but then pulled back to this red level here. You can see it here. This red zone, a key support level. It's a level 4 pullback also via our trend radar indicator. To me, as a trend trader, as a swing trader, potentially also as an options trader, this is a key long trading opportunity and one of my favorite stocks to watch when the market opens on Monday. So keep in mind on this, Boston Scientific, BSX ticker symbol for a potential long entry depending on the market open, because it checks all our criteria. Another stock which looks interesting is the second one here, Boeing. Yeah, Boeing has had quite a recovery. It changed to an uptrend. Let me just show you here. It changed to an uptrend on May 27. Prices went up, they recovered. They're nowhere near the all-time highs, but they recovered a bit. After being down for quite a bit, they recovered, they pulled up, but now they're also trading near a key support level, and it's a level 4 pullback as per our trend radar indicator. Another interesting long swing trading opportunity. And why do I like these trades so much? Because they are trades which, in my view, have a low risk and high potential, meaning my stop loss would just be below this level, my upside potential potentially just below this key resistance level on top. So more to gain than to lose. That's the definition of low risk and high profit. All right, so this was my first setup. I have to speed up a little bit, but I hope you can see how easy it is to find these setups using the dashboard. 2 key stops out of 5,600 stocks that we can scan through. I'm going to quickly go back to my slides because the next setup will bring you yet another really interesting trade idea, but it's a different setup. So this was our bounce setup. Now let's think further. Unfortunately, in life, nothing is lasting forever. At some point, everything comes to an end. At some point, when it comes, we're leading this back to trading, every support level might be broken to the downside, or every resistance level might be broken to the upside. But when this happens, new opportunities for us are opening up once again. Because in this case, we can trade the breakout. We can anticipate, okay, after such a breakout, price will continue in the direction of the breakout for quite some time. And this breakout, of course, can be happening to the downside when support is broken, or to the upside when resistance is broken. The good news is we can also scan for these setups. So let me go back one more time to our scanner. I'm going to remove our previous scan criteria. You can see it here, removing all these. And what we're going to do now is we are going to search for stocks which broke above their resistance level. Again, it's a bullish play. We're going to find stocks which currently broke above this level. Which ones can we found? I'm going to go back one more time to our liquidity IQ setup column here, and I will select long break instead. The break of resistance to the long side. And guess which stocks are coming up? I've done this. I'll be sorting by trend duration, and I will add one more filter because a stock like this, APH, for example, that's a long break. We broke above resistance, but this break happened 88 trading days ago. This is old news. It happened down here. We broke above resistance. It's a beautiful breakout trade, but it's too late now. Prices are far away from this level. We want to find stocks where the break happened, guess what? At the very recent bar. So we can add an additional filter to it where we can say, okay, this should have happened at the current bar, at the last bar. I click on it and I'm back here now. And guess which stock comes up first? ING. Let's check it out. A banking stock. Headquartered in the Netherlands. We can see it here. Oh yeah, this stock has been an uptrend for quite some time. And now we just recently, look at this, broke above this key resistance level. And the idea is that we can now take a breakout trade, anticipating price will continue in this breakout direction for quite some time afterwards. Beautiful stock. Check it out on Monday to see if we see some follow through of ING to the long direction. Another one here, JPM, JP Morgan Chase. All right, let's check it out. Another stock which recently just broke above its resistance level on Friday. Look at this one here. It's the the flagship banking stock in the US. Broke above resistance on Friday. Also here, I'm going to keep a very close eye on this stock on Monday when the market opens, anticipating a follow through on this breakout to further higher levels. So ING GPM for the breakout trade. All right, and I have one more for you, and then we're going to bring it all together. So once again, back to my slides, and now let's talk about a variant of the breakout trade, which we call the breakout retrace trade. Sounds complicated, it's not so complicated. So let's check it out. So imagine price broke above this green line here, which was a resistance level. Price broke above, we initially go up, but then price stalls out and it actually comes back down again, down to the broken resistance level, which however, at this point will be acting as support. We've heard it all before. Resistance can become support when it's broken. This is what's happening here. And oftentimes when this happened, when this initial market fake out has happened, and price came down to this broken resistance level, oftentimes this can be a launch pad for prices to push further higher and for this breakout move to really gain steam to the upside direction. So how can we scan for this very, particular setup? Well, it's also possible with our dashboard. And by the way, what I'm showing you right now are just my favorite scans. There's so many more things you can do with this dashboard. So I'm going to once again remove my filters. Here, there's also a button to do this. You're back to our 5,646 stocks. And in this case, I will scan for a long break retrace. This one here. I'm done with the scanning process. We only have 16 stocks out of 4,600 which qualify for this very particular scenario. And the first stock that comes up is AutoNation. Let's check it out. AN ticker symbol. I'm gonna go here and we can see it. All right. What do we see? Let me make this full screen. We broke above this resistance level, this green line here, the first time on August 22nd. Price initially came up a little bit, then came down back again, back to this resistance level acting as support. Prices then turned up again, because this was support at this point, to an all-time high on September 5th. But now we may be on the brink of turning down again. And if prices on Monday go anywhere near this level here, around the 217, 280 zone, I would be very interesting for a potential long entry of AutoNation because it checks all the criteria. Long-term uptrending stock for 1,274 trading days. That's like 5 or 6 years, trending only in one direction. Currently mid all-time highs. We broke above resistance, but price is coming down back to the broken resistance level, which is our zone break retrace trade. So keep an eye on this one too. AutoNation for Monday's market open. All right, so let me go back to my slide to bring it all together. So we checked out how our dashboard works. And just to repeat, most of these setups I've shown you right now are based on our liquidity IQ indicator, which draws the support and resistance levels on the chart, our MA rush indicator, which does the trend analysis, and trend radar, which shows you these interesting healthy pullbacks directly on the chart. But there's so much more in there. We scanned through 5,500 plus symbol. We have all kinds of scan criteria, for example, whether a stock is optionable by market cap, by dividends, by earning states, and so forth and so forth. 30 plus filters and scans built in. You can create your own watch list. You can add trade notes to your dashboard. You can receive trade alerts and so forth. Now, one more thing. Step number 3. Once you see a good setup, I should say, we still have to do one more decision. We have to decide how are we going to trade these setups. And there are many different options because depending on market conditions, depending on the volatility of the stock, depending on how expensive the stock is, depending on how much you may be risking for a single trade, there are options. There are better options or variants and worse ones. For example, you could use your stop loss either very aggressively or very conservatively, where it's further away. You can think for a long-term gain, waiting it out till it hits a really optimistic price target, or you just get these short-term bounce. You can trade the stock outright or potentially using an options trade. You can buy calls if it's a long trade. You can sell puts if you want to do some cash secured price action, depending on the stock's volatility. How expensive are these options and so forth. So all these things need to be planned out and taken into consideration. Now, I can't cover these things right now, but we do have weekly webinars where we discuss all these different ways of trading a particular setup. Every Tuesday, for example, we have our weekly webinars. We have live scanning sessions every weekend. We are providing an options alerts newsletter with some option trade ideas. We have boot camps and master classes. So you will not be let alone with planning out your trade. And we are in this journey together. We have built a trading community where we all come together and bouncing off ideas and together deciding, hey, this could be an interesting setup, together discussing how to trade the setup and so forth. All right, now to wrap things up, because I think I'm nearing my my end for this presentation, we have put together a special offer for you for the trading scanner, which I have just shown you. We call this the Liquidity View Scanner. And typically, it retails, or we offer it, I should say, at $997 a year. That's a very powerful scanner. It scans to thousands, actually much more than thousands, more than 5,000 symbols. It's lightning fast. You can create your own watch list. You can get trade alerts. You can scan for almost everything to find the technical setup that you are interested in. Now, typically it's at $997 a year, but as a big thank you for being here today, for listening to me speak so fast, and I think with my German accent, it might not even be easy to understand. I'm just so excited. We decided to make it a very special offer today, where you will get a 50% discount on this annual subscription. And you will get 3 bonus offers. Now, we don't do this very often, so we have to limit the availability of these offers to only the first 10 users. Now, I'm going to discuss in a second what these 3 bonus offers are all about. But if you want to check it out, simply go to tradingindicators.com, which is our homepage, /corner. And of corner stands for the Traders Corner. That's why we are all here today. And please, Anthony, if you can, please post this link into the chat box. So tradingindicators.com/corner to get a 50% discount off the annual subscription. So it's only going to cost you $4.99, actually $498.50 per year for the annual subscription. All right, now what else do the first 10 users get? I mentioned 3 bonus offers. All right, so what are these bonus offers? Bonus offer number 1 is going to be 1 month of a subscription. It's going to be completely complimentary of our options alert service, which comes out every weekend. The next one comes out tomorrow afternoon, where you will get our short-term strangle ideas. An option strangle is a particular option strategy, some long-term directional plays, typically debit spreads, and some credit spreads as well. So you're going to get 1 month of this service for free. There's no commitment. You will, will not be signed, and it's just going to run out if you don't want to keep it for longer. But this will be your bonus number 1. Bonus number 2. You will be invited to our next exclusive live market session, which happening every Tuesday. I mentioned, we're going to help you planning out your trades. So every Tuesday, we have something called what we call lunch and learn session, which is a live market session where we look at the market, where we scan for more setups, where we're discussing trade ideas. The next one is scheduled for next Tuesday, September 16, I'm sorry, at 12 p.m. Eastern time. Of course, this session is recorded and you will be invited to all these sessions for life. And bonus number 3 is our boot camp to get you fully started with this great dashboard. This boot camp will take place on Thursday, next week, Thursday, September 18 at 4 p.m. Eastern time. And once again, the link to get the special offer, the 50% discount is tradingindicators.com/corner. It's reserved for the first 10 users. All right. So with this, I'm going to ask Anthony. Anthony, are there any questions from the audience which I could address at this point?
Yes, let me have a look here. I don't see anything at the moment. Audience, please, this is your opportunity to talk to Dr. Sinnig. He has an amazing website, by the way, so check it out. Ask the questions now, please, if you have any, I hope.
And it would be nice to have you guys on board and just with some of the trade ideas. We actually just had our live scanning session beforehand where we called out the very same trades. And once you get a hang of it, how to find these setups and which buttons to click, I promise you this will not take more than 10 minutes. And the beauty of this is you can run these scans every single day after the market closes, because every single day there will be new interesting trade setups coming in. Setups that we personally trade in our own portfolio, which we trade in our company portfolio, and of course that our members trade in their portfolio. And what I also do every single week, I share a watch list. It's down here. It's shared with all our users with these swing trades that we have picked in our live scanning session. So in this particular case, you can see we have AutoNation in here, we have Arista Networks, we have Boston Scientific, JP Morgan, all the ones that we Boeing as well, all the ones that I found with you right now. These will also send out to our members. So it would be nice to have you guys on board, join us at our trading community. We also have a Discord channel to which you will be enrolled. You have direct contact with us all the time at tradingindicators.com/corner, which is the offer link. All right. So Anthony, any questions so far, or is
anything? What is your? I don't know. Michael's asking, what is your favorite type of trade lately? And then I want to say, Barry, I don't quite understand what you're asking. He's saying, comment on BMNR on LS or IS.
BMNR is it's a bit mining, Bitcoin or crypto mining stock. Yeah, it's very hyped up. But from a technical analysis, quite limited because there's not so much price data in there yet. So this would be more a stock which you would trade from a fundamental point of view. But yeah, it's definitely hyped up with big players being invested there. But what is my favorite trade? I like the first one I've shown where we found a Boston Scientific, a long-term trending stock, currently pulling back, taking a break in trend. The pullback coincides with the key support level. That's my favorite one. The long bounce trade, hands down the favorite. And most of the time we use such a bounce trade for our trade of the week in our newsletter every Monday.
And that's it for the questions right now. So thank you so much, Dr. Sinnig.
It's been fun. Yeah.
Excellent presentation. Fantastic tools and a powerful process for swing traders looking to cut through the clutter. Dr. Daniel Sinnig's promo link is now in the chat box, so check it out. And be sure to check out the website. Really, really good stuff there. I think it's really, really well organized. And the more indicators we could have and put to use, the better. So thank you, Dr. Sinnig, for being here today.
Thanks, guys. Have a great show. Thank you. Bye-bye.
Thank you. We really appreciate you. And finally, closing out our summit is David Wyse of Right Line Trading, here to share the exact system behind his 89% win rate in options built on Heiken-Ashi candles and his SPY super system, which is a really amazing alert service. His session is Heiken-Ashi plus SPY super system, the formula behind my winning trades. If you're tired of emotion-based trades and confusing charts, this is the structure you've been waiting for, because David does all the hard work usually. David will show you when to enter, when to exit, and how to build a simple disciplined trading setup that you can apply immediately. So let's welcome David Wyse. I almost called you Dr. Wyse. So thanks for being here, David.
That's a funny story. My middle name is Russell, and so when I go to make reservations at a hotel, I usually use Dr. Wyse. And one time down in Naples, Florida, I went down there and they saw me come in and welcomed me as Dr. Wyse and gave me an upgraded room.
Nice.
Kind of funny. Thanks very much. I appreciate the nice introduction, and thanks so much everybody for being here on a Saturday afternoon, weekend when you could be out relaxing, and instead you're trying to improve your trading, and I commend everybody for doing that. Again, my name is David Wyse. I'm an options trader and a short-term options trader and swing trader. I use a piece of software called the SPY Super System, which we're going to get into today, which identifies when institutions are in the trades and when they're not. I have a live trading room that we'll talk about. I'm there every market day from market open to market close. I think one of the few rooms that actually has a trader actually in there working with the traders all day long, answering lots of questions, and showing charts and answering setups for folks to see what they like for a trade and what they don't like for a trade. Also have a text alert service. So we're going to talk about all of those things, and I'm also going to spend some time on Heiken-Ashi candles today, which is a candlestick structure that you may have heard of, you may not have, but if you learn how to use it, you can improve your trading dramatically by switching to Heiken-Ashi candles when deemed appropriate. All right, so first thing I have to do is the disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. Okay, if you have any questions, by the way, you put your name, username, and number in the chat box, and Rory from Right Line will get you a call back. But also, I'll also be monitoring the questions as I go through the presentation, so that if some pertinent questions come up that we can answer right then, I'll do that as well. But and I'll put this back up at the end of the day, so you can put you can get a hold of him if you want to. Again, your username or Skype username in the chat box, and here's his number. All right, this is just kind of a quick graphics of the alert service. It's called the Compass Alert Service. When we first started, when the software was first created to identify when institutions are in the trade, it was called the Compass system, and it was for quite a few years. It's been enhanced quite effectively in the last 2 years or so, and it's now called the SPY Super System. But the alert service basically is, as I identify high probability trades to take in the room, I'll send them on alerts to alert members, and they will get them on their phone. And I'm a member of the alert service, so I can identify how quick these alerts come in. And it takes about 5 to 10 seconds from the time I enter the alert into getting to my phone. All right, so that would be for the alert service. Now I'm going to go through this trade, this slide. If you've seen my presentations before, you've seen this before, but please bear with me. This is very, very important, and it's very important for folks to understand what drives the market. And this is really important. These little small marbles here, these are all the retail traders such as myself, and there's tens of millions of them in the world that are retail traders. And these are the institutions made up of Goldman Sachs, basically investment banks, also mutual funds, pension funds, and I guess hedge funds are in here too. A lot of hedge funds are part of the institutions, but this is what drives the market. Now, there's quite a few different institutions, and what we're trying to identify is when a majority of the institutions are pushing a stock one way or the other, not when they're fighting against each other, but when they're creating a trend. And this is what creates a trend. When we're in the market, just the retail traders, when we're trading, and we don't have any kind of a trend being developed by institutions, all you're getting in the market is a lot of chop and a lot of chaos. And what you end up with is a lot of chop and a lot of chaos. And if you're trading, what you're doing is getting lots of little losses, and it's very frustrating. And this is what traders run into problems. And so our job is to identify when the institutions are in the trade. If we know the institutions are in the trade, pushing the stock up or pushing the stock down, your chances of success become much, much better. These would be considered one of the criteria for high probability trade setups. The institutions must be trading those stocks. Okay, now this is something I kind of added recently. It seems a little off topic, I guess, but this is a blackjack table, ace and spades. It's a blackjack, couple of $100 chips. And why is this here? Well, when I first started trading, and it was, again, I've been professionally trading for about over 16 years, but people would tell me that trading was gambling. I mean, it was fixed. You couldn't make any money on it. You just you have no opportunity to be consistently profitable in it. And the reason I bring this up here with the blackjack is when I was much younger, when I was just out of college, I went to Las Vegas, and I learned how to count cards before I went out there for playing blackjack. So I became a professional blackjack player, and that's how I made my living. And you do this by tracking the cards. Tracking the cards is not counting individual cards. It's tracking how many little cards are removed from the deck, and those would be deuces through sevens, and how many big cards are eliminated from the deck, which is all the face cards and the aces. And the reason this is important is as the little cards are removed from the deck, the composition of the deck is different than it was when it started. And if you have a deck composition that consists of a lot more big cards than normal, then the players have a fairly large advantage over the house. And when there's a lot more little cards than normally would be in the normal composition of the deck, then the house has a big edge. So you track the composition of the remaining cards, and you make your bets accordingly. If it's in your favor, then you can bet bigger. If it's against you, then you just bet the smallest amount. So this gave me a mathematical edge over the casinos by knowing when the cards are in my favor. So here's a game which is considered gambling that you can actually beat if you have a methodology or a system to do it with. And the reason I brought this up is trading stocks and options is very similar in that without knowing what the institutions are doing, the trader has no edge. In essence, you're gambling. You really are gambling if you don't have an edge and a methodology to use. And I consider the SPY Super System, which is the software I'm going to show you today, my card counting system. It basically gives me an edge over the other traders, allowing us the ability to become consistently profitable traders, because we're trading when the institutions are in there. We're not trying to beat the institutions. We're trying to follow them and take money from other retail traders. And the SPY Super System, when I use it in conjunction with identifying the highest probability trade setups using other technical analysis, it can lead to consistent profits. And you'll see the profitability that we've had in the trading room for the last 3.5 years has been extraordinarily good. We have a win rate of between 85 and 90% every month. And it's because we can identify when institutions are in the trade and take those trades. We do have a couple of rules to trade by in the room in the alert service. It's called trade the best and skip the rest. Simply, this means we're going to only trade the very best setups that there are, which means A, the institutions have to be in the trade, and then B, that particular trade has to be technically strong. No nearby resistance to stop it. It has a good daily chart that looks like a nice trending chart. Those are the things that make trade the best. Skipping the rest basically tells us to not take anything that the institutions aren't in and aren't pushing. So that's important. Next one is, and this is basically, I use this because our objective is not to make trades, our objective is to make money. This is done to keep traders from overtrading. Overtrading is a huge problem with retail traders. They trade too many times. They feel like they always have to be in a trade. So I say this every day in the room, our objective is not to make trades, our objective is to make money. That's all we're really trying to do. You're not getting rewarded for making 20 trades a day. You're getting rewarded for making 2 or 3 good trades a day. Right? So that's another one of the rules we have. Maintaining discipline is very, very critical. Now, discipline is once you have a strategy and a methodology that you understand, you learn and understand and trade, then you stick with it. That means don't be listening to other people on CNBC or on being posted on X. Don't be listening to people that think they know what they're talking about and following them. So you need to learn and follow the process, and then remain patient. Very key thing here, remain patient. Again, our objective is not to make trades. Our objective is to make money. We do that by being patient, waiting for the trades to come to us, and then taking the very best ones that there are. Okay, and as a profitable trader, obviously we need an edge over other retail traders. Our edges, or my edges specifically, is the SPY Super System software. Now in the room every day, you can buy the software. I'll show you that at the end, and have it installed and use it yourself. But I have this displayed in the room every single day from market open to market close. And we can switch the symbols and see what we're looking at, but we can always tell whether the institutions are in the trades or not. So if you're in the room, you'll always see that. But this is the major edge we've got. This is the one that tells us that the institutions are in. Second thing we use for criteria is we trade relative strength and relative weakness. Now, relative strength and relative weakness does not mean RSI. This is not relative strength indicators. I don't use the RSI. Relative strength means if the SPY, the S&P 500 is trading sideways and down, for example, on a 5-minute chart, and your stock is stacking green candles, it's got relative strength. It's stronger than the market. It's going to give you an edge by taking a stock with relative strength. And if the market's weak or going up and you want to go, you like a stock short, you want a stock that's got relative weakness to the market. So this is a very important criteria that a lot of retail traders don't seem to understand. I know a lot of retail traders. I don't know an awful lot that actually understand trading actual relative strength and relative weakness. I hear all the times about RSI and MACDs, but this is what really matters. Then we want to trade with the market trend. The market was trending up really beautifully on Thursday this past week. All the trades you take would typically be long. You're going to trade with the market trend. If the market's just choppy, then you can trade in either direction with the very highest probability trade setups for that particular day. And the last thing is to buy near support and sell near resistance. Don't chase stocks up or down. Wait for a stock to come to a support or resistance level, bounce off of it, and go back into the trend. You're going to be in with a much better likelihood of taking a small loss if it does happen to go against you. So buy near support, sell near resistance. Very critical things. If you follow these four edges right here, you're going to be ahead of about 98% of retail traders in the world. Okay, the system with the compass switching, which is now called the SPY super system, this is what it does. It identifies the highest probability setups for us while sidestepping the setups that look good. They're going to fail more often than they succeed by finding when the institutions are in there. It does this by identifying when institutions are driving the move and when they're not. It analyzes very complex trading data, and it displays the results in easily identifiable format. You're going to be able to see on the screen when I show them to you very, very easily how you can tell if the institutions are in the trade or not. And this visual element, it's colors that are being shown here, it makes it possible for even new traders to find high probability trades. And I think this is the one thing that really can expedite your learning curve when you're trying to learn how to trade, by having the ability to identify when you're getting a stock that's likely a high probability trade setup, okay, without knowing an awful lot about technical analysis at the beginning. Okay, and how are we getting an edge over the retail traders? Well, we're only taking trades that are being driven by institutions, as I said. We trade stocks that have relative strength or relative weakness versus the SPYs or the Qs, and we trade in the direction of the overall market trend, right? Those are key things. And it gives us an edge because our trades are going to be supported by institutional buying or selling. We're not in there alone. We're in there with the institution. So we know we've got some institutional buying or selling behind the trade we're taking. It's going to be outperforming the SPY or the Qs, and it's going to be moving in the direction of the overall market. Those are key edges. It's going to put you out ahead of most other retail traders. All right. Now, just to emphasize, we're going to get into the software I want to show you, but I just want you to remember something when we go through the results that we've had in the room. We've had excellent, as I said, 85 to 90% win rate month after month after month. And I think in the last 3.5 years, we've had one losing month. And it was a small losing month, and I'm going to show you that one. But the SPY Super System software, it's the critical element in finding and trading the highest probability trades. This software is the engine that drives our exceptional results. When you see the results we've had, remember, knowing when the institutions are in the trade is what makes this possible, right? And the ability to identify when the institutional players are driving a bullish or bearish move, and when they're absent, it's the key factor in pinpointing the high probability trade setups. Very critical. And again, that is the function of the SPY Super System software, and it's the critical component. So I just want to emphasize that this is something that when you see the results, remember this is where they're coming from. All right, I just kind of a little blurb here. I have a Brightline has YouTube feeds. I'm on every day. I'm going to be on from 11:30 to 12:30 every day next week. I go on there every single morning around 11:30, and when you get into the YouTube feed here, you're going to be in the room. So you'll see the room exactly as it's done, as it's being presented every single day. You'll see the charts, you'll hear the question, you'll see the questions, you'll see my answers, you'll hear me talking about stocks. All right, so that's at 11:30 each day, rightlinetrading.com. It's the YouTube channel. Okay. Now this thing, I just threw this in today because I really find this important. I did a video on this, and I'm just going to run through these. But these are what I identified as the most common mistakes retail traders make. And I've made them all when I was learning how to trade. But there's one here specifically that I'm going to focus on. One is not considering current market conditions. Knowing what the market's doing on a daily basis and on a 5-minute basis is important. If you're trying to trade intraday trades, you're trying to trade maybe a long trade, try to buy something long. If you don't have a trending market, you're going to have to stay in and get out of the trade quickly. When the current market conditions are choppy, you have to trade differently than you do when the market conditions are trending. So it's critical to understand what the current market conditions are. All right. Over trading, big huge red flag for retail traders. I know lots of retail traders. I've mentored lots, and this is one of the biggest problems. And this comes from lack of patience. You feel like you're a retail trader. You feel like you're a trader. You feel like I've got to be in a trade all the time. You don't, right? No trade is a trade. Cash is a position. You don't have to be in a trade all the time. So this is a big, big problem. Over trading. Trading your P&L instead of your technicals. This thing I've talked about many, many times, and that is people that are watching their P&L when they're trading are now introducing emotion into their trading. They look at the P&L, if they go down by $300-400 on a trade, and then it comes back up, and they're up about 150, and then it comes back down, they're only up to $50, up $50 a trade, they bail out. They bail out because they relieved their back to green again because they were red, and if they get out of the trade, so they're trading off of their P&L, which is creating emotion instead of the technicals. If you get into a trade, it's a good technical setup. You shouldn't be getting out of it unless that technical setup breaks. So when these folks are getting out of the trade to get a small little gain, a good technical trader would likely be adding to the position right there because it's still a good technical trade. So please don't trade off your P&L. I recommend not even watching your P&L during the day. I don't look at mine at all. One of the best pieces of advice I got when I started trading was a really successful retail trader said, just treat it like a video game. Treat it like you're playing a game against a whole bunch of other retail traders out there that looking at red and green candles, and you have the information and the knowledge to trade better than they do. Forget about the P&L, focus on the technicals. And I get this all the time. Trading what you think instead of what the price says, a big, big problem here. This is, I'm gonna talk about this in just 1 second. This is basically people that go to X and start reading all kinds of posts out there and taking trades off of there, or they get Bloomberg News in the background or CNBC and they're trading off of that. Trading what you think instead of what the price says is a huge, huge problem. It's going to kill you. It creates a bias in your mind when you think that something's going to happen, even though it hasn't happened yet, and you end up trading that way, even though the market's not going that way. Being over leveraged, too much risk, not using daily chart for swing trades. We'll talk about this. Lack of patience, obviously critical. Forcing trades, which is related to lack of patience. Attempting to pick bottoms and tops. Anybody ever tried to do that? They're in their head, they see the stock moving up and they say, it can't go any higher, or it can't go any lower, time to get in. Big, big error. Not waiting for confirmation to enter a trade. In other words, try to get into a breakout trade and it fails. And FOMO, fear of missing out. This is related to lack of patience. All right, so those are the most common mistakes. I want you to think about this one for a minute. Trading what you think instead of what the price says. Okay. This is something Stephen Hawking said that relates to trading what you think instead of what you see. The greatest enemy of knowledge, it's not ignorance, it's the illusion of knowledge. When you're trading what you think the market should be doing, you think the market should be bearish. Look at all this bad news. The jobs report's terrible. The market should be going down. I've got to get bearish. When you're doing that, you're trading with the illusion of knowledge. You're trading something that isn't true, that you think is true, and it's destroying your trading. And it'd be better off to somebody that comes in there who knows nothing. They're going to do a lot better than someone who's trading under the illusion of knowledge. Okay. Yeah, you have Ron. Yeah, you're on the West Coast and missed some of the speakers. Yeah, the whole Traders Corner will be recorded, and you'll get a copy of the video on the whole thing. Okay. Now I'm going to run right into the actual SPY super system. I'm just going to do a graphic of what it looks like. This software runs on Thinkorswim. You don't have to trade on Thinkorswim. You can trade anywhere. I don't trade on Thinkorswim, but the software loads onto Thinkorswim or on NinjaTrader. But this is what it looks like on Thinkorswim. This is where I actually use it. And this is I just blew this up so you can see where the indicators are to let us know if institutions are in the trade. The first thing here is this is the Laguerre momentum oscillator. This is a modified oscillator. This does not include divergence. This just includes straight momentum. This is the current time frame momentum. This is what the momentum is tapping on a particular stock for the current time frame of the chart you're looking at. In this case, if it's a 5-minute chart, this is the momentum on a 5-minute chart. It consists of colors. You've got red and yellow for bearish, and blue and green for bullish. This is current time frame momentum. This is multi-time frame momentum. Okay, and this is the long-term trend. This is 3 different times, and this is the long-term trend across multiple time frames. if you were trading like on a daily chart, this would be 1 day, 3 days, and 9 days. And it's going to tell you what the momentum is, bullish or bearish, across all 3 of those time frames, right? And then this is a long-term trend. So this is what tells us whether the institutions are in the trade right now or not, okay? Up here on the pricing portion of this, on the 5-minute chart, a couple of key things here is the volume weighted average price. You should always have that on your 5-minute chart. And the reason is institutions all use it. Volume weighted average price, it's a big support and resistance level. It's called the VWAP. This is the 15 EMA. This is a smooth 15 EMA. In other words, it's the EMA of an EMA. And this is the little thin red line. This is also a support and resistance level we use on the 5-minute chart. Okay, and this white line that you'll see here, it's created by the SPY super system. It's a pivot point. It's a very strong support and resistance level. And then you have these little arrows here. These are pop signals or pop out of the box symbols. These tell us when a stock is breaking compression to the downside on the blue, or breaking compression to the upside on the bullish side. And it's one of the things we can use to enter a trade at a really, really good level. All right, so that's what the SPY super system looks like, and how we know the institutions are in the trade. This I'm going to show you a couple of charts. One other thing we just added to the SPY super system is this volume line, VOLD trend line. This tells us what the market internals are. So this is telling us what the market internals are for the entire market, the whole New York Stock Exchange at any point in time or during the day based on 5-minute charts. All right, so if you're looking at Google may look bullish, but this may be showing trending down, yellow trending down red. This shows us what the current conditions are for the 5-minute candlesticks on the market. And it's basically made up of looking at all the volume on stocks moving up, subtracting all the volume on stocks moving down. So it tells you whether you've got more stocks, more volume going up to the upside or more volume to the downside. And this will tell you that. And it helps a lot, because if you're trading a short stock, for example, you're trading short for the day, and this happens to be trending down for the last 20 minutes or half an hour, you're trading with the market trend of the overall market. So that you can use that to help you align your trades to bullish or bearish. It swings back and forth, but it's a nice one. These two are going away. We're not going to use these anymore. I never really found them very effective, so I'm going to dump them. Anyway, so there is our SPY super system. Now this is a trade we took on NVIDIA not too long ago. This was back in first part of August, but I just kind of show you, this is a daily chart, again, of the SPY super system on NVIDIA, right? So if you look at it, you can see the current time frame momentum, which is daily, the multi-time frame momentum, which is 1 day, 3 day, 9 days. They're both green, which means very bullish, very, very bullish. Momentum indicator is strong, very bullish. The trend is strong. So this was a very strong stock. So what we were looking for is we were looking for a place to get into it. Now, we have a methodology that we call PBOs, or pullback opportunities. This reflects a pullback opportunity. The stock moved up, it pulled back to a support level, and we're waiting for it to bounce. And here we get a bounce right off this. This is the 15 EMA on the daily chart. It bounces right off of that. This is where we took the trade. Man, they're obviously, the institutions are buying it. We take it at a nice level after this pullback, and we get out here on 8.7 and 32% profit in the NVIDIA trade. But I want you to see how the institutions are in there, and it was easy for us to see that the institutions were all in there. See, back over here, they had started to get a little bit bearish, and now they switched back to bullish again. All right, this was SMR. This was another swing trade we took. Again, look at the indicators. This one's yellow at this point in time right here. This is the earnings. It went yellow. That's bearish. Then it went back to green. The multi-time frame was already green. We take the trade right there, And that trade popped up on SMR, getting on 513, out at 515, 56% profit. So 2,000 invested in a trade, created $1,170 profit. And for my results, I'm going to use $2,000 as a base. It doesn't mean anybody uses that, but I have to have something to use to give you the profitability month by month and week by week. So that's what I always use. 2,000 invested in the trade. Since there are options, obviously, if the options are $1, you can buy 20. If they're $2, you can buy 10. But keeping the price the same. But that's what where I come up with this from. All right, so there's that nice bearish to bullish, big pop here, nice profit in SMR. This was Tesla. This is a 5-minute chart. This was an intraday trade on Tesla using our indicators. All right, so this is the morning. Everything you see, it's blue, which is bullish. Green is even more bullish. And this is a 5-minute chart. When we're trading off the 5-minute chart, and 5-minute charts we use for what's called SPY Super System methodology trades off the 5-minute. We're not looking at the daily chart because we're only planning on being in these for 2 or 3 or 4 5-minute candles. These are not swing trades. They're not even long day trades. These are very quick intraday trades. So as Tesla popped up above the VWAP, we take it right here because it's everything that's blue, which is bullish. We don't care about the multi-time frame if we're just trading off the 5-minute chart, right? For the intraday trade. If this was a swing trade, we'd want both of these to be aligned, but they aren't. So it pops up and we take it here, and this is where you get out. It comes up here, tops out, and then it starts to pull back again with some red candlesticks. You're out of the trade, right? So that's Tesla. And this is an intraday SPY trade. This was just taking a quick 5-minute trade on the SPY. Bearish, selling, selling, selling. Right here about 11:10, switches to bullish. Institutions are in. We get a pop out of the box symbol through the VWAP right there. Volume weighted average price pops up through the VWAP. We take it right here and we ride this 5-minute candles up. Again, this is an intraday trade. This is not a swing trade. We're only going to be in this for a few candlesticks. So I'm not looking at the daily chart here. I'm just looking at the 5-minute chart. Any trades that you take that are going to be all day long, if you want to be in for 4, 5, 6 hours or overnight or 3 weeks, you've got to have your daily chart aligned with your 5-minute chart. But for the intraday trades, it's not necessary because you're only going to be in there for a few candlesticks. Okay? And this was a Wendy's trade. This was another daily chart. Just kind of show you, again, here's Wendy's, here's their earnings. Notice it went from buying blue to selling red right here. We take the trade right here and route overnight in this little pop down right here. Okay, institutions are selling it. You can see they're selling it. And this was a daily chart. So the daily and the multi-time frame on the daily has to be aligned with the current time frame. So they were both red. That means they're both bearish. Okay, this is somebody who doesn't, just to throw a humor in here, this is somebody who's trading emotionally. This is somebody trading off of their P&L. They get into a trade in the morning on FOMO. Somebody, they heard Netflix was going to move up big today, so they jump in after it's already moved up about 8%, way away from any support levels, and they get in and it turns around, heads back down, heading for support. And they don't know what to do. Basically, they're just freaking out. And I think most every trader has felt like this at some point in time. And it's because you don't have a good methodology and strategy to follow. You're going to get into all kinds of emotional turmoil trying to trade. All right, and this is somebody who actually has a method and strategy they're using. They have the SPY Super System. They can tell that the institutions are in the trade. They take the trade and they're happy that they're making some money. I don't get this emotional about trading, by the way. I trade very methodically. Okay, so before we get into the Heiken-Ashis, I want to talk something about the process precedes results. And this falls again back to don't trade your P&L, trade off of what the technicals are telling you. And in order to do that, you've got to learn high probability criteria and strategies, and you've got to learn that before you start focusing on results. This is the most important thing. Learn the setups, learn how to read when institutions are in the trade, understand relative strength and relative weakness, know what the market trend is. Once you've got those things pinned down and you can trade with a nice method off of that, then you can start considering whether you're making money or not. But because focusing on your results or your P&L without having a solid process to follow is going to end in failure. I get a lot of people that take trades which are bad trades. And they say, look at that, what do you think of this trade? I say, it's not a high probability trade. They'll take it and they'll make money and they'll tell me, see, it worked. What they've done is they've reinforced in their mind this bad trade, and they're going to start taking it more and more, thinking that they're going to win, and it's going to kill them. Because just because you have a bad trade doesn't mean you can't win on it sometimes. Just because you have a good high probability trade doesn't mean there's going to be losers. But if you're focusing on you're trading your P&L, and you don't have a strategy, you're going to have lots and lots of losers, and it's going to knock you right out of the game. All right, this OODA loop, I'll leave this in here for anybody who wants to see this when you get the video on this. This is just a mental checklist you go through when you're trying to trade. Military uses this, corporations use this. It's called the OODA loop. It's observe, orient, decide, and act. So for me, observing is using my scans, watch lists, and news to identify prospects. Orient, identify whether the prospect meets the high probability criteria on the daily and 5-minute charts. Identify support and resistance levels, know the next earning dates. In other words, know everything you need to know about that particular stock that you're going to take based on its options, et cetera, before you decide it's good or bad. Well, now you've oriented yourself. When you find something that looks good there, decide. Make your decision on whether this trade qualifies as a good high probability trade setup. If it does, take the trade, act. Try to avoid analysis paralysis. Okay, that's the OODA loop. Michael, question. Okay, on 5-minute trades, I'm mostly trading 0-day options. I am, yeah. On the intraday trades, I mean, I'll take some of those on something that's a stock that has weekly options, and I'm just going to get in and out. But if you're trading the SPY, the Qs, the IWM, or the futures, I use 0 DTE, 0-day expiration, except once it gets past about 1:30 in the afternoon. If I'm trading the SPY, for example, at 2 o'clock in the afternoon, I'll take the next day's expiration date so that if I get a compression takes place during that day, you know, if the stock moves sideways for half an hour, I won't get so much time decay on the calls or the puts if I take the 1-day DT. But basically there's 0 DTEs on those 5-minute trades if they have 0 DT options available. Okay, and here's the basic high probability trade setup funnel that I use. Again, this is a virtual, this is a mental process. If I'm going to take a trade, I'm expecting that I want the daily chart and the 5-minute chart to align. If I'm going long a stock, this is not for the quick 5-minute trades. This is for swing type trades, which could just be 4 or 5 hours. The daily chart has to be bullish if I'm going long. It has to be bearish if I'm going short. I will not take a trade. It's a swing type trade if I'm not trading with the direction of the daily chart technically, and if the institutions aren't in it. We want to trade with the trend, both stock and market. What's the context of the market? Is the market choppy? Is choppy today? Is it trending up today? Big difference. You've got to know what that is because it's going to impact how long you stay in a trade, how many trades you take, and how much profit you're going to try to take on it. Then this is the key here. SPY super system must align. If you're going long, a swing type trade, the SPY super system has got to be telling you that the institutions are in the trade. You can have multi-time frame and current time frame momentum. Both have to be bullish for longs and bearish for shorts. All right. And then relative strength and relative weakness. We talked about that. And then try to enter near support, enter near resistance. You're going to get a few of them. They're going to drop out the bottom here. Then you pick the best one. Okay. All right. This is just the same thing written out. SPY super system indicators must align in the direction of the trade. Critical. Stocks to be traded should have daily and 5-minute charts aligned. This is for any kind of long, all day trade or swing trades. All right, and have patience. I reinforce this a lot. By the way, on a 5-minute chart, if you're going long, the stock price needs to be above the VWAP. Don't go long a stock that's below the VWAP, and it should be below the VWAP if you're going short, because that's what the institutions are looking for. If the stock is below the VWAP and you're going long, you're fighting the institutions. All right, just so you know, inside the room and on the alert service, these are the setups that we use, the strategies that we use. I do a lot of straight calls and straight puts. I do straddles and strangles. This is a non-directional trade called straddles and strangles. I do debit spreads using weekly options expiration. And we do quite a few of these. We do a lot of straight calls and straight puts. I do time spreads over earnings. This is something we use over earnings, which is non-directional, to capture the implied volatility crush when earnings come out. If anybody doesn't know what volatility crush is, just before earnings come out, the market makers increase the price of the puts and calls. In other words, they jack the price up because they don't know what the earnings is going to be. They don't know how far the stock's going to move, and they don't know what direction it's going to move. So they protect themselves by jacking up the volatility, which in turn creates a much higher price on the puts and calls. So what we do is we have a strategy that when the earnings come out and that volatility comes out of those premium now because the market makers know where the stock's going and about how much, we gather we have a structure that allows us to capture that volatility crush as a profit by selling this week's calls and buying next week's calls. And that's it's a fairly simple strategy, but it works very, very well. Very, very good results with this. Weekly ATM strategy, we just closed one down this week. This is a weekly at the money strategy, or I call this the automatic teller machine. Basically, we sell puts weekly against a neutral to bullish stock that's moving sideways and moving up. We sell puts against it every week and for several weeks, and we keep a longer dated put further out in time to protect ourselves. This one we had here was the Alcoa. We were selling with $32 puts for the last 3 weeks. We had a $30 put out in October, so that protected us, and we just closed it down Friday for about a 40% profit in about 3 weeks. It's a very nice strategy to use. It's easy to manage. You don't have to watch it every day. And then we do credit spreads to capture premium over a few weeks, and then the SPY super system, which I mentioned. These are the high probability, very quick trades we take on the SPY, the Qs, the IWM, or the futures using 5-minute chart. And this is one I cannot alert on, and I can't post in the room because it's too quick, but I do have a video on how to use it and what the criteria is, and I have a lot of people in the room using this extremely successfully. Okay. Maybe read the previous slide on guidance on indicators. Guidance on indicators, is this what you're talking about here? Man? I'm not exactly sure what you mean by guidance on indicators. All right, if you tell me what you mean, I will try to address it. All right, now just to cover the alert service quickly, the Compass Alert, the SPY Super System Alert Service, it's designed for day trades and short-term swing trades. The next slide. Let me, if you can tell me which one you want, this one or this one here. Which one you want, man? Okay. This is basically what we're identifying how we want criteria for high probability trade setups. Identify the market trend for the day, if there is one. The SPY super system indicators must align in the direction of the trade, both bullish on the current time frame and multi-time frame, right? That has to be bullish to be going long, bearish to be going short. And the daily chart should be bullish to be going long, and bearish to be going short. Those are the keys. Obviously, we've talked about relative strength and relative weakness, and we've talked about support and resistance. But those are the keys on that one. Okay, this is my equity curve. How this is done this year in the room. Pretty good. This is based on $2,000 per trade. We had a huge July, by the way, as you can see here, but a very consistent bottom left, upper right. That's the whole point of trying to be consistently profitable trader. All right, now we're going to talk about Heiken-Ashi. I'm going to spend a little bit of time on Heiken-Ashi candles. Anybody here use them all the time that's in the room right now? Use Heiken-Ashi candles? Let me know if you do. Okay, here here's a chart with candles on it. These they look like regular candlesticks. These are Heiken-Ashi candlesticks. All right, now this is British pound, Japanese yen. It doesn't really make a difference. All right, doesn't really make a difference. What this could be Tesla, this could be gold, this could be anything. But the key thing to take away from this is flat top candles like this that are Heiken-Ashi. These are bearish Heiken-Ashi candles. Anything has a flat top when under the Heiken-Ashi candles is bearish. So you get bearish candles. This is stacking Heiken-Ashi bearish candles right here. Right, so you can see the trend, and you see how easy it is to see the trend. But these are bearish. Now you notice that when you go from one candle to another, the next candle always starts in the middle of the previous candle. Right? Always starts in the middle of the previous candle, always, all the time, because of the way these things are constructed. Man, you use them, but always forget to go back to regular candles. Yeah, that can be a little tricky. I usually go to the regular candles when I want to get out of the trade. All right, so this is a bearish trend. Heiken-Ashi bearish trend. What we're looking for here, and the best use of Heiken-Ashi candles is to find a reversal what's called a Heiken-Ashi reversal from bearish to bullish. Because if you were trying to trade this, let's say you were bullish on this particular combo of the yen and the British pound, you'd be looking for Heiken-Ashi reversal. Now, what you're looking for is something to go from flat top to flat bottom. Flat bottom candles are bullish. These are bullish Heiken-Ashi candles. See, it's bearish, it's bullish. Now, this is actually a Heiken-Ashi reversal because you went from a flat top to dojis and wicks and tails to flat bottom. But I want to add a caveat here, and that is when you're looking for Heiken-Ashi reversal to get back into a new trend, you want to make sure that the candle that's creating the reversal, which is this one right here, is as big as the previous ones on the downtrend, or if the trend changes, you want this to be long. I wouldn't take this because it's not big enough. Now, you would have made money on it because you had a flat bottom, wicks and tails, and then it switches back again. Here you go back to bearish again. All right, so this is bearish Heiken-Ashi reversal. Here is the bullish Heiken-Ashi reversal that you want. Right, you see how big this candle is? This Heiken-Ashi candle, as big as the ones it was as big or bigger than the ones that created the trend downtrend. This is where you want to get in, right? So no shadow on the flat bottom Heiken-Ashi bullish, and look at how easy it is to watch this trend. Stay bullish, 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 bullish. You're out right there. That's a Heiken-Ashi reversal candle. All right, that's what you're looking for. This is a bearish Heiken-Ashi candle. This is bullish. You could be doing a bullish trend reversal or a bearish trend reversal, but that's what you're looking for. And I'm going to show you some charts of those actual confirmations, those reversal confirmations. All right, so distinctions of the Heiken-Ashi candles. Bullish Heiken-Ashi candles have flat bottoms. Bearish Heiken-Ashi candles have flat tops. Bullish Heiken-Ashi reversal are identified by flat top Heiken-Ashi candles, followed by flat bottom Heiken-Ashi candles. And bearish Heiken-Ashi candles identified by flat bottom Heiken-Ashi candles, followed by flat top Heiken-Ashi candles. Those are the reversals, Heiken-Ashi reversals. All right, and this just a little bit of information. I'm just going to zip through this thing, but the reason that they open and close in the middle of the previous candle is they combine the open close data from the previous period, whether it's a 5-minute candle or a daily candle, with the open, high, low, close data from the current period. Right, that's how they create it. Right, and Heiken-Ashi means Japanese. It means average pace. Okay. And again, here is your understanding the trends with Heiken-Ashi. This is kind of the one we just looked at. There's your bearish Heiken-Ashi candles, a lot of chop, bullish Heiken-Ashi. Now let's say this blue line was a resistance level you wanted to trade if the stock got through there, right? So here's the Heiken-Ashi coming down. Here's a Heiken-Ashi bullish candle, and here's a Heiken-Ashi reversal candle right on the level that you wanted to get through. If you wanted to get through that blue line as your support level, your resistance level, I mean, it pops through there, and then you can just stay in this as long as it stays above that level. And notice you keep getting green, flat bottom green after flat bottom green after flat bottom green. Coming up, so here's where you're going to get out. See the bearish reversal right there? That's where you dump the trade. But look at how easy it is to see the trend. See the trend, okay? All right. Again, tips. This applies to everything anyway. Make sure you know where your support and resistance levels are on the daily chart. So if you get into a trade, you're not going to run into the resistance before you make enough money to justify the trade. All right. Make sure you're aligned the trade with the current market trend. Look for relative strength and relative weakness. All the usual things that you want to look for on any type of trade setup. All right. So we talked about that. The distinction. Here's the recaps of the advantages. These are Heiken-Ashi candle advantages. It smooths out price action, reducing noise. Allows you to stay in the trend easier. You're not going to get shaken out so quickly. Makes identifying the trends much easier. Improves identification or identifying confirmation of trends or trend reversals. This is the main use to me of Heiken-Ashi reversal candles. Heiken-Ashi candles is identifying trend reversals back into the original trend. And it does help identify potential exits when the candle bodies shrink or the reversal occurs. Right, those are the advantages of them. Now I'm going to show you a couple of quick charts, and then I'm going to go to some live charts on these Heiken-Ashi candles. This was Uber back from May 1st, a couple of years ago. It doesn't really matter when it was, but this is my TC2000. This is another charting program I use, but it shows up nicely on here, so that's why I use it. So if you look at May 1st, this is May 1st in Uber. See the gap, and then another gap, and then a nice move up. All right. So this is the candlesticks using regular candlesticks, right? May 1st. Now let's look at a Heiken-Ashi candle on May 1st. You see what you get here. This was your bearish trend here, flat bottoms, flat tops. You switch to a flat bottom. This is a Heiken-Ashi reversal candle with a flat bottom. This is where you would take the trade, okay, right here on May 1st. And then you had these beautiful candles all the way up. Now notice something. What do you see about this candlesticks and these candlesticks? The gaps are gone, right? No gaps. The gaps, you don't get gaps in Heiken-Ashi candles because it's using two candles created. So this is where you would have got in. If you were trading this as a Heiken-Ashi reversal, this was your Heiken-Ashi reversal right here, you'd be in, you would have been in for this big move up right here. All right. And you can see how long you can stay in it. The bottoms stay flat, they stay flat, they stay flat, and then it flattens out. Now, the colored candles here, this is on my TC2000 chart, which I color them blue with the Bollinger Bands of expanding. Basically, that means anytime they're blue, I'm getting a compression break. Anytime they're pink, I'm getting a compression break to the downside. But that's not the critical point here. The point is, this is a Heiken-Ashi reversal candles and how you would catch it using Heiken-Ashi candles. And I'm going to show you some of those. All right, so we're going to take a look at some of the option room trades. Not yet. We're going to look at some Heiken-Ashi, live Heiken-Ashi reversals from just this past Friday. All right, so I'm going to switch over to a couple things. First, I'm going to go to this. Okay, I'm going to go to the SPY super system. All right, so here's the SPY super system. If you're in my room, this is what you'd see all day, every day. This is the charts that I have up. Okay, so this happens to be the SPY from Friday. These are Heiken-Ashi candles on the SPY from Friday. You can see here there was a Heiken-Ashi reversal right here to the downside, but you see how it had a VWAP right here. You run into the VWAP. But this is the SPY super system. We got some scanners on here. These are cascading up stocks. These would be relative strength stocks, relative weakness stocks. This is a new scanner I'm testing to find high probability swing trades. But here's what it looks like. So I'm going to look at a couple of stocks that I identified as Heiken-Ashi reversals. Now, this is SEE, all right? This is sealed here. We got to go to a daily chart because we're looking for reversals on a daily chart. All right, so here's a daily chart on SE. All right, so you see the flat bottom here on this candle from Friday. See the institutions are in it. The institutions are in the multi-time frame, current time frame. This becomes a potential long for Monday, SEE. All right, it meets the criteria that I would need to take a look at that stock on Monday morning to see how it trades. Now I'm going to show it to you on TC2000. This is what it looks like on a regular without Heiken-Ashi candles, and then this is what it looks like with Heiken-Ashi candles. See the Heiken-Ashi? This is actually called the Heiken-Ashi confirmation because it's already in an uptrend. All right, so that's what it looks like there. So that's SEE. Another one that looked pretty good from Friday to Monday is Equifax. Heiken-Ashi reversal right there. This just went from selling to buying. This is already buying. Blue and green, bullish. This is Equifax becomes a nice setup as well. Right? You can see the Heiken-Ashi reversal candle right there. GCT, got a couple more that I want to show you. GCT, whoops. Take that in. Okay, it's GCT. This is more Heiken-Ashi confirmation. It moved up, and this is basically a Heiken-Ashi continuation because this was the actual Heiken-Ashi reversal here, and this is a continuation of the trend after it had a wick and a tail here. But notice bullish and bullish. Trend is not bullish, but that's okay. In this particular case, you can overlook that on GCT. This is what I would look at on my TC2000 chart when I'm looking at technical setups on this GCT. See this nice move up. These Heiken-Ashi candles, nice move down. Typically, you notice when you get into a candle that has a flat bottom that's blue that it continues, and a flat top that's red, that pink that it continues. But here we are with this one right now. We had another flat bottom on Friday. Nice setup on that. is the regular chart on it right here. Moved up, pulled back. Technically, it's set up beautifully for a long up to about 3307. All right, and I have in the room, I show these TC2000 charts with my support resistance levels all the time during the day. Right, and I think RDNT will be the last one we'll look at for a long. Here's RDNT, you can see it there, Heiken-Ashi reversal. It's actually a Heiken-Ashi continuation. Look at the institutions buying the heck out of this RDNT. And so is it a good one? Sure it is. And one of the things you always want to look at on a daily chart is you want to look at the context of the trade itself. How is this thing trading day after day after day? Look at this thing grinding up. This white line is my 8 exponential moving average. This 15, this orange one is my 15 EMA. This is what I use to tell me if the stock is in a trend. Look at how beautifully that is. One of the trades we took recently was GLW, Corning. We get into it as it pulled back. See how it pulled back to the 15 and bounced. This is where we get into it right here. Beautiful trade in Corning. Really a beautiful trade in Corning. If you look at Heiken-Ashi, whoops, you're going to see the Heiken-Ashi reversal occurred right here, and then another one right here as it moved up. All right, I'll just show you a couple of shorts just so you can see. I just kind of want you to grasp how I use these to find out swing trades. This is GGAL. All right, so this has been bearish right from here. See this breaking down? We had buying, and then we had selling. Flat bottom, flat top, flat top, flat top. Now we're getting wicks and tails, and we go to flat top again. This is a continuation to the downside on GGAL. Be a beautiful setup for Monday for a short. All right, it looks really, really good for short, and it's been short for a while. INCY. Show you INCY. Is INCY. Big Heiken-Ashi reversal to the downside. Notice the chop here. Buying, now we went to buying, now we went to selling on both the Heiken-Ashi, both the multi-time frame and current time frame momentum. As you get a flat top candlestick on INCY, that's a Heiken-Ashi reversal candle to the downside. Okay, and goes another one. So these are all good setups for Monday. Go. Lulu is one I actually just closed on Friday I was in this thing for a short with a debit spread, a weekly debit spread. Closed it out for a 50% profit on Friday. Lulu is nice short as well. And Intuit is another one I just spotted last night on Intuit. Nice breakdown in Intuit right here. Looks like a very good short. So these are some decent trades. I would make a note of Intuit for a potential short on Monday morning. This is a really beautiful downtrend in it. You can see the Heiken-Ashi reversals here, and then compressed, then another Heiken-Ashi reversal, compressed, and here we are breaking down again. I think that's a good setup for a short on Intuit. All right, so yeah, that one you might want to jot down. Okay, all right, so those are Heiken-Ashi candles. How to use them? You can use them on 5-minute charts as well. If we switch to 5-minute chart here, as I showed you, this is Intuit on a 5-minute chart. We'll go back. Can we find any trades in it on yesterday? I probably can. Yeah, right here. See this one went from buying to selling right here on that candle. As it broke down, there's the 15 EMA. That's a perfect short right there. And you stay in it as long as the stock stayed below the 15 EMA. All right, as long as it stayed below the 15 EMA, you stay in the trade, you stay in the trade, you stay in the trade, and here's where you would get out. See, it went back to buying again at about 120, but you'd have been in this trade for about an hour and a half off of the Heiken-Ashi candles and also the breakdowns of the institutions going to selling here, and they continue to sell. You're just riding it down. All right, that worked out pretty nicely. SPY was pretty much bullish yesterday, most of the day. I can go back and look at some of it. Here it was in the morning, and you can see these. We're looking for Heiken-Ashi candles, and we're looking for some buying here. But there it is. We get above the VWAP. Here's where the trade would take place. See how it's compressing here, and its current time frame momentum is green. Institutions are buying. This is where you would take the trade. Right there, as it pops above the VWAP and the 15, and you get a pop out of the box symbol at 10, whatever time that happens to be, 10:45, and then it goes up And then here on this candle, you would get out, right? Because you're not going to be in this trade long, but you got 3 nice candles on it, right? So that's how you would trade intraday trades. And there was some good. Was another beautiful one here. You're just following your indicators. All right. Let me zip back here. Okay, so those are some Heiken-Ashi candles. Anybody have any questions on those? Those will help you trade. I'll tell you that now. If you switch over to those, it's very simple to do. And by the way, on the SPY Super System, if you want to change, all you do is click on style here, and you go to a type of chart, and you can go from regular candlesticks to Heiken-Ashi candles back and forth. Okay, there's regular candlesticks there. And by the way, on these, you can just click on these, and they'll bring up the stock for you. Like if I was looking for stocks to swing, these are good ones down here. I look at GVDC. You can see how nice that looks. KTOS looks good. IBIT looks good. These are mostly crypto stocks. Caterpillar looks pretty good. So that's you can just click on that and get a fairly good picture of the chart itself. Okay. All right, so I'm going to show you some of the results we've had trading the SPY Super System in the room and on the alert service for a while here. And there's a couple things I'm going to focus on. First thing, this is in 2023 using $2,000 per trade. We made about 60,000 in the room in the alert service, 60,000. In 2024, same 2,000 per trade, about 55,000. Pretty good. Again, the profitability is a lot of it's depending upon the market that you're in. If you're in the swing type, if you're in a trending market, if the market is trending up, you can make more money than you can in choppy markets, obviously, because you can stay in the trade longer. You can also take larger positions. But anyway, still 55,000 was pretty good. I want to kind of point out one thing. If you remember, if you were trading back in April when they put the tariffs on, and then they took the tariffs off 2 days later, which they took off because the bond prices spiked up so much. That's actually why they took those tariffs off. You can't have the 20-year bond going up that high. It makes it very difficult for the U.S. to basically redo the debt. They have to obviously buy back the bonds they got out there. We only had these 4 trades on during that time period. The SPY was down over 10% in 2 days. We had these 4 stocks on. We were short all of them. We were on AVGO, we're in Nike, Sarepta, and NNE. Right, AVGO we get in for $75 a contract, get out for $1.04. Nice 39% profit, made $7.54. Nike we get in for $2.85, closed by $9. This was massive. This was our biggest trade of the year. When the tariffs went on, Nike, of course, makes all of its products in Vietnam. They were talking about a 39% tariff in Vietnam. Nike tanked. We were in it, fortunately, and I'll show you the chart. It made 216% on that profit, on that trade. So $4,300 for $2,000 invested in that trade. Okay, Sarepta, we also got in for $4.50, out for $8, and for NNE, in for $1.80, out for $2.25, 25% profit. 25, 35, 40, that's the normal profits that we see. We don't usually see a lot of 200% profits. Just the current few months, last few months, this is June. Again, I was on vacation for 2 weeks in June, so we didn't do a lot of trades. We were 10-1, 91% win rate, made 37.90 in the room. July, this was a really good month for us. We did quite a few trades. And by the way, you can see we take losses. I want to make sure everybody knows that nothing's 100%, but we had a nice July. These are the trades we took, but notice the percentage gains. This is the normal percentage gains you're going to see in most of our trades. 40, 20, 30, 50, 20, down to 10, 15, 19. This is the kind of trade you see. We did have 166. That's that Sarepta trade. This is a different Sarepta trade, but same kind of gain. We don't usually get big ones like that. And if you're looking at a service that tells you that you can get 100, 2, 3, 4, 500% on the trades that you take consistently, you can't, regardless of what they say. So this is just basically grind it out and stacking lots of profits. Now July was 30 wins and 3 losses, a 91% win rate, and 16,829 profit in the room. A very big month for us. That's not common. That's a very good month for us in July. August, we had 20 wins, 4 losses, 84% win rate, 59.60 profit. And here's September so far to date. These are all the trades we've taken in September. We're 9-0 in all the trades we executed or entered in September and got out of in September. We still have a couple trades on. 2,000 invested in each trade has produced 4,600, a little over 4,600 in profits this month. Pretty good for half a month. Let me sip of water here. All right, so this has been a good month. You see the percentages, nothing huge. 25, 33, 13, 33. This was a weekly ATM we just closed in Alcoa that I just told you about. So a good month so far. We're in 2 other trades right now. We'll probably end up with about 20 trades this month or so, 22 trades. So just to go back to 2024 to run through these things. Now, I've kind of already covered what I really wanted to cover on this, which was what you normally can expect for percentage gains. This was January of 2024. You can see the gains. Again, exactly what I'm talking about. 39, 21, 32, 37. Big one at Boeing 96, but typically 23, 25, 26. This adds up. These kind of percentage gains adds up. 7,500 in profit in January, February 11,745 in profits, 92% win rate, which is very high. It's very hard. It's very hard to maintain a win rate of over 85%. Very, very hard. Right. So that was February. This was May. Here's a bunch of time spreads I just wanted to show that we take on earnings over earnings. We had some nice ones that month. A lot of trades in May because there was a lot of earnings in May. Just October will be the next big month for earnings for us. But again, see 38, 40. Typically the time spreads usually make between about 25 and 40%. We had a big one here that made 50. We had one made 71. We had a 100% loser, which is very rare with time spreads, by the way. Generally speaking, you don't get 100% losers because the way they're structured, usually there's still some premium in it. But if you get like this was a news event, if you get a huge spike in the stock, way up or way down, like 30, 40% move, then it's very difficult to recover from that. Right, so there was May 15 and 2, 88% win rate. That was the alerted trades, 88% win rate, 81% in the room. But room still made 57, alerts made 49. As June last year, 86%, 92 in the alerted trades. See the percentages. These are what you're going to see. Typically, that's what you're going to expect, time after time after time. Right? July 22 and 4, 85. August 17 and 2, 4,300. This is my only losing month in 3 years with this service. This was September of last year. We had 8 wins and 5 losses, a 62% win rate, which is, to me, it's embarrassment. But sometimes that happens. The market didn't give us much cooperation. We had a couple of big losers in there, but we only lost $1,786 in the room and only $295 on the alert services because we missed out on the big 100% loss in the alert services because I didn't post it out there. I don't send every trade on alerts. There's reasons I don't. I won't go into every reason, but obviously if the trade's going to be half an hour, I'm not going to post it. And if I take it at 3:45, I'm not going to put it on alert either because it just doesn't have time to get to the alert members and have them get it in there. But anyway, this was 1786 loss in September, and then in October, look at the bounce back: 17 and 3, $7,400 profit, and the alert 6,000 profit. November, same thing. So I won't go through every one of these. Again, we had profitable month, profitable month, profitable month. This was the first few months of this year. 84%, 89%, 83%, 85%. Nice profits all the way through. Okay, so those are the results. I'm going to show you one other thing about the SPY super system in just a minute, but I do want to just kind of cover the alerts. People ask me what do the alerts look like. On the Nike trade, this is what you get. You get an alert that's going to have the date. It's going to have the stock symbol, Nike, buy the April 11th 67 puts. All right, this is your expiration date and your strike price. April 11th expiration date, strike price 67, puts, so we're going short, and you pay $285 for it. All right, and then that'll be the whole first alert. Then when we decide we want to put a sell order in, You'll get the same alert, but it'll say sell order on it for $9. And then when the trade is closed, you'll get one that say they were sold for $9 on April 3rd. Right? That's how that work service works. Derek, are these all day trades? No, they're not. A lot of these are swing trades. If you go back and look at some of these things, a lot of them are swing trades. There are day trades, but a lot of them are swing trades. And one thing to keep in mind, since I use the daily chart for any trade that I take outside of a SPY super system trade, when I'm just trading off the 5-minute candlesticks, every single bullish trade is going to have a bullish daily chart. Every single bearish trade is going to have a bearish daily chart, which means if you can't take trades, day trades, in other words, if you're under PDT or patent day trader rules where you don't have 25,000 in your account, and you can only take three day trades in a 5-day rolling period. So if you've already exceeded that, then you would have to wait, hold the trade overnight. If I take it off during the day, you can hold it overnight because it was set up using the daily chart, which means if it's bullish, it's still going to be bullish. So there's not a problem with that. But I do have quite a few day trades. The SPY super system trades that I'll talk about, Derek, are the ones that are really day trades. So again, how do we achieve these stunning results? I think we know. We identify when the institutions are in the trade, when the market internals are heavily bullish or bearish. That's how I do it. You know, we only take trades when both of these are in our favor. I will take trades when the institutions are in, if the market internals are neutral, right? But I won't trade them if the market internals are against me. So we're only taking trades again when the institutions are in there, and we're looking for the very highest probability trade setups using technical analysis. And how is it done? I talked about this again. We do triple screen assessment or multi-time frame assessment on momentum, trend, and money flow. But the momentum is the most key thing here. Derek, do I scan on daily time frame or something like a 4-hour chart? I do. This is the way I scan on the here on the SPY Super System software, right? These scans here can be set up for daily. That's a daily scan. That's a cascading up on the daily scan. I can also switch that to cascading up on a 5-minute chart. So so I can use it for 5 minutes a daily on cascading up, 5 minutes on daily on cascading down. And this is a daily chart. Most of my scans that I do when I'm looking for chart trades, I scan on the daily chart, and then then if the daily chart's bullish, and then I'll go down to the 5-minute chart. But I only use the 5-minute in the daily. I don't use 4-hour. You can, but I don't. Okay. Back we go. All right, so we've already seen this. This is this obviously is the SPY Super System that we looked at earlier. I'm going to show you a few other things here. Now, if you buy the SPY Super System, which we're going to offer the SPY Super System to you at the end, where you can actually buy the software and put it on Thinkorswim and trade anywhere you want, but you can have it on Thinkorswim. You'll get one that looks like this, template that looks like this. You'll also get a template that looks like this. This is for folks who want to just trade intraday, quick intraday 5-minute charts. In other words, they're not worried about the SPY Super System current time, multi-time frame momentum, just the current time frame. You get a template that looks like this, right? Just current time frame momentum, VWAP, momentum indicator, pop out of the box symbols into 15 EMA. That's all you need to trade intraday trades. Right? This was a trade we took on the SPY Super System using 5-minute candles. This is a Heiken-Ashi reversal. We took it right here. You see the compression and the Heiken-Ashi reversal right there. This is where we took this trade. As long as it stays below the 15, you stay in the trade. See how nicely this thing worked? I don't even know how far it went, but this shows you. And you can see when we took this trade, see what happened? The current time for momentum went from buying to selling. Right there. Buying to selling right there. We take it, it's a Heiken-Ashi reversal, we write it down. It's really not that complicated once you understand these indicators and what they're telling you. They're telling you that the institutions went from buying to selling this thing on the triple Qs. Now, I want to just cover real quickly the SPY Super System trade. Now, for anybody who's interested in trading off of 5-minute candlesticks, these are, some people call it scalping. This isn't really scalping, but they're quick trades. You may be only in the trade for anywhere from 1 to 6 5-minute candlesticks. Right, so you don't care about the daily chart, you just care about the 5-minute candles, 5-minute candlesticks. So this is what I've been able to do with the SPY Super System methodology using just 5-minute candlesticks. Now, I want you to understand something. These results are my results. All right, these don't reflect the results in the room because I don't know what they are because I can't post them. I can tell you when the trade is setting up and I'm getting into it, but I can't post it. It's too quick, and I can't alert. It's too quick. But these are the results I've had. But a lot of people like to use these because you can get a lot of trades. In August, we had last August 56, 6, and 2. We had an awful lot of SPY Super System trades. Depends if you get a nice trending market. But these are the results I've had. These are the profits I've had. And now remember, with these SPY Super System methodology trades, offered just the 5-minute candlesticks, you're only going to have one trade on at a time, and they're going to be very short duration, and you need to watch them. All right, it's not something you can put on and leave. Again, November results. These are really good results for the SPY Super System trades. Now, this is October through December, but one thing I want to point out here is the SPY Super System trades that we just talking about here. Right, this is what October was for me. All right, this is my trades. All right, 89% win rate, $4,800 profit. And this was the room, 17 and 3, $7,400 profits. These are not included in each other. This is a separate trading methodology with a separate P&L. This is a separate trading methodology with a P&L. If you were in the room, you would have got results like this. If you were trading SPY Super System, I don't know what you would have got because I can't post them. All I can tell you is the ones that I found. I've got a lot of people in the room that trade more than I do on this because that's what they like to do. But for swing traders and folks who are fairly new learning to trade, this is not what you want to do. You want to stick with the room trades. All right, here's November, good. This is December, very good. And here's the fourth quarter of last year. Again, 24,000 in the super system, 17,000 in the room trades. Right, very good results. All right, so I'm going to talk about a couple of SPY Super System trades. I want to show you the indicators and how they work, so you can see it happen here. This is an old template because it doesn't have the momentum at the indicator at the bottom, the Laguerre indicator. But what I'm showing you here is a SPY Super System trade on the SPY off a 5-minute chart and what you're interested in. This is all you're interested in as far as the indicator is concerned. The current time frame momentum in the VWAP, in the 15 EMA. That's it. All right. So here's where we took the trade. The institutions were selling. They went to buying right here on the 5-minute chart. Right. Current time frame went to blue. There was a pop out of the box above the VWAP. This is where you take the trade. As it breaks above here, institutions buying. You don't care about any of these other ones. Institutions buying and up it goes. So this was the trade we took. That was $220 of profit per contract. That's a lot. You usually don't get this kind of a long enough run to get that. Most of your trades in these things are going to run somewhere between $80 a contract to maybe $150 a contract profit before it switches back again. All right, so there it is for the SPY Super System on the SPY. All right, and here's another trade right here. All right, get in here, get out here. See how quick that trade was? In and out as the institutions were selling this thing and it broke down below the 15. All right, this is the one we just looked at a little while ago, except we've just got this template up. All right, see how this template was yellow here? Went yellow. It did switch to blue right here, so you have to be cautious, but we're trying to stay in it below the 15, which is stay below the 15 and get out right there. Again, and here, this is the SPY Super System trades with the new template layout with just the current time frame momentum on it. Okay, pretty nice trades. This was a nice trade, another SPY trade off the 5-minute chart right here. You notice when you look at the chart, you can see the institutions are all over this stuff. They're buying, 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 buying. Here's another one here. Okay, it went yellow, it went blue. We took it here. We didn't make much money on it for a good long time. The IWM was just kind of moving sideways. Russell 2000 doesn't really move as fast, but we stayed in it for quite a long time. And then we get it way up here. This is a long time to be in a SPY Super System trade. Long time. But it did go blue and then stayed green the whole way over here to yellow again. Here's a SPY super system trade here. Nice breakdown right there. As it breaks below the VWAP, everything's red. See the compression? You want to wait for the compression break. That's when you take it. Right here, SPY super system trade to the upside. It went to blue. We're waiting for compression. We're waiting for a compression break above the VWAP. There's the compression break that pop out of the box candle. You take it right there, and that was on 823, $150 profit per contract. Another SPY trade here. Now the reason I put this one up, I want you to see something. All right, so here's your candles. Here's your indicators. Obviously, the indicator on the 5-minute chart. This is bullish, so this would be bullish. But notice where it is. It's right up to the VWAP and stopped. And then the next candle did a doji on the VWAP. This is where you would take the trade, right here. Okay, it's blue, which is fine, but now it's above the VWAP. So your entry is above resistance. As it breaks through resistance, you take it out, and then you get out right here. Okay, this is a trade I took on the SPY that I went short. See how it breaks below the VWAP and it's pop out of the box symbol, breaking below the VWAP. See it's red, and I take it down, and then I get out right here. And then it comes back up again, and notice right here, it turns blue. Went from selling to buying right here. And it's above the VWAP and above the 15 with a pop. I take it long right here. And it goes right up to the pivot point, which I get out just before the pivot point. So made money short, made money long on that trade. All right, this is another one. So you can see I didn't put entries, extras on here. I want you to see the current time frame momentum right here. Where would you go short? Something like here, you got green. Now you got selling right here. This is the perfect place to go short right there. As it breaks down below the 15, you can stay in it because it stayed below the 15 the whole way. All right, so those are all SPY super system trades. Now I'm going to show you some trades that we take in the room and on the alert service. This is one we just did recently. This was off a 5-minute chart, but it was a swing trade. This is a line, ALGN. This was a trade we took just recently, 51% profit in an hour on this trade. Now you can see the compression, you see the current time frame momentum right here. Now, since this could have been a swing trade, the daily chart also had to line up, by the way, at this time. We had to have multi-time frame momentum and current time frame momentum lined up bearish on the daily chart, which they did. But this is a 5-minute chart. This is where you would take it. As it breaks below the VWAP, with a pop out of the box, and you take it right there. Notice it went buying to selling right there on that candlestick. And you stay in it and stay in it and stay in it. And again, 51% in an hour. We get out as it flattened out down here. And then it went back to blue, you can see. But all this time, the institutions were selling this. It stayed below the 15. Nice trade. This is a daily trade. This was a trade off the daily chart, URGN, that we just recently took in July. 48% profit. Here's the daily chart. So what do we need? We need the current time frame and the multi-time frame both be bullish, which they were. Blue is bullish, the screen is bullish, right? So they were lined up right here. We wait for a compression, it pops here, we take it right here, and we ride this thing up. It'll work way too well for this one. We get out 48% profit right here, right? NVIDIA, this was off a daily chart as well. We've talked about this one already. This was the PBO, the pullback opportunity with a pop right here as it broke up. Everything was, institutions were buying it, jumped into the trade, and made a nice profit on it, 32%. SMR, I've already showed you that one as well earlier. Here's Nike. Here's the big one. We had 216% profit. This is where we took the trade. Look at the institutions selling this thing. They're selling the heck out of this thing right now, right then. So we took it here, and actually we had profits that day, but we stayed in the trade. It stayed in the trade. It went sideways, but it was staying red. Institutions selling on the multi-time frame and current time frame, and here's that big drop based on the tariffs that went in, and we grabbed profits right here. We closed it that morning as soon as it gapped down like that. One of the things rules I go by that I say in the room all the time is gaps are gifts. If you're on a long trade and it gaps up, take the profits. If it gaps down, takes profits. Because after a gap, a gap and go, which would be gap and keep going in that same direction, is the least likely occurrence of that trade. So you're better off to take profits right on the open on a gap. Not only that, a gap creates volatility in the premiums in the options, which creates the price goes higher. So you're also taking advantage of that. All right, so that was Nike. This was Sarepta. Same thing, we took this one, made a nice profit on Sarepta. See them selling? HIMS was a nice long trade. I get in here, Get out up here, 25% profit. Actually did leave a runner on for 269%, but I didn't post that anywhere. So, but this is where we took the trade. It was all green. Palantir, nice trade here. Notice it's going buying, goes to selling, then goes back to buying, breaks out of compression, goes green, take it right here, out right here. 31% profit in 2 days. And this was a Lulu overnight trade. Lulu gapped down on earnings. We didn't take it here. We waited for it to compress. Notice it went from buying on the daily chart, on the daily, on the multi-time frame momentum. Then it went to selling on the multi-time frame momentum. I can see the institutions coming back in, took a short here, in at night for $1.92, out in the morning for $300 a contract. So that was a pretty nice profit, 56% profit overnight on Lulu. Amazon was a nice one. So I won't keep going over these. I think you can see how these work. I mean, you can see the compression here in ENPH. Take a trade right here as it breaks down below the 50, below the 15. Take it right here, 20% an hour. Is Verizon 50% an hour on this trade? Compress, breaks down here, drops down pretty hard. 50% an hour on Verizon. This was an intraday trade, so we were only using the current time frame momentum right there. Okay, Tesla was a nice one. That was an overnight swing trade. Okay, that covered the charts. And if there's any questions, I'd be happy to answer any right now. I'm going to go ahead and just kind of wrap it up, show you the offers, etc. Understand those great results we've had is because of the SPY super system telling us when institutions are in the trades and when they're not. All right, so this is the offer that they've got. This is a pretty special offer. One of the things you can do is take a 2-week trial, and then it rolls over to $396 a quarter after 2 weeks. That'll give you the trade alerts, it'll give you my trading room, and it'll give you my videos. I've got about 31 training videos on all the different strategies we use, right? So that's one thing. Now after the quarterly, it switches over. After the 2-week trial, it switches over to the quarterly $396 a quarter. If you want to get better pricing, you can do the one-time payment. This is the one-time payment, a lifetime. This will get you lifetime for the text alert services, right? In the Discord room and my training for $24.96 for just the alerts forever. And then you can get also for one-time payment. This is a spectacularly good deal. You get my trading room, you get the software, the SPY Super System software we're just talking about. You get that, and you get it forever. You get my trading room forever. You get the SPY Super System software with all the updates that come out to it for free. All right, for free. And also you get the master class, which is all the training the videos that I've got. They're on all the strategies. Weekly ATMs, strangles, straddles, everything, every strategy that we use. And then you also get access to the private Discord chat access that we got. That's $24.96 for the software and for my room for lifetime. This is to me, this is a no-brainer. But I mean, everybody is different. But if you're serious about trading, you can get the software, whether you're in my room or not in my room a year from now. You can still have the software to identify institutions when they're in the trades and when they're not. So these are your offers. Now, if you'd like to get a price for a different type of setup, maybe 1 year or something like that, you just call Rory, 786-732-4656, and he'll respond to you. And if you have questions about that you'd like, just put your number and name in the chat box, and he'll get back to you. Is this used in Ninja or TC2000 software? This SPY Super System is used on Thinkorswim and Ninja. TC2000 is completely separate. That's a charting program that I use, and I do use some scans on there. But the SPY Super System runs, for me, it runs on Thinkorswim. I don't trade on Thinkorswim. You don't have to trade on there. But it also runs in Ninja, but it looks different on Ninja. It's called the Money Flow Tracker over there. But it tracks the same type of information. Most people that trade on Ninja are trading futures. You can trade futures in Thinkorswim or anywhere, but all you really need is the SPY Super System running on Thinkorswim to identify whether you should take a trade or not. Okay. Can I put the phone number again? Sure. Right. 786-732-4656. All right. That's Rory. Let's put that in there. He'll get back to you. Where do I mainly trade? You mean what platform do I trade on, Chris? I trade on Tradier Pro. Tradier Pro. The reason I trade on Tradier Pro is because the commissions are so. Well, I don't pay any commissions. I pay a flat fee every month, $20 a month, and I don't pay anything, any commissions on options or stock. Now you do have to pay ACN fees. Everybody has to pay those, but those are pennies. But I don't have any commissions, and I trade thousands of option contracts. I mean, probably tens of thousands of option contracts. So it's a big deal to me if somebody was charging me 15 cents a contract for options. So Tradier Pro. Carlos, you get the number okay? 786-732-4656. All right. So that pretty much wraps it up. Again, this one-time payment right here for lifetime is extraordinary. This isn't going to hang around much longer. But again, if you want to do something of a different time frame, just talk to Rory, 786-732-4656, and he'll work with you on whatever you want to, what appeals to you. But this special is pretty special. So if you can, I would take advantage of it. Get it, Carlos? Okay, great. Thanks. All right, thank you very much, everybody. I appreciate you were taking a Saturday afternoon. As I know, it was a long day with Traders Corner. They have some excellent traders and presenters out there. I'm not really a professional presenter. I'm a professional trader, and I'm not really a marketer. So I'm just trying to. I have a methodology I think that is 85 to 90% win rate per month. I think the results speak for themselves. So look forward to seeing you in the room come next week. Everybody have a great weekend. Enjoy your Saturday and Sunday. And again, we'll see everybody again on Monday. Have a great weekend. Trade well.
Thank you, David. That was a perfect way to wrap up the day. Real performance backed by rules, results, and experience. His promotional link is now available in the chat, so grab it while it's there. That wraps up another incredible Traders Corner Online Investor Summit. Thank you for being here. A huge thanks to all the excellent speakers for delivering such high quality, actionable content, and a thank you to the audience for choosing to invest in themselves this weekend through this informative trading summit. Make sure to check out the chat one last time to grab any links or offers you may have missed. We hope you walk away from today's event with new ideas, clearer direction, and the motivation to finish this year strong. This is Anthony Chapman from Traders Corner signing off. Thank you, everyone, and I hope you make some money next week. And don't forget the Fed Chair, Jay Powell, speaks on Wednesday. Have a good day.